Hi guys, welcome to our marathon video for September 24 CA Inter Advanced Accounts. Totally 22 hours. The regular class of Advanced Accounts I take is for 175 hours, condensed into 22 hours for you guys. So isn't this the same marathon? Predominantly yes, but we have little upgrades over here. That is what I am going to give you a small 2 minutes intro and straight away into the video. We have three parts. Part 1, Part 2 and newly added now is Part 3. This is the new part, that's why we are doing the separate introduction for this. Part 1 and Part 2 will cover our entire content for about 20 hours where you will get full accounting standards, 100% coverage of all the standards in the marathon. So you have two parts where everything is covered, roughly about 20 hours. Part 3 is the new addition. Sir, what is new in Part 3? We have added September 24's RTP of Advanced Accounts, which is completely new. And last time a lot of students said, sir, we want consolidation also support from you. So I am also giving you consolidation support. So what you will see is, for these two things in Part 3 addition, RTP is a separate video. Part 3 you will find that, and those who want to learn consolidation from us in detail, AS 21, 23 and 27, we have about 10 hours of content specifically given for you guys. That also link is in the description. Detailed concept is available over there. So to summarize, you have a 20 hours plus 2 hours plus 10 hours in this content. In 20 hours, all accounting standards are fully revised. In this 2 hours part, you have RTP September 24, which I very much ask you to watch because there are a lot of new questions here. And lastly, 10 hours bonus for you. If you want consolidation 14 marks in depth, you can watch this and learn. What is not covered in detail is only two things then, because we have covered buyback, everything along with AS including buyback. Branch accounts and amalgamation alone, we have just given introduction, 10 minutes discussion about branch, 20 minutes discussion about amalgamation, intro alone, that we have not touched in depth. Rest everything is fully covered. Okay. So this is the introduction for our marathon. You can go ahead and start watching the video. All the details are available in the links in the description. So read the description properly. Enjoy the marathon guys. Last time the feedback from students I got, those who watched the marathon, told, sir, I did not study properly in regular class, but this 20-25 hours of marathon I watched fully, and that itself was enough for me for exam to score in AS, etc. So that much assurance I can give you. Go enjoy the marathon and let me know in the comments what all you need more. We will keep adding them on. Also ensure you check the presentation videos we have done for accounts, how to present your paper better. So these are the additions this time. Thank you so much guys. All the best for your exams. Okay. Hi guys, welcome to our CA Inter Accounts Marathon for May 2024 exam and onwards. What are we going to do in this 20 hours over the next 4 days? We are going to try and revise full advanced accounts, all concepts of all standards, including topics like consolidation, amalgamation, internal reconstruction, buyback, maximum possible. So concepts I will try to cover 100%, and sums, wherever a standard requires me to solve sums, I will be covering those sums also, maybe one sum per standard, we will go through that. Okay. So the materials for this is going to be simple. Everybody will have this soft copy or hard copy, whichever is there, it's given to you guys in PDF format. You will find a material with all accounting standards, theory notes, so like this, you will be having this. It's available in the group, soft copy is also sent to you. You will also be getting some of you have the hard copy, whichever works for you, that is one. Then for solutions part alone, I will be, one second, yeah, for solutions part, I will be using, basically this is nothing but our study mat, just represented for every topic, question and answer wise. Are you following? So I will be using our study map sums only. This is with regarding what we will be doing in class. So these are your materials, you will get it. Okay. Fine. That is what I'll be using for our marathon materials. What I expect from you guys, we have 3 set of students over here. Some of you are watching online, live or live streaming, whatever mode you're watching. Some of you who may be watching later recording, and our majority of you here who are watching offline. I want all of you to be extremely interactive in the class. You are going to be loud when I ask you to repeat. Are you understanding, guys?
Yes, sir.
So recording students, I hope you are able to hear that. Yes. Can you repeat again, guys? Are you understanding?
Yes, sir.
I didn't teach anything so far, but you just said yes. Like that you have to keep repeating yes, yes. You have to keep being loud, guys. Recording students also repeat in your house. Even though you are watching alone, you have to keep repeating in the house. We will repeat a lot of things. Keep repeating in your house. I'll keep saying this again and again. Okay. So that is one for all of you. You have to keep participating in the class as if you are in the offline class. Now coming to the schedule. What am I going to do over the next 4 days or 20 hours? Which standard I am going to start? Which I will take next? Even I don't know. I will take based on the flow of how you interact with me. Many of them ask me, sir, what standard on first day, second day, third day? I don't know, guys. Once recording gets over, I can put tags. Okay, video is this, video is that. But today we will go in random order, but in a logical sequence. I will not start off with AS 15. Come on, get out of the class, guys. AS 15 we will take first, so you don't understand anything. We will start with something easy for you to get hang of the pace of this class, and then we will proceed. Let me not waste any more time. Let me straight away get into the topic. Okay. So I have the habit, whether it's marathon, regular, crash, I always start off with my favorite topic, AS4. We will hardly take 20 minutes for this topic. Do 1-2 questions. AS4 is something I always start, whichever batch in the last 5 years, regular, crash, online, we start with this, and then I go to the other topics. If you have already watched the class, or if you have yet to watch, whichever class you are watching, this marathon will be helpful. We are going to follow only 100% study mat, so concepts will not change. Only the way it is being presented to you may change. Okay. Now we'll start off, guys. So I will be fast. Wherever you feel I'm fast, let me know, but I can't reduce the speed, guys. This is what a marathon. So 175 hours of regular advanced accounts, I'm going to cut short for 20 hours. So I have to be fast, guys. Doubts and all you ask me in the break. After the class I will be here. Any specific important doubt, put your hand up. I will ask over here and I will repeat for everybody. Let's start off. What is AS4 talking about, guys? Contingencies and events occurring after balance sheet date. So if this is my balance sheet date, after my balance sheet date 31st March, will balance sheet date be only 31st March? It can be any date. I will not focus on concepts here, guys, only provisions and all. So I mean the logic of concepts, why it is like that, I don't do it in this class. We will only focus on the pure concepts, like what is there for exam oriented. So balance sheet date can be any date. After balance sheet date till the AGM, we have multiple cutoff points. We all know that we can't prepare P&L balance sheet immediately. Incidentally, today is 1st April. Yesterday was the year ending 31st March. Do you think by today the financials will be ready? No, it takes time. If anybody using banking transaction, today GPay is not working for me in 2-3 accounts. 31st March and 1st Jan, heavy transactions will be there. So everybody will be closing accounts. So after this, we have 2 cutoff points, guys, after the year ending. First is when the books of accounts are approved, prepared by the management. Which management are we talking about loudly, guys? Board of Directors. The standard does not use the word Board of Directors. It uses the word approving authority or competent authority, the authority which approves the financial statement. After this, we come to the picture. In the second period, we do the audit and we give the audit report. We give the audit report, your auditing paper, and then the AGM is conducted. From the audit report to AGM, we need a time gap. Section 101 notice, you need the 21 days clear days. That's why there is a time gap where AGM is held. So after the financial year ends, by the time the shareholders get the financial statements in the AGM for them to approve it, there is almost a huge gap. Let's say this approval is happening on 31st of May. Audit report is finalized on 31st of July. Let's say AGM is happening on 31st of August. There is a solid time period. So my question is, after this, whatever events are happening, should I make changes to my balance sheet? Okay, first, after audit is completed, in this time gap, I am talking about the month of August, correct? In this time gap, if anything happens, can I make the change? No, audit itself over. Already notice is sent to shareholders. It's in the post route now. How can I change now? So this part is out of our scope of AS4. How to deal with this? In auditing paper you will see SA 560, subsequent events, correct? We will deal with it over there, but not part of our scope. Now the next scope. Sir, what about this period from the time board of directors approve till audit report, the period where the auditor is going to do audit? Here can I change my trial balance and data? You might say yes, but if I keep changing, you are going to irritate the auditor. It's not good to irritate the auditor. Then he will irritate you, means you can't take it. So in this period, you need to give the final books to auditor for him to prepare his audit report. For example, I am saying debtors is 20 lakhs. He did the full audit procedure, correct? External confirmation, this, that. Then you are coming and saying, sorry, debtors is 22 lakhs. He can't redo the whole thing, correct? So whatever happens here also, I can't change in my books of accounts. This is also not in my scope, only auditing paper deals with it, we don't have to worry. So what is in our scope in AS4? What is AS4, guys? Contingencies and events occurring after balance sheet date. It is from the date of balance sheet till the date on which financial statements are approved by the competent authority. It is only what happens here till the management approves the FS. If it's company means board of directors, partnership means sole proprietor, partnership means partners, sole proprietor means sole proprietor, partnership means what, guys? Partners. Whichever, if it's a trust means the trustees who are there. Are you following, guys? So whoever is approving, till this period what is happening only, we classify into two. What are the two, guys? Events get classified into adjusting event and. So the first checkpoint in exam you have to do is check if it's an adjusting or check if it's a non-adjusting event. No, wrong. The first thing you have to check is if it's within your scope of AS4 from balance sheet till approval of board of directors or competent authority. Then you classify into adjusting and non-adjusting event means they are completely new events. You don't have to do anything for that. Adjusting event means you have to make the necessary adjustments in the balance sheet's assets or liabilities. How do we classify? Yes, we have definition for that. But if I go to the definition, if I go to AS4, yeah, in AS4, one second. I'll figure this out in break, but yeah. In AS4, 11th, this mouse is little bit challenging for me. Yeah. So AS4 we are classified into two events, guys. What are the two events, sir? Adjusting and non-adjusting. These events can be favorable, unfavorable. Adjusting events are those events which give an additional evidence of a condition or situation of assets and liabilities on balance sheet date. Non-adjusting events are new events. Sir, I don't want to memorize the definition, sir. What is the shortcut to remember? Simple. What you have to do, what you have to apply in your mind is, you have to do a time travel, meaning whatever happened here, you need to go back to 31st of March. Whatever happened here, I am shading in this red, in our scope, go back to 31st March and visualize as if you knew about it on 31st March, what you will do. I'll give you a classic example. What is the entry for sales, sir? Debtors to sales. I sold goods of 300 to Vijay Mallya on 30, let's say during the year. As of 31st March, he is my receivable. He has to pay me. Normally, I will create provision, let's say 5%. That which I create for whole debtors as it is. Now on 15th April, Vijay Mallya left to UK. News came. Now will he pay me? No. Bank itself is not paying. How I will get the money? So I will not get the money on 15th April. Now I will create a provision for 50% or 100% or even write as bad debts depending upon the doubt I have, correct? This is happening on 15th April. Now do a time travel, go back to 31st March. If I knew that he is going to leave to UK on 31st March itself, Will you create 5% provision? No, you will create 50% or 100% provision. Are you following? Are you understanding, guys? Now, let's say so far on 31st March, no sale took place. Okay. Sale itself is happening on 15th April. 20th April, Vijay Mallya left to UK. Now will I create provision? No, transaction itself is a new event occurring after the balance sheet date. I will not account in this financial year, maybe the next financial year, yes, I will account. Are you following, guys? Let's give another example. All these are past exam questions. During the year, against me somebody filed a case. Let's say I am, for example, my company is called Abibas. Okay, I am Abibas. Now during the year, Adidas filed a case on me for using the name. But I am filing in court, case is going on. Abibas, Adidas are different. I found the name Abibas, case is going on. So as of 31st March, for me it is a provision I created or some contingent liability. I am not sure if I will win or lose the case, but case is going on. In this time gap, that case I lost. So I have to pay 10 crores penalty. Will I create the payment entry now, provision now? Or I will do next year? Now, as of 31st March itself, if I knew I am going to lose the case, what I will do? I will create provision, so I have to create the provision. This case verdict is not a new issue or not a new event. Already existing case. Now I am getting what, guys? Additional evidence of something, of a condition or a situation of case which existed on balance sheet date. Are you following, guys? Let's take another example. During the year, let's say in the month of Jan 2024, for example, Vodafone and Idea were just thinking about a merger. They never got into a merger. They were just negotiating. Let's have the first Zoom call. Do you think it will be compatible for us? It was just an idea. As of 31st March also, it's still an idea. I'm talking about the idea, guys, not this idea. Vodafone Idea, that idea. On 17th of April, Vodafone Idea struck a deal. Okay, let us do the merger together. Now on 17th April, will this merger be adjusting event or non-adjusting event? Non-adjusting event, because it's a completely new event. That means in my balance sheet, there is no clue about this. There is no clue about my assets and liabilities. Are you following, guys? Next, last example, if you get it correct, your understanding. On 20th of April, within my scope, earthquake came. My factory was destroyed. As of 31st March, I never predicted. It's a completely new event. What is it? Non-adjusting. Non-adjusting means I have to account in next year. But next year, I don't have a next year. Factory destroyed. Going concern affected. What next year? Next year is there only if I can prepare books for next year. What books if factory is not there? So this is a case where going concern is affected. Then, so look at the accounting treatment. If the going concern is affected, then it becomes an adjusting event. Are you following, guys? However, in non-adjusting event, no treatment. Going concern affected means it becomes adjusting event. Now, Vodafone Idea is not a going concern affected. Company is continuing in a different form, but shareholder is telling me, so what if going concern is not affected? Why can't you at least inform me about this? Should I wait for the next year's AGM about something that happened here? So they are saying if something is a non-adjusting event and if it's going to be material, at least important, then you will disclose in the financial statements, nature of the event, estimate of the impact. Are you following, guys? Sir, what is the summary of this standard? Simple. The summary of the standard is events are classified into adjusting and non-adjusting event. Adjusting event, adjust the assets and liabilities. Non-adjusting event, don't make any adjustment. However, if such event is affecting going concern, it becomes adjusting. However, the event is material but not going concern, then disclose in financial statements. Are you guys following? That's it. We will straight away now go and do a few questions in the standard. It is in this material. You have the soft copies. PDF will be there, guys. Recording students, check out the description. For you guys, in the break, if you want, I will just share it. If I take page 44, otherwise you carry study mat means nothing to worry. If I just go to page 44. Okay, I am just going to questions. Yeah, I'm just doing randomly few questions whichever I feel is important. Let's do, for example, question illustration 2. This is same illustration as per our study material, guys. This is nothing but our study material, just reformatted for it to be easily presentable. Okay. Now I will just do only 2 questions and then we will move on to next standard. Okay. Now, earthquake destroyed major warehouse on 20th of May. Accounting year ended on 31st of March is my year ending. Accounts were approved on 30th of June. That means this is within my scope. Are you following, guys? They are asking the loss from earthquake is estimated to be 30 lakhs. Whether this is adjusting or non-adjusting. First adjusting or non-adjusting? Non-adjusting. Completely new event. As of balance sheet, I had no clue about this. Are you following? Is the question readable for you guys? Yes, okay. Now, how do I answer this in our exam? Sir, non-adjusting has 3 endpoints. No adjustment, material, going concern. What to put for this? Going concern or material? Oh, 30 lakhs loss means going concern. Gone. What if my company's turnover is 5,000 crores? So what if it's a major warehouse? There could have been 100 major warehouses. Question is not clear. So you don't give a clear answer. Sir, how will I get marks? You need to give an open-ended answer telling the examiner, hey, I studied. You tell, if this loss is material, then you disclose in the notes to accounts. However, if the loss is going to affect my going concern, then it becomes an adjusting event. Give both the answers. Are you following? That's what they were given in the study mat also. Next, I will go for another question. Going to illustration 5 in the study mat. I do not have the time for doing all the sums, guys. I am only going to do randomly sums which I feel is important for covering all the concepts. Last sum in AS4, illustration 5. Recording students, pause and try to answer. Here, company closed accounts on 30th of April and the board approved on 20th of August. Approved on 20th of August. The company was engaging in some pipeline activity for oil company. While doing the work on 1st April met a rocky surface, because of which they had to additionally incur expense of 80 lakhs. Whether event is adjusting or non-adjusting? Not applicable for AS4. Common is, this is the one question where students make mistake, because year ending is 30th of June. Approval is on 20th of. This only is in my scope. Event is happening when? 1st September, after the year ending. So it is not covered in AS4. However, you will tell if it's material, disclose in notes if possible. We have to go to AS. Which one? Now, no AS. AS4 doesn't cover, only it is 560. Here they are saying after approval of balance sheet date. So it is not an event occurring after. AS4 is not applicable. Additionally, if you studied auditing, you will give auditing answer, but not expected by institute. Following, guys. With this, we are done with AS4. Understanding, guys? Hello, after we finish every standard, can you guys clap once? So I get some motivation. Okay, perfect. Now, is this speed okay, or do you want me to speed up more? How many of you same speed you can continue? How many of you speed up? How many of you slow down? Say, I am a very democratic person. I will go with majority, guys. Majority said continue in the same pace. I am going to continue in that. Okay. I follow democracy, guys. Okay. Now, next we will go to a different standard. I will not take a small standard like AS4, guys. Now I will go to, let's say, AS12. Today I am going to do AS12. Then I am also planning of doing AS22. I will just be doing it in random order, but few difficult standards, few easy standards. Towards the end of every class, we will also do the chapters like internal reconstruction, buyback, all of that. Okay. One sum per chapter for the big chapters is what I can do, guys. AS12 talks about what, guys? Yeah, the first 2 standards are just for icebreaker for you to understand easily. We will go to government grants material. I will explain concept in the note. Then I will take the material for AS12. These summary notes, if you see, it will predominantly be 1 page per standard. If you take AS12, it's just 1 page for the whole standard, all our concepts. Okay. Here and there I'll keep drinking water, guys. Pardon me for that. Okay. This standard is having only two parts, guys. Only two parts. What is a government grant? Once it becomes a government grant, how do I account for the same? That's it. How do I pass journal entries and account? They are saying definition of government grant is simple. The word itself says what? Government. So Ambani has given a grant to, let's say, Ambrish. Can I say it's a government grant? No. You can't tell Ambani is government. They will not allow. Government is central or state government. So they are saying government grant here refers to any help or assistance from government in the form of cash or kind. That's the definition, guys. If I go here, you can see. Is the zoom sufficient? Okay, refers to any assistance from government in cash or kind. That means you can give in cash, kind, or combination of cash and kind. Who is government? They're saying government includes 3 points. Central or state government, government department or agencies, any other bodies, whether local, national or international. Let's give an example. World Bank is giving grant. Is it covered in the standard? No. IMF, International Monetary Fund, is giving a money. Let's say for food relief. Is it government grant? Yes. Let's say WHO is giving a grant for people for food. Is it a government grant? Yes. All the answers are yes. It is central or state government. Our current central government, whichever ruling party, that one. State government, whichever state you belong to, your state government giving it. Government also has departments. Ministry of Education, Municipality, Corporation, Ministry of Defence. There are so Ministry of HRD. So many departments. They are called government departments and agencies. So what are government agencies? For example, if you Google, in Tamil Nadu we have something called Startup TN. It's a government-backed startup support for Tamil Nadu. In Hyderabad, you have something called T-Hub, T-Hub, which is backed by the government. If they have the government backing, then they will become a government agency. Are you following? Some states have that startup or government, they give those grants. Are you following, guys? And last one, any other similar bodies, local, national or international is by World Bank, IMF, all of that. Are you following, guys? Clear? So only if they give the grant, then it will be covered. So let me give some examples. You tell me, is it a government grant or not a government grant? Okay. First one. I'm just taking some random examples. I wanted to buy a laptop for which government gave money. Is it government grant? Yes. I wanted to buy laptop. For that they gave me laptop itself instead of giving money. Is it government grant? Yes. Now, everybody knows income tax. So, in income tax, we have a section called 80IA, not in your syllabus. So, it's there in syllabus? Final syllabus. That section says, if you are a startup recognized in India, out of the first 10 years, any 3 years of your choice, income tax is exempt, fully exempt. If you are a startup in India, recognized, 3 out of 10 years, income tax is exempt. Is this a grant? No. How many of you yes? How many of you no? How many of you I don't know? Doubtful means both hands in the class. Online recording fellows, put your hands up. Okay, now, so this is one thing. Next, okay, let's take an exemption we all know. Tell me your favorite income tax exemption. Agriculture. Okay, agriculture exempt, part of syllabus. Is this government grant? It's a benefit, no. Government is giving this. No, it's not a government grant because these are income tax exemptions given to everybody. Every startup gets this. Everybody in agriculture business gets that. Or all the government exemptions, section 10, whatever exemptions you have, is given to everybody. So not included here. These are ones which only I will get if I apply. I need to be selected for that. Are you understanding, guys? Yes, so government grant does not include, if I go to the right extreme, government grant does not include one assistance in form other than grants. I give classic example for this. Government is putting road up. That is not government grant. Don't tell government is giving grant by putting road or bridge. That is given for everybody. Are you following, guys? Next. Sometimes government itself will invest in companies. There's a company in Tamil Nadu called E-Sandai. Okay, that's a real company. which is buying goods from farmers and selling over here, big company. In that recently the Tamil Nadu government invested some 7-8 crores of money. I don't know the exact amount, I might be wrong, but they invested for equity. So they gave money and took share capital. Is this government grant? No. It is government investment. So government participation in the ownership of enterprise is not government grant. If this was earlier attempt, I won't be focusing on theory, guys. We have how many marks MCQ? 30 marks. Anything they can ask, guys. Okay. So now the first part. What is government grant? Quickly, if I have to summarize. Okay, I'll use the book itself. Are you okay if I use this itself, guys? Okay. Government grant definition is of 3 parts, guys. It includes any assistance from government in form of cash or kind. Again with me, assistance from government in form of cash or kind. Such an assistance can come from central or state government or government department or agencies, any other similar body, local, national or international. Let's repeat again together online. It includes central government or state government, government department or agencies, any other similar body, whether local, national, international. Perfect. Now this government is giving me a grant, but it doesn't include 2 things: government exemptions like tax exemptions, etc., and government participation in the ownership of enterprise. Everybody repeat with me. Last row fellows also repeat with me, guys. Are you following? Yes. Clear? This is the definition of government grant. Now I can pinpoint and say what is government grant. This grant can be in form of cash or kind. Cash is called monetary, kind is called non-monetary grant. So our accounting is going to be very simple over here. Accounting, if you see, is of 2 types. Cash is monetary, kind is. So if you just remember this one chart, standard is over, then we'll do one sum. That's it. Okay. Now in non-monetary grant, they are splitting into 2. Why they are splitting into 2? I'm not getting into that logic, guys. What are the 2 points? 1. Non-monetary means government is giving me the kind. Let's say you are getting a laptop from government. Government is giving you a laptop. First case, they gave it to me for free. I didn't pay anything. They said you're doing a good job. Take this laptop, build more software products and export. So I got a laptop for free. So I'm getting a grant for free. Entry is what asset? I'm getting an asset account debit to. See, if you want to memorize with logic here, what can I credit? I can't credit P&L. I can't credit asset. I can't credit or debit side of P&L. I can't credit share capital. I can't credit liabilities. What is left is reserves. Will I get this every year free? So I'm left only with capital reserve. But free, no. What amount to take? Nominal amount. I will take 1 rupee or 10 rupees, whatever. Why nominal amount? Why not I put 0? Simple logic. If you don't track what is incoming, amount is 0. But quantity you are not tracking. Let's say I have 20 laptops in my company. Amrish stole 5 and ran away because it came for free. Now, I didn't pass the entry for 5 laptops. So my book also will tell only 15 are there. Here also 15 are there. So to track quantity, we pass it nominal value. Are you following, guys? That's it. This is one. What if the laptop is worth 10 lakhs? So 10 lakhs laptop. Okay, fine. Some high-end laptop, guys. For which they gave a discount and I am paying only 3 lakhs. Are you following, guys? What is the entry now? So I pay only 3 lakhs. Laptop is worth 10 lakhs. Asset to bank, whatever I paid from my pocket. That's it. Are you following, guys? Sir, why not 10 lakhs? Fair value, sir. You go to eat biryani in the break. Biryani is 400 rupees. Today discount, 200 rupees off. You are paying 200. Will you pass 400, 200 entry? 200. What you paid. Swiggy is giving discount every day. You put entry for what you paid. That's a trade discount. We don't account trade discount in books. Are you following, guys? That's it. So non-monetary is done, guys. Non-monetary is split into 2. Asset can be free of cost or concessional. This is called concessional grant. Concession is a discount. Concessional grant. Free of cost asset to capital reserve at a nominal amount. Concessional asset to bank at discounted price. Are you guys following? Easier. Coming to monetary, we have 3 splits. I'll finish all of this. Do a revision in our notes and then straight away do 1-2 sums. Okay. Easy standard, guys. Easy scoring standard. 4 and 12 are. Okay. Now let's proceed further. In monetary grant, first I'm going to receive what? Cash. Look at the trick here, guys. in this chapter, monetary grant, the debit will always be cash or usually bank. Government won't give cash. Government will not give cash. They will give only bank if it's a grant, guys. Okay. Here debit will be asset. So debit is fixed. You need to figure out only the credit in AS 12. Are you following, guys? Here we have three types of monetary grants, cash grant. Now, when you start a business, who are you? You are called a promoter or a founder of a company, correct? What does the promoter do? Set up the business. That is my main work. Set up the business. So, for me to do the initial setup, I need infrastructure, I need AC, I need TV, I need plant and machinery, I need all of that. That is a big expense, guys. To start a restaurant and run a restaurant, monthly expense is not much. But that investment is the biggest expense for anybody not doing business. So on the investment, if they are going to help me a little bit, some money they are giving. So like a promoter, government is giving money. So one is called grant in the nature of promoters contribution. So if I invest money, entry is bank to share capital. But government is giving money. So I can't give him shares. So what I will give him? So and debit will be bank account debit. Credit what I will write? You think logically I can't credit P&L because it's not recurring every year. P&L is only if it's recurring every year. I can't credit asset. I can't credit liability. I can't credit share capital. I can't credit the debit side of P&L. What is left to credit? Reserves. Will I get this every year? No. So I'll credit capital reserve. What is grant in nature of promoter's contribution? Mainly to set up the business. The word setup is key. For setting up the initial business, they give money for buying land, this, that. Promoter's contribution. Sometimes they will give grant for meeting electricity expense or for rental expense, etc. That means if my electricity expense, let's say, is rupees 10, there are two ways they will give benefit. One, they will tell you pay only 8 or they will tell you pay 10. I will give you 2 refund. Both are possible. Net impact in both is what? Debit is. So my accounting also depends on the question. I can account both ways. One, electricity entry will be entry for electricity, guys. Electricity account debit to bank. This will be transferred to P&L to electricity. Correct? So I will write electricity to bank how much? 10. First I will write 10. This is, see, if you are paying 8, I will write only 8. This is first case. Second case is, let's say I am paying 10. I will write debit as 10. Now I am getting refund of, how much refund? Bank account debit 2. So I am getting 2 here. Credit what? I have 2 options. One, credit my P&L. So I will write P&L how much? So this will be at 2, this side 10, net impact 8. Second option, they are saying you credit the expense itself. So I debited expense of 10. Instead of crediting P&L, I will credit what, guys? Electricity for 2. So I will have a 10 here and I will have a 10 here and minus 2. Net debit will become 8. So in other words, he is saying either show 10 and 2, 8, or if you are actually paying 8, just show 8, or if you are paying 10 and getting refund of 2, show the reduction on the same side and show 8. Are you following, guys? Which is correct? All are correct. Depending upon the question, anything is fine because net impact is the same. Are you guys following? So this is called revenue grants. These are called revenue grants, grants which you are getting for recurring basis for many years. Here government will give you the same 2 rupees for next 5 years, like that. Are you following, guys? So now if I summarize still here before I go to the main part of standard, the types of grant if you see. Again one quick revision. Non-monetary we have concessional and free of cost. Free of cost means credit capital reserve at nominal value. Concessional value means asset to bank at concessional or discounted value. Monetary grant, debit is always going to be bank. Credit promoters contribution means credit what, guys? Capital reserve. Revenue grant means credit P&L or deduct from the respective expense. Are you guys following? Everybody clear till here? Before I go to the last part, sometimes grants are refunded back to the government. They are refunded back to the, if I don't follow condition. Government is giving you 10 lakhs for setting up business. You took that money and went to Goa and you set up your business there. Now, you didn't follow the conditions that they gave. So, if they find out, you have to refund. Sir, how will they find out? That is their headache. Sir, how will they find out I am not wearing helmet, sir? When you get caught, you have to face consequences. Income tax. Sir, 7 years I didn't pay tax, sir. 8th year you got caught. Reopen for last year. How many years? I don't know. I'm not income tax case, but whatever years you will reopen the books, gone. Are you following, guys? One new amendment also is going to come. They are going to increase the reopening to 10 years after election. Not for exam. Ignore it. Leave it. Reopening also is going to increase, guys. Okay, fine. So, like this, if you don't follow conditions, sometime in the future you have to refund the grant. Refund is very simple. Nothing to panic. Whatever we learnt now for accounting, reverse the entry. Are you following, guys? We are going to reverse the entry. That's it. This is the whole standard, subject to the last part which I am going to go now. Grant given for specific fixed asset. This is again a subcategory under monetary grant. Government is giving you money to buy an asset. Okay. Specific fixed asset, we have double classification. I will only focus on one because the other is just a byproduct of this. Let's say you are purchasing one plant and machinery for 7 lakhs. Okay. What is the entry for that? Asset account debit to bank for 7 lakhs. Now later government is saying I will give you 2 lakhs as grant. Okay. So that time when I get the 2 lakhs, what will be my entry? Bank account debit to asset 2 lakhs. So my net cost is, so can I account for 5 lakhs? That means my asset in the balance sheet will be only 5 lakhs. So can I show the asset only for 5 lakhs? Initially itself? No, because I would have applied for grant in the year maybe 2024. Government is very fast. So we will get maybe in 2026 only I will get the money. Correct? So in this 2 years, what if I don't get the money? Correct? So now if I account at 5 lakhs thinking of a future money that I will receive, I am the one who is going to suffer. So they are saying first you bought for 7 lakhs, you pass entry for 7. Later when you get the 2 lakhs, that time you do the reduction. So what happens because of this? The problem is, let's say my asset is having a life of 5 years. Or let's say 7 years, guys, for simplicity purpose. 7 lakhs for 7 years. So 7 lakhs minus, assume residual value is 0 divided by 7 years. Per year depreciation is, I will write 1 lakh in each of the years. Now in 3rd year, I got the grant. So before I go to year 3, year 2, year 1, year 1, 2, 3, in year 2 ending, what was the book value of asset? It started at 7 slowly, minus 1 lakh depreciation, minus 1 lakh again depreciation, book value is 5 lakhs. I am keeping residual value 0 to make it easy for us. Okay. So book value is, year 3 also I am predicting 1 lakh depreciation, year 4 also I am predicting 1 lakh depreciation, 5, 6, 7, 1, 1, 1, asset close. Are you following, guys? Yes, now in the 3rd year only I got that 2 lakhs. So I am happy now I got the money. Will you tell you it came late, I don't want the money? You will take it, 100%, anybody will take it. So year 3, before I pass my depreciation entry, I am going to pass one more entry for receiving government grant. What is the entry for that? Bank account debit to asset, how much? I got 2 lakhs. Are you all following, guys? Everybody sitting outside this classroom, 3rd floor, other places, keep repeating, guys. Okay. Bank account to asset, how much? 2 lakhs. Now, what is the value of asset? 5 minus 2 lakhs. I have to reduce the asset up because my effective cost has now become. How many years are left still? Year 3, year 4, year 5, year 6, year 7. 5 more years. I will divide by 3 lakhs divided by 5. How much, guys? How much? Whether we use calculator or don't use, answer is going to be the same. 3 lakhs divided by 5. Do you need calculator, guys? Hello. If you want, come with me. We'll go to 7th standard when school is there nearby. Those who are watching online, we'll ask them 3 lakhs by 5. Do you need calculator? Immediately half the class took calculator, guys. Bharatwaj. Edukla. Compute panla. Panina. Okay, fine. So 60,000 rupees per year will be the amount of depreciation for each of these years. This is how you account. Are you following, guys? Clear? Let's say in year number 6 again. So now if I just write this again. So year 4 60. Year 5 also 60,000. Now I am in year number 6. Are you following, guys? In year 6, I didn't follow conditions. Government told. So I had to give the 2 lakhs back. Before that, tell me what is the value of asset in year 5 and we started off with minus first year, minus second years, minus third years, 60 minus fourth year, 60 minus fifth years. So what is the book value end of year 5? How much, guys? 3 lakh 20,000. Without calculator you can easily do it, guys. You are all CA students, not BCom. No offense, guys, just joking. Okay, fine. BCom students also will do it, guys. Come on. Now 3 lakh 20,000 is the book value of the asset in year 5. Now I am doing refund of asset. That time entry for refund I told, reverse the entry passed for receipt of grant. Bank account to asset is how much? This will be reversed. Asset to bank how much? 2 lakhs. Just the reverse as it is. What? That means if your reversal is correct, only if the first entry is correct. If that is wrong means, go to the next sum. Leave it. So asset from 3 lakh 20 plus 2 lakhs. 5 lakh 20 is my new asset value. How many years is left for this asset? 6 and. So I will divide by half. How much? Depreciation in year 6. Depreciation in year 7. 2 lakh. Do we need calci, guys? No, wholesome. Where we need calci, guys? Come on, 2 lakh 60. Each year depreciation, year 7, sum over. End of year 7, asset value becomes 0. We accounted for receive of grant and refund of grant within these 7 years. Are you following? But what's the problem in this? If you see, it is asset. For one asset, my depreciation became 1 lakh, 60, 60, 60, 2 lakh 60, 2 lakh 60. For a CA student, it's difficult to understand. No, sir, depreciation is going up and coming down. No. Going down and coming up, whatever. For a layman, the YouTuber will see this financial statement. Company is doing wrong accounting. Depreciation, they are playing around with us. They will put one YouTube video. Then share price will go down. So, this accounting is fine. But it's not true and fair. It's not giving a true and fair picture. Standard allows this. But it recommends another better method where the receipt or refund of grant should not affect my depreciation. Let's do the same sum again. If you understand this, standard is over, guys. Okay, standard is over. Let me do the same thing again for year 1. I hope you are understanding my handwriting, guys. Not understanding? Can't do anything. You have to understand. I can't change this, sir. I'm used to this. Okay. Mine is a very bad handwriting. Recently only I found out why it's like this. When I was talking to my mom, recently only I went out of station and came back only last night. There I found out. When I was born, I was a left-hander apparently. After 2 years, my mom forcefully changed me to right-hander. I think that is the reason for changing my handwriting being bad like this, guys. Hey, what is this? Everybody changed. Who all changed from left to right? Yes, we're all on the same team. Okay. Fine. Okay. Then my wife was like, then she was saying, I said, okay, fine. Fine, we'll come back, guys. Back to topic. Only short distractions in marathon. Okay. Now, year 1. In year 1, which asset? You remember? What is my hand? 7 lakhs. 7 lakhs asset, guys. Recording fellows, are you still awake? Okay. Online fellows, okay. No. 7 lakhs is my asset. Now, same method. First year, is there any grant received? Nothing. So, first year depreciation is 7 lakhs divided by 7. I am not keeping residual value to make it easy. Later I will tell you if it comes nothing great. That's it. 7 lakhs divided by 7. First year 1 lakh, second year 1 lakh. Beautiful. Third year I received the grant. In the above case, when 1 lakh came, I credited what? Asset here. Can you see this? That is why the depreciation took a hit. This time I have learnt my lesson. In life you will not repeat that mistake, guys. That's a normal thing. So when I received the grant, bank account debit 2 lakhs, I cannot credit asset. So let me credit some account called X account for 2 lakhs. We will name the account later. Bharatwaj X account na X account ledger. Okay. X account for 2 lakhs, guys. Okay. Now this is some account. I don't know what it is. So my asset at the end of year 2, 7 lakhs minus 1 lakh minus still remains at asset asset is still at 5 lakhs. How many years are left? Year 3, 4, 5, 6 and 7. So 5 lakhs divided by, here also I will put, here also I will put. Are you guys following? Clear? Now, but Bharatwaj is saying, sir, how is this fair, sir? If I keep 1 lakh as depreciation here, isn't it not right, sir? My effective cost of asset is only 5 lakhs minus 3 lakhs, sir, in cost of asset. It's not right to charge depreciation on 5 lakhs because 2 lakhs is given to me as a grant. Correct? So what standard tells? Yes, you are right. So what is the benefit I got? So let me prepare this dummy account called X account, which has an opening balance of. So this 2 lakhs is a benefit for me for this year or for rest of the life. Rest of the life of the asset. So life of asset is how many years? So this 2 lakhs divided by is how much? 40,000 per year. So here I will write 2 P&L and transfer from this random X account to in year 3 by X account 40,000. Effective depreciation is actual depreciation is 60 only is correct. If I go previous method also it is, but it's disturbing my presentation. So over here, when somebody looks at the debit side of P&L, he will see 1 lakh, 1 lakh, 1 lakh. Net effect is 60. Net profit in both methods will be same, but depreciation comparison will still remain at 1 lakh. It will not affect my FA register. Are you guys following? Yes, getting the logic up? Now year 4 also, in this X account, what is the balance left? 2 lakhs minus 40. 1 lakh 60. I will again carry forward as 1 lakh 60. Opening balance. Correct? Again next year, 1 lakh 60 is left. How many years are left? 4 more years. Divide by 4. How much? Again that same 40,000 I will transfer to the credit side of P&L having a net debit of. Are you guys following? Everybody understanding, guys? Clear? So here now we have, so first year depreciation will be 1 lakh, 1 lakh, 1 lakh, 1 lakh. But 3 and 4 I have a credit of 40, 40. Net effect is 60 in both cases. Are you guys following? Now in year 5 what is happening? Grant is refunded. Beautiful. So now this is the main part. If grant is refunded, you tell me the entry for refund, guys. I told reverse the entry which is passed for receiving of grant. So if I have to reverse this entry, I will credit bank. Credit bank for how much? Debit X account for. That is what I should be doing. But in this X dummy account which I prepared, opening balance is I debited 40, again I debited. How much is left? So I can, how much is left, guys? 1 lakh 60 minus 40, 1 lakh 20 only is left. Are you following up? So 2 lakhs left, 2 times 40 is transferred to P&L. So I'm left only with 1 lakh. So this 1 lakh 20 only I can debit. So what about the remaining 80? I will debit P&L account because why I am debiting P&L? This was earlier sent to P&L. Because it was credited to P&L earlier, now I can debit my P&L. Are you following, guys? So my entry will be for refund of grant, P&L account debit 80, X account debit 1 lakh 20, to bank 2 lakhs. This is happening in which year? Year 5, before I account for depreciation. Now tell me what is the value of asset in year 5. Slowly. Assets started off with minus first year depreciation, minus second year depreciation, minus third year depreciation. 1 lakh is the debit. This credit is coming to P&L. Depreciation is how much? So when grant is received, depreciation is not changing in year 3. Again year 4 minus. So end of year 4, what is the value of asset? 3 lakhs. Are you following? Now grant is refunded. Now refund of grant, is it affecting asset account? That means after end of third year also my asset is still left at fourth year also asset is at 3 lakhs. How many years is left? 5, 6, 7 divided by 3 years. Here also I will debit. Year 6 also I will debit. Year 7 also I will debit. 1 lakh. Are you following, guys? In all the 7 years, whether grant is received or refunded, my depreciation will remain at 1 lakh, leading to a true and fair view if I follow X account method. Are you following, guys? So this X account is a temporary account. If refund is not happening, what will happen? Next year again I will transfer 40,000 in year 5. In year 6 I will transfer one more. In year 7 I will transfer one more. End of year 7 balance will become 0. Are you guys following the concept of? So what is X account? What is the income I got in X account? The income which belonged in this year, I am basically deferring it for multiple years. Year 3, 4, 5 and 6. So X account is called deferred income account or deferred grant account. Multiple names in multiple books, but the word deferred is important. Study matters is deferred grant account. Are you following, guys? Understanding or clear? How many of you studying first time are able to understand? Anybody studying the standard first time? No one. Are you following, guys? Okay. So we have learned accounting in 2 ways. Option 1. Option 1. Specific fixed asset. We discussed so far only depreciable asset. Debit will always be for bank. Credit will be either cost of fixed asset or deferred income method. In non-depreciable asset, in the problem sorry, depreciation itself is not there. So on the difference நீ அசத்தை கிரெடிட் பண்ணிக்கோ எதை வேணா கிரெடிட் பண்ணிக்கோ எனக்கு P&L இம்பாக்டே கிடையாது. கிளாசிக் எக்ஸாம்பிள் ஆஃப் லேண்ட். ஸோ they are saying credit straight away capital reserve or credit cost of fixed assets. Are you guys following? Understanding genuinely, guys? Hello. Straight away we'll go to sums. Is 12 over here is in 147 over here. You guys find AS 12. Okay. Randomly I'll just take a few questions, guys. I'll take the difficult or easy ones. Difficult only I'm going to take, nothing easy, guys. One, let me take simple. I'm planning to do 3 sums in AS 12. Don't expect to do all sums. Again, for everybody writing the exams in May, study mat le irukra ella sums. Ensure you are very clear. That's all enough because they have added 75 plus new sums in the new syllabus study mat. Even for the existing chapters, I keep telling it always, again I'm repeating. AS 12 is an old chapter, repeated again from old syllabus too. But they have added new sums. AS 10 is the same old topic repeated, but they have added 10 new sums. AS 18 is the same old topic repeated. They have added 12 new sums in AS 18. AS 7 is a topic repeated, 6 new sums in the study mat. So in the sums panale artha 5 adha kepan. He has taken effort to build this up. First I should ask in the exam. Don't tell sir same sum didn't come. Number they will change. Okay. Fine. Illustration 5. Top and Top has set up a business in designated backward area which entails the company to receive government subsidy of 20% of cost of investment. What grant, guys? Grant in the nature of promote as contribution. Cost now portra investment and 20% vanduchu. Cost of investment for which no repayment was ordinarily expected. Illustration 5 in our study mat, guys. Moreover, there was no condition that company should purchase any specific assets for this subsidiary, no problem. Having fulfilled all the conditions under the scheme, company on investment of 50 crores in capital asset received 10 crores from the government. You can compute. 20% of 50 crores is 10 crores. For the accounting year, the company wants to treat this income as a revenue income. Is it revenue income? No. It's grant in the nature of promoter's contribution. Entry is bank account debit to capital reserve 10 crores. Thereby reduce the profit and losses. Is this correct, guys? No. That will be my answer. Fine. Quickly. Now, 35 lakhs received from the local authorities for providing medical facilities to employees. What grant? First you classify monetary. What is this? Monetary grant. Within monetary, is this promoter's contribution? No. Is it for buying asset? No. What is left? It's a revenue grant. Entry is bank account debit to P&L, or I will defer it over the period of benefit. 100 lakhs as subsidy from central government for setting up unit in backward notified area. What is this, guys? This is a grant in nature of promoter's contribution. You will pass the respective entry by crediting capital reserve. Are you guys following? Perfect. Now let me take a good sum. Yeah, I'll take this WDV sum, guys. Okay, this also is not that difficult, but let's do it. ABC Limited received grant of 300 lakhs for acquisition of machinery costing. So asset is 1500. The grant was credited to the cost of. That means he is not following the X method. He is directly reducing from cost of asset. So from this he is minusing 300. I am left with 1200. The machine is depreciated on WDV basis. Okay. Company had to refund the grant in May 2014 to non-fulfillment of certain conditions. He is asking how will you account assuming they did not charge depreciation for the year 2024. When did I receive the grant? 1st April. When did the grant refund take place? May 2024. Between this, find out the number of years available. 31st March 22, 31st March 23, 31st March 24. So I have 1, 2, 3. 3 financial years. And in the last year, from 31st March 24 to May, I have roughly 1 or 2 months. That I don't have to bother. Why? Assuming that the company did not charge depreciation for the year 31st March 2024. Now you guys tell me, asset is purchased for 1500, reduce 300, 1200 is the opening balance. How many years depreciation? 3 years. Until these 3 years. Asset life is 5 years, correct? But as of 31st March 24, how many years depreciation should provide? 3 years. What are those 3 years? 31st March 22, 23, 24. What is the depreciation to provide? I will provide on WDV basis. So first year will be 1200 minus 20%, which is 240. Like this I will do for all the 3 years. Let me use a solution to save time, guys. First year is 1200 less 240. Then it becomes 960. Again less 192 in year 2. Again less third year 153.6. 3 years for a depreciation. You end up with 614.40. Are you guys following? Yes, sir. Everybody clear, guys? Yes, now from 614.4, this is the book value. Now refund is happening. Yes, when I received the grant, entry was bank to asset. When I am refunding, reverse it, asset to bank, you add back revised values 4.4. How many years are left? 2 more years. Divide by. So depreciation for each year will be 440 something. 457.20. 457.20 will be the depreciation for remaining years. Are you following? What they are ignoring here, from 1st April 2014 to May, in the period they are ignoring the depreciation. Are you following, guys? Everybody with me? Now same sum, if I do in deferred income method, they haven't asked in study mat. If I do that, what will happen? Now in deferred, depreciation is changing. If I do in deferred income, this 300 will not be reduced here. So now look how my note will look, even though it's not there in the book. Deferred income only is important for us. Let's do that. Year 1, year 2, year 3. Refund is happening in year 3. Yes, so now if you see year 4. So year 4 the refund is happening. Asset value is how much? When grant is received, I will credit X account for 300. Asset and I disturb panna. Are you following? So now what is the year 1 depreciation? 1502, which is, I will debit here 300. Follow carefully with me guys, 300. So 1000. This 300 is not grant. This is depreciation of year 1. Follow carefully. If you understand this sum is, the chapter itself is over. Again into 20%. How much? 240. You get into 20%. 192. I will write here 192. Correct? Yes, sir. This is what we are going to do normally. But from this X account, year 1, year 2, year 3, I have to transfer back. Yes, in all the previous sums that you have done, we have just divided by 5 years. Transfer 60, 60, 60. We used to do like that now. Yes, I can't do that now. The idea is not to transfer equally. The standard uses the word transfer in the same ratio of depreciation. Here depreciation ratio is how much? 20%. The shortcut is, instead of me transferring, see here 60 is matching guys. So I will transfer in the same ratio of depreciation. Now what is the ratio of depreciation? 300 into 20%. Correct? So first year I will transfer 60. Correct? Now grant la, now follow carefully guys. In grant, if I transfer 60, I am left with 240 up. Now in the 240, again I have to apply 20%. Correct? Yes, WDV method, not SLM method. So 240 into 20%. 48 minus 190. Again 192 into 20%. How much? 38.40. Correct? So this will be my income. Now you tell me what is the net answer in this. Debit depreciation 300, credit my income. Net debit is 190, net debit is 153.6. Are you understanding till here? Yes, sir. Now whether you follow the first method or this X deferred income method, what is the net debit here? 240, 192, 153.6. If I go and see here also, can you see the same numbers guys? Yes, 240, 192, 153.6. Are you guys following? Clear? Okay. So whichever method we follow, net debit is going to be the same. Are you understanding? Yes. Okay. With this logical, this sum they didn't ask in WDV method. If they ask also, it's fine. Remember guys, if WDV, diminishing balance method comes, this grant will never become 0. Asset also will never become 0. Are you following? So then when it will be transferred to P&L, at the end of the useful life, we will pass transfer entry of closing whenever the asset is sold. Are you following guys? Yes, clear? This is AS12. I will just see if you want to do one more sum. You want to do one more sum or we'll go to next one? One more sum. Next standard. Okay, I will just take a concept over here. Okay, you are going to answer this question. You don't have to do the whole sum. If you understood logic like this, you will be able to do the question. Two things. Sir, residual value on the answer pannu. How I minus depreciation every year, reduce residual value to compute depreciation. Logic I will tell you. After the standard, I will ask a question and take that. And then after the standard, next time I am going to go straight away to AS22. Difficult standard we will do only and go for break today guys. My favorite standard is AS22. We just need 30 minutes and we'll become experts in that. Okay. Last question in AS12. You are going to practice with me. Even though it's marathon, you're going to spend solid 15 to 20 hours. You are going to practice. Okay. At least from going forward, I'll try to tell you list of few standards for tomorrow, so you can at least prepare and come. Okay. Next, illustration 10. As per study mat, Mr. A purchased machinery for 40 lakhs. Okay. Useful life is 4 years. Residual value is government grant received is 16 lakhs. How entry has to be passed at the time of refund of grant in the third year? That means year 1 normal accounting, year 2 normal accounting, year 3 only refund. When is grant received? First year. They have not given that data, so I will take it as. How will the entry be if the grant is credited to fixed asset, credited to deferred grant account? Entry, guys. Fixed asset refund entry is what? Fixed asset account debit to bank. How much? Refund how much? Full 16. So 16 lakhs. Correct. So the Prishnil, this is my entry. Fixed asset to bank being grant refunded. This is the one you should be able to tell. Grant is credited to deferred grant. Can you tell me the entry, guys? Okay. Entry, what I will credit? I am giving money refund up. So to bank 16 lakhs. No doubt in this. Correct. Now what I have to debit what? Deferred grant or deferred income account and P&L. What to debit by how much? What to debit by how much? For this only we have to compute the amount of depreciation or grant. 1 year compute panna podu for you to get the idea of it. Very simple. First year asset is 40 minus 8 lakhs residual value divided by this is in deferred grant method, divided by 4. Your depreciation will be 8 lakhs. We are following straight line method, so depreciation will be 8 for every year. So my debit of P&L will be 8 and my deferred grant account I would have credited 16 lakhs. So now every year I will transfer back to P&L 4 for 4 years up. So this divided by 4. So first year I would have transferred. Second year also I would have transferred. So how much is left in this 16? 8 is left up. So I will debit deferred grant account. P&L account debit 8 lakhs. Are you following, guys? That should be our answer wherever it is. Deferred grant P&L to bank. That's about it. Are you following? Clear? Understanding, guys? How to do depreciation if this deferred grant method is not followed? Then look at my depreciation. It will start off with 40 minus residual value 8 minus the receipt of grant 16 divided by 4. You will debit only 4 lakhs. So now if you do a comparative analysis, you can see if I credit cost of asset, my depreciation is 4. In this method it is 8 debit but 4 is credit. Net debit is 4 lakhs. Are you getting it? Are you following? Clear? That's it. So that's how all these sums will be. They will ask you either for accounting for grant or refund. Ensure you just solve all the sums. Practical sums. Generally, sir, where to find the new sums? All the new sums are added in practical. Behind the study mat, you find these practical questions. They have added all the new sums over there only. Are you following? Some standards I will be doing it wherever it is difficult. The new sums I will do that. With this we will close AS 12. Super, guys. Perfect. Okay. Perfect. Now small distraction with respect to AS 12 only. This conceptual learning will help me in a lot of things to explain to you AS 10, AS 2, AS 26, AS 28. I keep asking this question many times. We will keep reusing it. Some of you might know the answer. I will give 4 options: A, B, C and D. Depreciation is a cost. Depreciation is a non-cash expense. Depreciation is a savings. Depreciation is a, or none of the above. None of the above. You just choose, guys. Recording fellows, raise hands with me. How many of you? You can pick one or even multiple options. You can raise your hand multiple times. It's not MCQ, it's checkbox. Okay. How many of you depreciation is a cost? Okay. How many of depreciation is a non-cash expense? How many of you depreciation is a saving? A few students. How many of you none of the above? Okay, fine. Now let's take the same example to understand, guys. I am not giving the answer, you will give the answer. It's not a distraction, it's a concept you have to learn, not there anywhere in study mat. Okay. Let's take an asset of 50 lakhs with useful life of 5 years, residual value of 5. So my depreciation will be 9 lakhs each year. Let me prepare a normal trading P&L account. I am mixing both, guys, trading P&L, for ignore the format. My sales is 300, purchase is 100, gross profit is 300, assuming, gross profit 200, sorry, assuming everything is cash. Sales is cash sales, purchase is cash purchase. Gross profit is 200, which is cash in cash. Now tell me, what is the cash in hand at this particular stage? 200. I sold for 300, got 300 cash, paid 100 purchase, I have 200 left. So my gross profit and cash in hand is matching. In my illustration, in my assumption. Now I am writing all the expenses, electricity, rent, biscuit expense, snacks expense, this, that, all the expenses. Let's say 120 is my expense. Everything is cash. Electricity paid cash, rent paid cash. What's my net profit? 80. What's the cash in hand? 80. Matches up. Are you all following, guys? So my cash in hand is 80. Net profit also 80. Because everything is in cash. Cash flow statement. This is introduction even for cash flow statement. Okay. So I don't have to prepare cash flow statement here because my net profit is equal to cash in hand. If I go prepare my balance sheet now, this will come to my reserves and surplus 80. This will come to my cash in hand. This 80. Balance sheet also tallied. Are you following, guys? Understanding? This is the first scenario. Anybody has doubt in this? Please, you can ask me if you have doubt. Tomorrow morning we can go nearby school. 11th standard is board exam. Next year just now started, guys, I think. Okay, fine. This I'm sure you all understand. Now I'm introducing this depreciation. Example I elduna, but I didn't write in the format. I'm introducing depreciation of 9 lakhs. So first year depreciation 9 lakhs. What's my net profit? 71, 72. 71. 72 also is fine. 71. Okay. 71 lakhs is my net profit. What's my cash in hand? 80. Cash in hand remains at 80. I sold 300, purchased 100, gross profit 200, reduced the expensive 71 net profit. Cash in hand is 80. Let me take this to my balance sheet. 81. Just checking if you guys are awake. So reserves and surplus 71. Cash in hand 80. Balance sheet tally aaliye. This side asset will reduce by 9 in asset side. It will tally. It's extract. Okay, leave that. Fine. Somewhat I got extract. Understood, guys? Now let me assume the same P&L, same values hypothetically is repeated for 5 more years. So my net profit will be 71, 71, 71, 71 for 5 more years. Asset also depreciated 99999 for 5 more years. Assume everything is same, not practically possible. Okay. So my reserves will be 71, 71, 71, 5 years. Year 1, 2, year 5. What's the total, guys? 3? 55. My cash also will be 80 each year. Into 5. How much? 4? Super. So now I have a difference of how much? 45 is the difference. What is this 45? Nothing but depreciation charged every year in turn led to an increase of cash of 45. But the users will think my cumulative resource is only 355. But I have cash of. What to do with this cash? Go to Bali trip and come back. Nobody will know. I'll go to Bali trip exactly for 45. This also will become 355. Hidden cash for me. Can I say that, guys? What to do with this 45? What to do with 45? At the end of 5th year, asset is Useful life over. If I need 6th year, I have to buy asset up. So this 45 will be used for buying asset. Sir, asset 50 no sir. Asset was 50. How 45 is enough? 5 years. Residual. So how much was the difference? 45. So asset, we saved 45. Asset residual value is. So that 45 plus this 5, you get how much? I will replace my asset. Are you following? Now if you go back to foundation in school, they were told depreciation is provided for wear and tear of assets. Correct? They were also told in school and foundation, which we all mugged up, objective of depreciation is to provide for, depreciation helps in replacement of assets. Did you hear this term, guys? We mugged up depreciation purpose, replacement of asset. How is it helping in replacement of asset now? Without you and me knowing, depreciation is a saving. It is a non-cash expense also, and it is a saving, helping me in replacement of assets. If my residual value is 0, then I don't have to save, then my depreciation will be 10 lakhs. Then I have to save 10 lakhs every year. Are you following up? So that means every non-cash expense is a saving for me, invariably cash resource. Now in the same logic in AS 12, if you see, if my asset is 100, assume residual value is 0, life is 5 years, every year how much I will save? 20. Correct? Now keep residual value as 0 itself. Assume in first year you receive a grant of 20. So divide by 5, you will get 80 by 5. You have to save only 16. Here you will save. That means cumulatively here I will save only 80. Here I will save 100. I don't have to save 100 because you already got 20 when you bought the asset. That is why when grant comes in 3rd or 4th year, asset value drops and depreciation drops because I don't have to save that money. I got grant. And when there's a refund, asset value again goes up, depreciation goes up because now I have to save double. Are you getting the logic, guys? Following? Okay. Perfect. This one logic I will be reusing in multiple standards. Examiner, don't write this. Don't write in exam. Depreciation is a saving. Then I cannot save you in exam, guys. This is a concept for you to remember actual reason of depreciation. But practically we can't correlate because 5 years the numbers will not come like this. And this cash would have been used for something else. That's why if you remember debentures chapter or in law debentures DRR concept, when we create a DRR, here we have to do DRR investment. You will save that DRR in investment. In AS, same logic in AS 15. We have AS 15 in syllabus. This side you will create provision in P&L. This side you will create an asset by investment because this provision, the minute you create a non-cash expense in AS 15 by creating a provision, my cash is saved. But that cash I can use for something else. Because I should not use, you create an asset and liability in AS 15. Getting the logic, Nova? Yes, sir. Are you following Ade logic? Fine. With this AS 4 and 12, but logic is going to be used in multiple other standards is done. Now before we go for our break, I will give you one break in our long sessions. Solid break of 15 minutes or 30 minutes or? We will decide that time, guys. Now last standard, I am going to go for AS 22. After this only we are going to go for a break. Okay. 30 now. Any doubts so far? Can we proceed? Anybody has any doubt? Fine. AS 22 is called accounting for taxes. Before this standard, ideally you should know little bit of income tax, just the basics. Sir, what is depreciation and income tax books? Rate just to know that profits in income tax and books are not the same. Earlier it used to be a challenge for me because AS 22 was in group 2, tax was in group 1, Somebody will come and tell, sir, I want to do group 2 first. Then I can't teach the standard because it doesn't know income tax. Now we don't have those challenges. Okay. Only in inter you have choice now, group 1, group 2, final and all. It's changed. You have to do group 1, then only group 2. Group 2 now first panna mudiyadhu, final now. It's changed. Don't think about it. Think about inter. Okay. Now come to AS point, accounting for taxes. I am going to give 2 examples. Each example roughly 15 minutes. Once the example gets over and you understand the example, standard is over. I will straight away do practice 1-2 sums. Standard is over. Are you following, guys? Just 2 examples which drives the concept. Even those who skip this standard, how many of you skipped AS22? Very good. It is a difficult standard if you don't understand the concept, but very easy when you focus on the concept. Let me take an example. Okay. Particulars. I am not going to do any sum, guys. In the illustration or sum. In the illustration, that's it. Standard is over. You will become an expert in this. You can do even CA final sums in AS22. I promise. I'm not joking. It's just the concept. Okay. Same example. If you attended our class, adhe example 5 varshama use pannuva. Number maatha. Okay. Now let's say earnings before interest and taxes 100. Same example because students will have a connect. Easy. Oh, that's it. Fine. EBITS 100. Let's assume I purchased the windmill during the year again for 100 crores, lakhs, whatever, guys. 100. Depreciation as per books of accounts is 20%. These are my facts, guys. Depreciation as per income tax. Assume it is 100%. Sir, I know windmill is 40%, but 5 years back or 6 years back it was 100% when I made the example. I will not change it. Okay. Now, EBIT is 100. Windmill is 100 crores. Depreciation books of accounts is 20%. Income taxes. We can change it, but just for you to connect and recollect if you see in the class. Okay. Now, anything else? That's it. Yeah. Okay. So, 1 EBIT. This is as per my books of accounts. EBIT is 100 here. Year 1, year 2. Imagine same values for both year 1 plus year 2. Yeah, just by writing 100. Okay. Less interest. What is the interest to reduce, guys? 0. 0. Then you will write earnings before tax. Let me write tax rate. Tax rate 100% off. Assumption one irukme. Reasonable assumption are 30%. See, if you are paying 100%, I will not tell no. Okay. Windmill ke eppadi tax rate irukum? Depreciation 100% no. Windmill ki depreciation rate 100%. See, depreciation as per income tax. Correct. My fault only. I should have written depreciation as per income tax 100%. Income tax rate 30%. Clear? Okay. Feel free to ask the doubts. Kai mattum thookada. Cameras adi vaangum. Next. EBT less tax. How much, guys? Less 30 and 30. Is this correct? This is correct for books of accounts, but the actual tax I have to do income tax working. So what I will do, I will again strike this or just make it 0 and I will write here working note 1. Let me go down and I am preparing working note 1. Follow with me, guys. If you want, I will share this material, but again additional material no need. If you are writing running notes, good, but otherwise example follow up. If you understand, it's enough. Come down to working note. Year 1, year 2. What was the book profits as per books of accounts before tax? Above 100 and 100. Are you following, guys? Correct. This was the book profits. Now, this is 100 and 100, but this is before tax. Here I should also reduce depreciation of, let's say, earnings before interest, tax, depreciation and amortization. I am reducing depreciation. What is depreciation? 20%. So here minus 20 minus 20 books of accounts. So now if I'm just making a small not change, adding one more item, minus depreciation 4, fifth one is EBITDA, fifth is earnings before tax 80. Now I'm writing minus tax, working note 1. Again I'm just repeating for you to get clarity. First I'm writing EBITDA, earnings before interest, tax and depreciation. Then I did depreciation first reduce. I'm just reducing interest, depreciation. I'm ending up with EBT 80 and 80. Are you guys following? Minus tax only, everyone told 30%, reduce 30%. If I reduce 30% like you said, I should reduce 24 in each of the years. Some mundurukum. Correct? So if I write minus 24, minus 24, I will get one answer. Correct? But the problem is tax is not 24. Because tax is not as per books of accounts, it's as per income tax. So my book profits is 80 and 80, which you computed in the above table. 100 minus 20 depreciation 80. Income tax says what? Add back depreciation as per PGBP. Correct? Section 32 is one. So add back 20. Add back 20. Now you will get 100. Or let me do it in a much faster way. Add back depreciation as per books of accounts and minus depreciation as per Income Tax Act. Correct? What is depreciation as per Income Tax Act in first year? 100% for windmill. So minus year 2. 100 or 0? Will I do double depreciation, guys? Not allowed. Accelerated depreciation is not there for windmill in our example. Okay. So now if I write what is my PGBP income as per income tax, first year, second year, are you following, guys? So as per books my income was 80, but income tax no, as per my computation it's 0 and 100. So now income tax is saying now you pay tax. What is the tax in year 1 at 30%, which is 0. Year 2 you will end up with 0 and 70 is my earnings after tax. So I did this working note mainly to find tax of. So if I go back here, minus 30. Here if I write earnings as per books of accounts reported will be 80 and 50. Is this clear for everybody? First example, I don't mind going slow even if it's a marathon, and this example is over means standard is over. That's it. So now just to summarize, books of accounts my earnings after tax in first year is 80, second year is 50. Till this 80 there was no difference, but this difference came by because of income tax difference, where income tax, if you see in income tax we added back depreciation as per books of accounts 20 and minus depreciation as per income tax 100, 0. Correct? So because of the tax computation only books difference came, and we have here 80 and 50. Are you following? Looking at this financial statement, whatever YouTuber will tell, in the company invest panadinga kaasa. First year company had profit of 80, second year it became 50, company is not performing well, change the investment. Are you following, guys? Somebody science student who doesn't know, he will take financial statements 80, 50, gone. But we know the operational EBITDA performance of company is the same. The difference in net profit reported as 80 and 50 is because of an income tax adjustment which is affecting my dash and dash presentation, true and fair view of presentation. So I have two options: call everybody and take AS22 class for them, or do something so that my presentation is true and fair view. We all agree the second option. We have to do something. That something only AS22 is saying. What is the adjustment you have to do for true and fair view? That means over here if I do into 30%, it should have been 24. It should have been 24, but it landed up being something different. This difference is because of what? Income tax which adjustment? So I am trying to drill down why this difference came. So I am writing the difference came because of depreciation. Depreciation is something which is there in this adjustment for 5 years. 20% depreciation, 5 years. So in books of accounts, my depreciation was 100 into, so it would have been 20. This should have been the depreciation in books. But in income tax, my depreciation first year was, second year 0, 0, 0. This difference only cost me a difference in accounting. Are you following, guys? What is this difference? Follow. In first year, my debit in income tax is a much higher debit. Correct? So I will go back. I am just trying to analyze the problem. When I am analyzing the problem, first year my depreciation was 100, which was higher, which led to a tax of 0. But the tax should have been how much? Follow. The tax should have been, if not for all this difference, my tax should have been 80 into 30%. I will write this side, okay? It should have been, but it became 0. Second year also, my tax should have been 24, but because of depreciation being reversed, my tax is 30. So where it should have been 24, it is 0. Where it should again been 24, it was 30. Are you following this, guys? Let's try to analyze this impact. This impact is because in income tax book, I provided higher depreciation. Higher by how much? 80 in first year. So if my expense is higher by 80, expense is higher by 80, profit is less, I will pay less tax. So in both the books, I will anyway debit 20 up. What is the excess debit in income tax? 80. So because of excess debit in income tax, I am saving tax in the first year by how much? 80 is my excess debit, 80 into 30%, which is 24 is the tax I should have paid in year 1 in our example, but you paid 0. Are you getting it now, guys? Now look at second year. In second year, income tax is allowing 0 debit, but books of accounts is allowing a debit of 20. Which I will take for tax, sir? Income tax. Look at this. In income tax, second year should have been a debit of 24, but you got excess debit of 6. Extra tax I am paying in second year, which is nothing but second year disallowance of 20 added back up, but not reduced. So second year my income is increasing by 20. Third year income is increasing by 20. Fourth and fifth year also income is increasing by 20 in each of these years. So I am paying extra tax of 620 into 30% in each of these years. That means I am making a statement. Tell me if it is correct. First year I paid 0 tax, where I should have paid, which is now paid excess in the second, third and fourth year as 6666. Or I can tell what happened to my tax is, instead of me paying 24, 24, 24 in each of these years, I ended up paying 0, 30, 30, 30 and 30, assuming all numbers are same. So I am paying extra 6 in each year from year 2 to year 5. Are you getting this analysis, guys? Everybody understanding? So I paid extra 6 in each of these years. Are you understanding till here? So can I say depreciation 100% leading to a tax of 0 in this year, it's a benefit given to me by government? In the வருஷம் benefit கொடுக்கிற மாதிரி கொடுப்போம். Year 2, 3, 4, 5 எடுத்துருவான் 6666. But it is still a benefit. Instead of me paying 24 cash outflow this year, you are paying 0 this year. So look at this. If I go to my actual taxation, first year will be 0, but second year is 30 instead of. So you are paying extra 6. It's like he's saying pay me tax in installment. So this 24 was supposed to be first year's liability, which is being deferred to subsequent years as liability. Are you following, guys? So this year I have a liability of 24, which I am not paying this year, but in year 2, year 3, year 4, year 5 I am paying 6. Are you following, guys? Now how do I account? I hope you got the concept to an extent. How do I account for this? My accounting, I should account for the tax which is not paid this year, correct? How much I didn't pay this year? All of you agreeing with me? This 24 is not paid this year, but actually is it a saving for me? What is it? It's a liability for the future. So future liability I put pay panama save pandra. 24 a year one I should pay 24, but I am not paying now, I am paying in next year. So what is the entry for a liability of future which I am creating now? So 24 is a liability, but should I pay now? I have to pay in the next year. What is the entry for that? Normal entry. P&L account debit to liability of. If I am creating a liability now, in the varsha I create a liability for the future. Like that in our illustration, what's the liability for this year? 24. Crediting liability. This liability is payable in the, what I have to pay this year I am paying in the future. So liability of current year is dash to the future, deferred to the future. So I will call this deferred tax liability 24. Are you following, guys? Okay. So P&L account to deferred tax liability 24. This is the first year or entry. We will come to the accounting in a moment. This is year 1. So let me go and account this over here. This was my statement of. So now I am creating P&L debit to deferred tax liability minus deferred tax liability 24. Hold on, let me do second year also. Okay, so instead I will do it like this. Let me do it on this side so we can do a comparative analysis. If the profit is still 80 and 80, let me not write it here, 0 and 30. Now I am writing. So now my profit becomes 56. Are you following? Now second year what is happening? Second year I am actually paying 30. That means in the created liability of 24 I am paying how much? 6. That means liability is reversing now. So I will pass DTL to P&L 6. So liability is reversing. So I will credit my P&L by how much? 6. So if I come back here, I will credit my P&L by plus 6. Are you following? Now 80 minus 30 plus 6 is how much? 50. Now follow very carefully, guys. If not for AS 22, my net profit after tax would have been 80 and 50. Now because I debited here 24 additionally and reversed 6, my net profit became 56 and if not for the windmill adjustment itself, my net profit was how much? Into 30%. It would have been 24 from 80, 24 and it would have been 56. So where it should have been, are you guys following? So where it should have been 56 and 56, if not for windmill adjustment, because of income tax it became 80 and 50. Now for a true and fair view, I am debiting 24 and crediting again 6 next year, again making it 56. Now the YouTuber will see 56 and tell there is a true and fair view. Are you guys following? Understanding? Now coming to the main point. What is the actual tax paid to government in year 1? 0. What will come in schedule 3 is this, in the rightmost extreme. Okay. Actual tax paid to government is 0 in year 1. What's the actual tax paid to government in year 2? 30. That will not change. But for presentation purpose alone, now I will show in year 1 actual tax payable is 0. But I will create a dummy liability called deferred tax liability 24. Next year you paid how much? 30. But I am reversing. 6. Now what is the net impact of this? 24. What is the net impact of this? 24. So I am trying to show the actual tax should be 24. But because of income tax it became 0 and I am trying to create that, rectify the difference by debiting 24 when the actual tax is 0. And when actual tax was 30, I am reversing and adding plus 6 to make it 24. So deferred tax liability creation this year and reversal is only a book entry for the purpose of true and value. Are you following, guys? Are you getting it, everybody? That's it. This is deferred tax liability. Okay. Perfect. So this I will create in year 1. I will reverse for how many years? 4 years. Why 4 years? Because in this table, the difference was there only till year. In year 6, what is books of accounts depreciation? A asset became 0. 100 was the starting. 20 for 5 years it became 0. Income tax also is anyway. 0. Is there any difference? No. So no need to create deferred tax liability. Only if there is a difference because of income tax provisions, I will create this. Are you following? Yes, such a difference which is there in first year 80 is getting reversed in subsequent years. Are you following? Yes, let's take another income. Let's take agricultural income, for example. In books of accounts, agricultural income 30. In income tax, agricultural income, let's say 30, but exempt, it becomes 0. Now there's a difference of 30. Yes, this difference will forever be there. Yes, sir. This difference will forever be there. Yes, sir. Are you following, guys? Yes, that means I no need to create DTL or DTA. Why? This is a difference which is permanently going to be there. That means I can't rectify it. That means it's an actual difference in profit. Yes, are you following, guys? I'll explain again with the examples. Are you understanding till here? This is deferred tax liability. Now I will take a similar adjustment but be much faster for deferred tax asset. You are going to participate. If you are participating, you will understand. Let's take another example. That's it. Once I finish these 2 examples, I will roughly run through 2 sums for you to get some confidence and the standard gets over. This case also in EBIT is 100, 100. Okay. In this case, the company took a loan of 100 for which interest payable is at 20%. Let's keep income tax rate at 40%, not to get confused from previous sum. And in year 1, interest is not paid. In year 2, year 1 plus year 2 interest is paid. Sorry, yeah. So again I'll repeat the facts. Loan is 100, interest is 20%. Year 1 depreciation is no depreciation. Interest is 20%. Year 1 income tax rate is 40%. Year 1 interest paid is 0. Year 2 interest paid is year 1 plus year 2 only I paid the interest. Are you following, guys? Less. This is as per books of accounts. Year 1 less interest. How much? Books of accounts 20. Sir, why sir 20? Year 1 I didn't pay. Do we follow cash or accrual? So I will debit interest. Ignore principal. Assume principal is to be repaid only end of 5 years. Okay. So this is books of accounts. Whether interest is paid or not, I will reduce. So I will have earnings before tax 80. Now I have to reduce. Let me do working note 1 for tax computation. Year 1, year 2, particulars, whatever. So if I write here book profit, start off with what, guys? 80 and 80. Add back as per income tax. Add back under section 43B. How much I will add back in year 1? 43B says interest will be allowed as an expense only if it is paid. So here I reduce 20, but is it paid in year 1? No. So I will add back how much? Second year? 0. Okay. So now I will get 180. Correct? Now I will do less interest actually paid as under section 43B. Are you following, guys? Year 1 how much I will less? 0. Year 2 how much I will less? 40 or 20 or? Already 80 is reduction of 20. So I will reduce 20. Are you following? Disallowed, or in other words, if you want me to do it in easier way, add back interest. If you add back 20 here, then you can reduce 40. Are you getting it, guys? So what is my book profit as per income tax, sir? Here it's going to be, are you following? The right way to write it is, this will be 0, this I will reduce, because here I don't have to disallow. Year 2 or interest pay panitam. So 80 is allowed. Now year 1 I am reducing y20, again I am reducing y20. Year 1 interest is paid in year 2. So total interest actually paid in year 2 is 20 plus 20. Are you guys following? So less 20 plus 20 you get 160. 100 for first year, 60 for second year. Are you all following till here, guys? Tax is at what rate? 40%. 100 into 40%, how much? 60 into 40%, how much? 24. So I will reduce here tax of 40, reduce tax of 24. Here you get earnings after tax 40 and 56. A YouTuber looking at this will tell, this is the best company. First year income is 40, second year is 56. Inga na nee invest pannu. Ava interest kudukai kaasula avangita. For the company reality. Are you following? But investors looking at this will think, hey, it's a very good company, but it's not in true end. Are you getting the logic? So now deferred tax will come and tell, or AS22 will come and tell, let me try and solve the problem for you. What is the problem over here? This is where you have to participate, see if you're understanding. Again, I will slow down over here. This is the facts, so I went a little fast for you to understand. Now over here, what is the point, guys? What is the difference? My difference table only matters, correct? Year 1, year 2. In year 1, books of accounts, what is the interest I debited? Here also, year 2, 20. But income tax, like year 1, 0. I disallowed everything. Year 2, I debited. So my difference is 20 and, but each 20 has a different meaning. In year 1, income is disallowed by how much? So profit is added back by 20. So you would have paid extra tax on 20 into 40%, which is 8. Correct? I would have paid extra tax of 8. Correct? So look at this. Sir, what is the extra tax? I am not getting it. 80 into 40% should have been, but you paid 40. That is the extra tax of 8. Are you getting it? Second year, they allowed 40. They should have allowed only. So they disallowed, they allowed extra. So my additional debit is, that means I saved a tax of how much? 8. 20 into 40%. I saved a tax of 8. So in second year, if you see, 80 into 40% again is, but I didn't pay 32. I paid only, because you saved 8, because you paid interest. Government is rewarding you in second year. Nee tax interest pay pantiya, take additional disallowance. So in a case where it should have been less 32 and less 32, it became less 40 and less 24. Are you guys following? So it ended up at 40 and 56. Are you guys following? Understanding till here, guys? Okay. Now how do I redo this statement with AS22? How I will redo this? If you follow, Let me rewrite the same thing again. If I rewrite the same thing, let me write again 80 and 80, less the same normal tax as 40 and, but first year you saved 8 up, second year you paid extra, no, first year you paid extra 8, second year only you saved, so you tell me, follow carefully, where I should have paid only 32, correct? So, yeah, where I should have paid only, I paid, so you paid extra, what I should have paid next year, I paid this year because my interest is disallowed. So I paid extra tax of 8. If you pay tax in advance, that's called, it's not income, it's not advance tax, but it's an asset for me. Artha varsham pay panna vendiya fees ippoye pay panta. So it's an asset for me, it's an advance for me, so it's an asset. So what I will do, entry will be deferred tax in asset account, debit 8 to P&L 8. This will be passed in year 1. It's just a book entry. Actually the government I am paying 40 in first year. So now my DTA to P&L is how much, guys? 8. I will add back 8. Second year this benefit is reversed. I am paying only 24. Where you should have paid 32. So second year my entry will be P&L 2, reverse of this, deferred tax, asset. So second year will be negative 8, first year positive 8. Net impact is what, guys? 80 plus 8 minus 40. Here also. Are you following? So instead of 40 and 56, it's 48 and 48. What is this 48 and 48? Nothing but 80 into 40% is 32. 80 minus 32. Second year also 80 into 40% is how much? 80 minus 32 is 48. Are you following up? Understanding, guys? Okay. This is concept. Exam I will not have time for preparing without AS22. What is the difference table? What is with AS22? What is the shortcut, sir? And answer I want in 1 second. That's why I am here. We have a shortcut also, but I can't teach you shortcut without the example. Okay, doubt. Okay, now follow. Before I go to the shortcut, in this scenario, assume in year 2 also interest is not paid. Only in year 3 interest is paid. That time year 1 tax also will be 40. So year 1 will have passed deferred tax to P&L. If I prepare difference table, you will get the clarity. If I prepare difference table, year 1, year 2, year 3. Hypothetical new example. As per books of accounts, interest will be 20, 20 and. But income tax la first year disallowed 0. Second year disallowed 0. Third year allowed 60. Because I paid year 1 plus, year 2 plus, year 3 in year 3. So first year I am going to pay extra tax of how much? 20 into 40%. Second year also you will pay extra tax. 20 into 40%. Third year you are going to save tax on 40. 40 into how much? So first 2 years my entry will be deferred tax, asset to P&L. Third year will be deferred tax asset. This entry is called entry of reversal. The reversal will happen only when the benefit is reversed. Only when the disallowance is allowed in some year. Are you following? Interest pay panna sir life la. Company wound up. Then for the rest of the life, asset will remain as deferred tax asset. But it's actually not an asset. It's only a book entry. Now, this reversal will happen in 1 year or multiple years? I don't know which year it will happen. Depreciation, 5 years. That's why in schedule 3, deferred tax asset and deferred tax liability is non-current asset, non-current liability. It is there for multiple years. Are you following, guys? Clear? Now coming to shortcut. This I understood, sir. How many of you understood logic? Okay, now shortcuts. Sir, I don't know what to do, sir. Logic put in the exam, what to do. Even if you didn't understand till now, it's okay. You can wake up now. Everybody in third floor here, everybody. Exam now, what to do, sir? I don't understand anything, sir. Honestly, I don't understand. I want marks. That's what I want. How do I get the answer in exam without doing all this? Because this in exam I can't do it, only in mind I can do it. There is a shortcut, a beautiful shortcut. Okay. Let me go back to the first example. I will teach you the shortcut also and then sums and standard is over. Now in the first example, what is my book profit for year 1 alone? What is my book profit? 80 of. Go back to the depreciation example, windmill. Book profit is 80. Keep in mind. What is the profit as per income tax? 0. First year it was depreciation reduced by 100, so it became 0. So I will write like this. In year 1 in the depreciation example, shortcut is just 2 seconds. Books of accounts profit is 80. Income taxes. This everybody clear?
Yes, sir.
Always in my shortcut, it's a shortcut only to get the answer. Exam la idha shortcut, don't write all this. Exam la you should act as if you know the concept. You need to understand. Always which is correct? Income tax. Income tax done correct. Book profit is wrong. Like BRS. Okay. Which is correct? Income tax. Income tax is correct. I don't know if the hand is coming or yeah, income tax is correct. Book profit is wrong for my shortcut. So what is book profit?
80.
Income taxes. Always accounting will happen in books. Deferred tax liability asset will happen in books up. So whenever you are wrong in life, you have to come to the correct. So this 80 should become 0. So 80 has to become 0 bits. In books I have to debit what? P&L. In other words, in P&L I have a net profit of. Now 80 should become 0. Apna P&L debit pannuma. So I will write P&L account debit. So if I am debiting P&L, credit can be only deferred tax liability. What is the amount of reduction? Into tax rate. What is tax rate?
30%.
How much? That is the answer for the first case. My deferred tax liability was 24. Following. What about second year? Shortcut. எதுமே புரியல சார். பிரச்சனையே கிடையாது. Shortcut மட்டும். Second year. இதுதான் எக்ஸாம்ல கொடுப்போம். Second year, what is the income over here? 50. What is the income in income tax, sir? 70. Correct? Super. Let's visualize now. Book profit is 50. Income taxes, which is correct. So I have to increase. So I have to increase my profit. Now I will credit my P&L. Therefore debit. You write debit tax asset itself. What is the difference? 20 into 30%. How much? 6. But I will debit deferred tax asset if it's a new transaction this year. This is year 2. Year 1 you already credited deferred tax liability. So instead of deferred tax asset, I will write deferred tax liability. Are you following, guys? That's it. Shortcut. I will do with sums also shortcut. Let me do the interest one also for shortcut. What is this interest? Yeah. In interest example, quickly. In year 1, what is the profit as per books of accounts? 40. What is the profit as per income tax? 100. இது மட்டும் மைண்ட்ல வெச்சுக்கோங்க. Books of accounts profit is 40. Income taxes, 100. Which is correct? 100. So from here I have to one second. Year 1 180 minus 40. This is after tax, correct? One second. What did we take here? Sorry, here because 0 didn't impact, we have to take. Here we took 80. Here we took. Yeah. Here coincidentally both matched, guys. Before and after tax, you take the same values before tax. Other tax we are computing. So before tax is how much here? 80. Same thing, no change. Take before tax, guys. In that example, before and after tax were same. So take before tax. Here it is 80. Here it is 100. Correct? 100 then, guys. Yeah, 100. Same 100. Tax is 40 here. Then only you will get 60. Actually, if you take both also, it will work. Actually, it works for both. I will again rewrite this part. Okay, which one do you want to take, before or after? Ideally both will work. Okay, logic I'll come to it later. So here if you see, after S 40, here after S minus 40 it is 60, correct? Here before is how much? 80, here that 80, correct? Here before S 100. Difference is anyway, why it will be same? Because tax is same. Tax is compute pandra. So you take before, after, it's fine guys. So whichever you take, let's say books of accounts it is 80, income tax it is 100, which is correct. So from here I have to go up. So if I have to go up, I have to credit my, if I am crediting P&L debit deferred tax asset. What is the difference? 20 into tax rate. How much is that? 8. Deferred tax asset to P&L 8. Are you guys following? That's what we did in first year. Clear off. Everybody getting it guys? Before after doesn't matter guys. Both works because the tax is same. Now we will straight away go and do some sums. This is in page, which is which module? Yeah, page 89. Okay, follow guys. Illustration 1, 2. Okay, super. Take illustration 4 for concept. I'm going to do again 2 or 3 sums. Close the standard. Are you able to follow guys? Look at this illustration 4. Omega Limited is working on different projects which are likely to be completed in 3 years. It recognizes revenue from these contracts on percentage of completion method for financial statements 1, 2 and 3. For simplicity purpose, I will write year 1, year 2, year 3 for our quick solving. For books of accounts, the income is 11 lakhs, 16 lakhs, 21 lakhs. Total is 48 lakhs. Similarly, for income tax, I am taking illustration 4 of your study material, deferred tax topic. However, for income tax purpose, it adopted completed contract method. Income is recognized as 7 lakhs, 18 lakhs and 23 lakhs. So 7 lakhs, 18 lakhs, 23 lakhs. Total is. So over the period of 3 years, it's getting adjusted. But in first year, I have a difference of second year to third year. They are asking compute deferred tax asset or logic. I explained to you so long. Now shortcut. Exam I need shortcut. First year by year guys. First year books of accounts income is tax income is which is correct? 7 lakhs is correct. So from here I have to reduce 11 to 7. Reduce by 4. So I will reduce by 4 lakhs. So if I have to reduce by 4 in books of accounts, P&L account debit 2. P&L debit panna 2 deferred tax. What is my difference? Into tax rate 35%. How much? 4 lakhs into 35% is 1 lakh 40,000. This is first year. Second year. Follow with me. Books of accounts is 16 lakhs. Income tax is 18 lakhs. Which is correct? 18 lakhs is correct. So from 16, I have to go to 18. Apna P&L credit pannuma. So I will credit P&L by how much? Not 2 lakhs. 2 lakhs into tax rate. How much? 70,000. But will I debit DTA? Previous DTL reverse panna. DTL to P&L. How much? 70,000. Are you following guys? So third year again you come. Third year books of accounts is income taxes, which is correct. From 21 I have to go to. So I will credit my P&L by how much? 2 lakhs into tax rate. How much? But can I debit deferred tax asset? Munadi create panna deferred tax liability reverse pandra. DTL to P&L 70,000. Look at the answer. Yeah, deferred tax liability 1 lakh 40. It reversed by 17 year 2. So balance is year 3 it became presentation, look at the book guys. This is the difference, our 422. Are you following? This difference is called a timing difference, which in our depreciation example it was 100, 20, 20, 20. In interest 43B it was 20, 20, 20 in each year. Here it is 4 lakhs, 2 lakhs, 2 lakhs. Are you guys following? That's it. Okay. Students are advised to refer full text for CA final. Okay. Next. We'll take one. This is the same concept for all sums case. Quicker if you want to see common sum where students struggle. If I take illustration 1 edukkalam. 1 and 2 are the same guys. If I do 1 means it's equal of doing 2. Then we have to do 2 more concepts. Tax holiday and math credit. We'll go to, okay, we'll do this and then go to math. Tax holiday and standard will get over guys. Are you all with me guys? Yes, do you want sums or no need? Yeah, that's the whole idea. Okay. Now question 1. Very easy. They are giving 2 adjustments. Depreciation as per accounts and depreciation as per, and then unamortized preliminary expense, tax rate 50%. Income kudukliye sir. Eppadi sir pandrathu? Na assume panikren. Idhaal or income na assume pandren. Okay. Books of accounts, income tax. You assume something sir. 20 lakhs sir. Start off with 20 lakhs. In books of accounts, what is the depreciation? In income tax. So my revised income will become, whatever income you assume, difference will be 3 lakhs. In this, yeah, it will be difference 3 because here difference is. That means actual concept is depreciation. You allowed additional depreciation of 5 lakhs like the windmill. Upon first year you gave more depreciation. So what is books of accounts income? 18. Income tax, which is higher. Books, which is low. Which is correct? From here I have to reduce. So reduce means I have to debit my and credit deferred tax liability. What is the difference? Difference how much sir? Into tax rate. So my deferred tax liability will be 1 lakh. Are you following guys? This is for depreciation. But sum is not yet over. So far we saw only one adjustment. But within the year multiple adjustments will come. Correct? Multiple tax differences could come. 43B and depreciation in the same year. Now that is the next one, unamortized preliminary expense. Let me continue or let me do it from fresh. Depreciation you all understood? Yes, sir. So I will again erase this. Now I will do freshly for unamortized preliminary expense. Unamortized as per income tax na enga amortize pannirkom? Books la pannittom. If you did not amortize as per income tax na books I have amortized. So as per books of accounts unamortized is 30,000. So books la I have already amortized. Here I have not because of some section. Sir, don't apply section 35D sir as amortized over 5 years. They didn't tell that. Maybe this is the 1/5, we don't know. So unamortized is 0. So what is the income here? 19 lakh. Here it is 20 lakhs. Correct? Are you able to follow guys? Books of accounts 17 lakh 30. Income tax 20. What's the difference? I should go up or come down now? Go up. How much? 2 P&L 30,000 into how much? 15%. 50% how much? 15,000 debit. No deferred tax liability. Deferred tax both belongs to same year. The year of creation of difference. So now you have a deferred tax liability of 1,50,000. Deferred tax asset of. Can I show them separately or set off? I can set off and show net difference of deferred tax liability 1,50,000. Deferred tax asset 15,000. Net difference 1,35,000. Are you following guys? Clear? Okay. But you can't set off always. They haven't tested so far in institute exam. But you can set off only if both these belongs to the same head of income and income tax. Here both belongs to, so I can set off. If one is PGBP, one is capital gains, don't set off. They haven't tested this even in CA final. But suppose it comes, we are going to be ready. Are you following guys? Booklet is a question now, one head of income kuruturom. Everything PGBP. Are you following guys? Clear? Understanding? Easy? Sir, should I do assumption like this income 20 lakhs? Sir, no need. How I will do is depreciation is 2 lakhs and 5 lakhs. So if depreciation is high in income tax profit is low. So book profit is high. So bring it down. P&L debit to deferred tax liability. Are you getting it up? So I will see the impact of this transaction. Which profit is going to be high? Unamortized. Both are same. Books amortized comes down. Here not amortized, so I will go up. Are you following? Exam no problem. Nothing will happen. Are you following, guys? Okay. This is illustration 1, 2 is homework, guys. Or 2 we will do now. Now math and only 2 more concepts. Let me go to theory of this chapter once. I have this material, but if I just read from this, I don't know how I can call it a marathon, guys. It will be like school. In my school, my economics teacher used to read from book only. I will not tell the school name, guys. Okay. Fine. So if I just read from the book, come on, guys. Accounting difference, temporary, permanent. Now, class if I send the PDF. But I will just summarize now. Full deferred tax theory notes is just 1 page. Most of the notes which we will be doing, I have is 1 page, sometimes 2 pages, rarely 3 sides. Okay. That 3 sides also, next time I will make it 2. Because time was not there, I made it 3. Next time I will again shorten it. Timing difference. We have 2 differences, permanent and all the sums we saw now is temporary timing difference. In this they gave a formula in the book. So I am writing the formula. When taxable income is more and deferred, when taxable income is more, accounting income is less. You have to credit off. So you will create deferred tax. Not able to understand, good. The formula is like that. When taxable income is less, accounting income is, I have to reduce. So I will debit P&L, so I will create deferred tax liability. Are you guys following? That only is there in study mat formula. That only I taught you. But logic also we understood. Okay. If it's a permanent timing difference, where a difference created this year will never be reversed, like exempt income, those kind of cases, no need to create deferred tax asset or deferred tax liability. For example, late payment of tax is an expense where in income tax they will disallow. Penalty will be disallowed, guys. Books of accounts allowed. There's a difference. It will never be reversed. Like this, there are so many differences. Exempt income is the classic example. Income tax income is 0. Books of accounts there will be income. Are you following, guys? So permanent timing difference. No need to create DTA or. Now in the previous sums, we had 2 debits of income tax in the book. If you see here, 140 debit and 8 was added back. In the depreciation example also, if you remember this example, we had 0 and we had. That means the total debit of tax to P&L is of 2 things, current tax and. So I can write tax expense as per books of accounts is current tax plus deferred tax. Are you guys following? So that only will come here. Tax expense is current tax plus deferred tax. Then what is accounting income, taxable income? You guys know accounting income now book profit as per books of accounts. Taxable income is income tax, PGBP income. Next, offsetting I explained. If they should be offset only if they belong to the same governing tax. Now only MAT and tax holiday is what we have left. This one more theory point, very important. Items contributing to DTA. What is that example? 43B. We saw that interest. Can you see one assumption in 43B? I am going against the concept of prudence by saying that adutha varsham if I pay interest, I will set off. Correct? Isn't that against the concept of prudence? That's why for DTA they are saying create DTA if reasonable certainty exists. One more classic example here is if current year is a loss, in books of accounts it will be loss of income tax, it will be 0. Books of accounts will be negative net loss. Income tax will be 0 because we don't show loss, it's carry forward. So now I will go up, I will create DTA to P&L because loss in income tax is savings for next year. In books of accounts I can't set off, I have to pay. But see, in books of accounts, under the year of the income I will pay tax. Imagine in books of accounts, year 1, year 2, year 3, year 4 loss, 0 tax. Year 5, 20 lakhs profit, you will pay tax in books of accounts. But income tax, the loss will be carried forward and set off. So in income tax, if current year I have a loss, this income tax profit is 0. Books of accounts I have a loss, it's going to be negative. So from here negative to 0 I have to go up. My entry will be deferred tax asset to P&L. But you create a deferred tax asset assuming that adutha varsha if profit comes I will set off. Against prudence, sir. You are predicting profit. That's why they are saying unabsorbed depreciation or carry forward business loss, create DTA only if virtual certainty exists that you are going to earn some profits. That only in illustration 3 we did, the 4. In 4 they are mentioning that they would have given somewhere in 4 percentage basis, not in 4, sorry. In illustration 3 when you solve later it's about loss question where they will tell the company feels that there will be sufficient taxable income in the future years for which carry forward can be set off. This is an assurance that I can create DTA. This sum if you see it is nothing but in income tax it's a loss. So on loss whatever is the net loss you will create a deferred tax liability or asset. Are you guys following? Okay, I am not doing that sum because it's fairly easy. We will finish math and then we will decide that. Now last 2 concepts. Quickly let's do it guys. Math. Normally this standard I will take 3 to 4 hours guys. I am being very fast. I am hoping I will be able to follow. Yes, clear guys? Okay. Now this sum I want you to compute deferred tax liability or asset. Sir, what is math, sir? What is math? Minimum alternate tax, which is nothing but opposite of AMT in your syllabus, alternate minimum tax. This is a concept which says even if my book profit is 0, you have to pay tax. Let me explain. Book profit will come as per books of accounts. Then I will do addition, deletion and find PGBP. On this only I will pay income tax rate. Math from PGBP, again I will do some addition, deletion. And I will find something called MAT profit and again pay MAT tax. I should not write MAT tax, MAT is minimum alternate tax. Why this came logic I am not getting into much, but just to be a quick thing, PGBP income tax is exempt if you operate let's say in SEZ. What companies started doing in the tax exception, they started operating in SEZ even though they are not exporting. Class, I will keep accounting office in SEZ, bill from SEZ, but class will happen outside SEZ, tax exempt. So our ex-finance minister introduced the concept called MAT saying, now even if you are a loss-making company or if you are an SEZ, you have to pay tax. So they introduced 3 tax. Book profit you will pay books of accounts tax. PGBP you will pay normal income tax. MAT is a MAT tax which is more of a punishment. It's like a penal tax because you didn't follow law. But now it became normal for everybody. So now in simple, if you understand this concept, you will get it. As per PGBP, I will pay 1 tax. As per MAT, I will pay 1 tax. Okay. So let's say year 1, year 2, year 3, year 4. Let's say as per PGBP, I have to pay tax of 7,000. As per MAT, I have to pay tax of 6,000. What is going to be the actual tax I will pay? Actual tax, how much? Okay, let me just change it. Let's say this is 8,000 guys. What's the actual tax I will pay? 8,000. I will pay 8,000 because MAT is minimum alternate tax. Second year, PGBP is 9,000, MAT is 6,000. What is the actual tax I will pay? Or let me make this also 8. Both years 8. How much I will pay? 9,000. I should pay here whichever is higher. So our company kekran, first year I was supposed to pay only 7. Because of your stupid provision I paid 8,000. Now second year I am supposed to pay only 9. But at least you give me 8, no. So I will again make me pay 9. That's whichever higher correct. So second year what they are saying, I understand you are not happy. Where you are supposed to pay 7, you paid. So you paid extra. That I will give you as something called MAT credit. This credit you utilize later. He's saying, so second year you are supposed to pay 9 off, but I have a credit of 1000. I will do 9 minus. I will pay only 8000. Are you following, guys? Let's go to third year. Third year PGBP is 11,000. MAT is 8,000 again. How much I should pay? 11,000. Do you have any credit? No. Because you paid what you are supposed to pay. Fourth year, here it is 11,000. Here it is 15,000. How much I will pay? What's my credit? You got a credit of? Next year, here it is 11,000. Here it is 12,000. How much I will pay? What's my credit? So plus 1,000. Total credit is 5,000. Last year 6. Here 11,000. Here I am paying only 9,000 is coming. How much to pay? I should pay 11,000. But I have a credit of. Can I use full 5,000? No. I can use only up to this much. So minus 2,000 I will pay how much? Balance credit leftover is 3,000. Are you guys following? In simple now, I will pay whichever is higher. Whenever MAT is higher, the excess will become my credit which I will carry forward. That means in this scenario where I paid 15,000, my breakup is 11 plus 4. So 11,000 is PGBP plus 4,000 is the excess of MAT plus if any deferred tax, which is a book entry. Correct? So now sir, how to do sum? How do I do sum? Everybody clear with this, guys? In sum, you solve this sum as if MAT is not there in the question. When a MAT sum comes, sir, I want exam shortcut, sir. When MAT comes in exam, do it as if MAT is not there in question. Be blind towards MAT. How do I do it? What is accounting profit? 6 lakhs. What is profit as per MAT? I can't see MAT. Okay. What is profit as per income tax? 60,000. Do as if MAT is not there. What is accounting profit? 6 lakhs. What is income tax profit? Which is correct? So from 6 lakh it has to become. I have to reduce a debit. So I will write P&L account debit to deferred tax. What is the difference? 5 lakh 40,000 into what rate? Tax rate. As per income tax, how much? 20%. So it will be difference is 5 lakh 40,000 into how much? Is going to be my deferred tax liability. Do the sum as if MAT is not there in question. How much you get? Deferred tax liability 1 lakh 8,000. As if MAT is not there. Are you following? Now coming to computation, guys. In computation, now I will erase it because now MAT is relevant for me. Now when I am computing quickly, what is the profit as per account, sir? 6 lakhs, not relevant. For tax I have to compute PGBP versus MAT. So income tax profit is 60,000 into 20% is how much? 12,000. MAT profit pathina 3 lakh 50 into 7.5 how much? 26. This is like this chart where we got, where is that? Yeah, how we had two things we had to compare, PGBP and MAT. So here I will compare which one? PGBP 12,000 with MAT of which I will pay 26,250, but my MAT credit is 14,250. So my P&L debit will have three things. PGBP current tax will be 12,000, MAT credit will be 14,000, book entry of deferred tax liability will be 1 lakh 8,000. Correct? So now if you come down and see, I will have three things debited over here. 12,000 will be my PGBP, 1 lakh 8,000 will be my deferred tax liability, 14,250 will be my MAT credit. Are you guys following up? Genuinely understanding? Anybody wants me to repeat? Yes. This part. Okay, I will repeat again. Follow, guys. Everybody understood how 1 lakh 8,000 came? Yes, do as if MAT is not there in question. Then after this, you compute what is going to be my PGBP income as per normal income tax provisions. Compute what is going to be my MAT income as per MAT provisions. That's our question value. PGBP profit 60,000 into 20%. MAT profit 3,50,000 into 7.5. You got 12,026. 250. So you know MAT credit is 14,250. So my total debit to P&L is going to be basically 26,250, guys. MAT is what I will pay, but this MAT has a double breakup. 12,000 is PGBP, 14,250 is MAT credit, and I will now include deferred tax liability 1,08,000. So my final answer is going to be this one, 134,250, which is nothing but 26,250 plus deferred tax liability of 1,08,000. Are you guys following? Our logic என்ன சொல்றானா, for the purpose of MAT, for the purpose of deferred tax liability, ignore MAT because MAT is a penal tax in nature. Are you following, guys? How I gave it as notes over here? Very simple. MAT is in the nature of penal tax. Payment of a higher tax where normal tax is nil or zero or any other case. Deferred tax should be computed on the basis of normal tax and not on the basis of MAT. That's it. Are you guys following?
Yes,
Clear, guys? With this MAT also is done. We just have with some. Can we finish that and go for a break, guys? Can we finish this? Are you understanding the standard? Hello? Okay. Now tax holiday is easy. If you understand, now we take this example. Year 1, year 2, year 3, year 4, year 5. I am taking that depreciation example, windmill. In that windmill example, if you remember, depreciation as per books was 2020 each year. Income tax was 100, 0, 0, 0. So my difference was 20, 20 and 20. So my deferred tax liability in first year was 24 into 30%. Next year reversal is 6 in each of these years. Correct? This example, do you remember, guys? That means in the first year I will create P&L to deferred tax liability 24. In subsequent years my reversal will be DTL to P&L 6666. Are you guys following?
Yes, sir.
Now let's say in year 2 and 3, now this difference is because accounting profit and tax profit had a difference. Now assume in year 2 and 3 government gave me tax exemption. Nee tax pay panna, you are doing a great job. Special benefit for you. Don't pay income tax. So year 1 I have a difference. Year 2 and year 3 is going to be the same. Income tax in both is going to be 0. Again year 4 and year 5 I will pay tax up. So this difference of 80 is reversing as 20, 20, 20, 20. But in year 2 and 3 when it is reversing the depreciation, income tax payable is 0. So when there is no income tax difference in my books, should I create DTL, DTA? No need. So out of 80, my reversal is split into 2. This 20 plus 20, how much? For which my income tax is 0, so there is no impact. And this 40 for year 4 and 5, where there is a reversal of 40, for this into 30%, how much? 12. That means my total deferred tax of 24 in 24, 12 is reversing in tax exemption or tax holiday period and 12 is reversing after tax holiday period. Going back to the first example, the main reason why we created deferred tax liability and asset is for what purpose? Because of the tax difference. Inga tax difference in these 2 years. So I will create deferred tax liability not for 24. I will create only for 12, which is nothing but out of 80, what is the one creating difference for me? Only 20 and 20 in year 4 and 5. I will create only for 40. So I will 40 into 30%. I will create only for 12 and reverse 6 and 6. Are you guys getting it? Let me do a sum to understand this from our book itself. We don't, in previous study map, we didn't have a sum for this. In practical questions, if I remember right, they've added practical question number 1 and they've added many other sums, guys. Okay, these are the GST. This one all is simple, guys. This question you do it later. Last practical question 4 is a completely new sum which is added, which is a capital gain sum. Beautiful sum, but very easy. Very easy means the answer you will know how to do it, but ensure you do that. It's very easy, not a new concept. It's what we already know, guys. Nothing difficult. But here now I am focusing on practical question 1, which is my tax holiday. Okay, last question in deferred tax. Are you all following, guys? Clear? Look at this. Y Limited is a full tax-free enterprise for the first year 1 to year 10, and it's in the second year of its operation. Now I am in the year 2. Depreciation timing difference. How we got over there 80 in windmill. Here it is 200 lakhs and 400 lakhs respectively in year 1 and resulting in a tax liability. That means deferred tax liability. So year 1 is, year 2 is, cumulatively it is. That means 600 was provided as an additional depreciation in income tax, but not provided in books of accounts. That's why I have that's why you have deferred tax liability for future. This year you have saved, future you have to pay. From the third year, it's expected that the difference would reverse by 10 lakhs each year. How that 80 reversed by 2020, how the 24 reversed by 6666, that 80 tax impact. Here it's reversing by 10 in each year. Year 3 10, year 4 10. Totally how many years it will take to reverse fully? Mottama 600. Each year reversal is, it will become 60 years to reverse. That too starting from third year. That means I will say approximately 63rd year only it will reverse. Are you following? Assuming tax rate is 40%, they are asking you to compute deferred tax liability at the end of second year and any charge to P&L account. Are you guys following the question?
Yes, sir.
I can give you time, but we are in marathon. Let me solve. You follow. Recording follows. You can pause and try it if you have the time. Okay. Now, year 1 plus year 2. Cumulatively, my difference is 600. In this 600, up to year 10, how much is being reversed? Up to year 10, how much is being reversed, guys? From year 3 to year 10, how many years? 7 years. Each year it's reversing by 10. How much is reversing? 70. So out of 600, 70 reversed up to year 10 and balance of 530 is reversing after year 10. I am focusing on exam what to do. So how much is reversing in tax holiday period? How much after tax holiday? 530. So I will break my 600 into, hey, 70 is reversing in holiday period, 530 in other period or after holiday period. Correct? Now holiday period, I need not create deferred tax asset or liability because in this entire period my income tax is 0. So whatever provisions you do, difference varliye books la. The YouTuber will be both are same. There is no impact in profit because of income tax. So I need to create the adjustment book entry only for 530. So my entry will be, I need to create like question liability in solli. So I will create P&L account debit to deferred tax liability. 530 into what percentage he gave? 40%. How much? 212. Are you following, guys? But this I will split it, meaning this 70 will be from the first. Answer is 212. Let's go check that once. Answer will be 21. How much we got? Check that once. 530, 60 minus 70, 530 into 8 years. Okay, it's correct. Year 3, 4, 5, 6, 7, 8, 9, 10. 8 years. You're right. 8 into 10 is 80. So holidays 80. We'll be left with 520. So 520 into 40% is 208. 8. That's the answer, which is 48 plus 160, which is, but he is showing a split. What split? What is year 1 deferred tax liability?
200.
Year 2 is 400. Total, how much is being reversed? 80. First I will reverse from first to 200, correct? So from this 200, how much is left?
120.
From this 400 full. Now you do 120 into 40% is 48. Ida in the 48. 400 into 40% is 160. Both years add panna you get 208. Are you guys following? Clear? Able to understand, guys? Okay. Fine. Perfect. Same thing we have over here. Tax holiday. Booklet. This is the period during which income tax is nil. Hence, timing difference originating and reversing in tax holiday period. Ignore. What if within the 10 years, what they are trying to say, within the same 10 years, 600 came and it got reversed in this same 10 years. No DTA detail. Because within the holiday period, difference is coming in reversing. DTA detail. The timing difference reversing in tax holiday period. Ignore. In our question now, 80. Timing difference originating and reversing in period other than tax holiday. Create. In our question now, that 520 is created before tax holiday and reverse the after tax holiday. I will create DTL or DTA. Are you guys following? Everybody genuinely understanding, guys? We did, I think in 1 hour, I think we did this whole standard. How many of you studying first time, or those who skipped able to understand? Skipped understood? Sure? 100%? At least few basic sums. Okay. So with this we will close AS 22. At your end, the last practical question number 4. Try to do it. I am marking these sums because these are new questions added in new study mat. Okay, do it. If you are not able to get it, maybe tomorrow or day after I will quickly discuss, add it later. With this, we will go on a break. First session is done. We are done with AS 4, AS 12, AS 22. See you in the next session. 15 minutes or half an hour. I always democracy, guys, majority. How many of you 15 minutes break? How many of you 30 minutes break? I said I will go with democracy. We will start sharp at 5:30 p.m. Sharp we will go on till 7:30, guys. Fine. See you all at 5:30. Thank you. Yeah, fine. So let's resume, guys. Previous session, if you see, we did only 3 standards, which is AS 4, 12 and 22. This session we will target to do a few more standards. I have in mind AS 2, AS 10, AS 16 and AS 3. Of course, how much more possible we will do. I will start in any random order and we will do these standards today. I didn't want to do any other difficult standard because already 22 is something we discussed in the previous session. So let's proceed, guys. I'm hoping this pace is fine with everybody. Yes, sir. Everyone able to follow? Okay. Now let's go to the next one, which is AS2. Okay. AS2 talks about valuation of inventories. I'm again going to finish the whole standard with a story. Once AS2 gets over, similar story for AS10. Okay. What is this story all about? Understand this story. The standard gets over. We have the same points in our AS2 notes. AS2 also is just 2 sides. Okay. But I will come to this a little later once we finish our story. Okay. Let's take manufacturing of lace chips. Lace chips, whatever flavor, guys, whatever you like. Let's say for a moment I want you all to visualize and travel to the lace factory. So now we are doing a field trip in accounts class. Only visualization, you are in the lace factory. Whichever location is this? Which location is in India? I don't know. Somewhere it's there, guys. Okay. Let's assume Delhi. Near Delhi, guys. Now, pollution, so I'm guessing the factory also should be around there. Okay. Now let's say the factory gate is over here for lace chips. In the factory, visualize the process. First to the gate, what has to come? Raw materials. What is my raw material? The potato has to come. So the potatoes have to come there, and then it goes into my factory one by one. We will go experience this process. Okay. First, for potatoes to reach the factory, what should I do? Wash it up. For it to reach the factory, what should I do, guys? Transport it from the farmer, the raw material source. Where is the farmer located? Let's say he is coming from Andhra Pradesh. Andhra Pradesh. Farmer is sending the potatoes. It's reaching the gate, factory gate in Delhi. Now, until it reaches the factory gate, you tell me what are all the expenses you will incur if you are late ship, sir? Loudly. Transport charges, recording online. Try to repeat the answers, guys, or give me options. Transport charges, then insurance is one expense we will have to incur. Next. Very good. Loading and unloading charges. Anybody else? Taxes, like let's say toll tax, all of that. Next. Wages of for the driver of that lorry, for him to pay wages. Then that comes in transport, wages, petrol, diesel, all of that. Next. Packing of those potatoes into those dabbas, all of that packing expense. Sorry? GST is an expense. What else, guys? Potato no GST, I leave it, guys. I'm focusing on concept. Potato no GST. Yes. Okay. Now, we are in accounts class. You all told me all these expenses, loading, unloading, freight, all of this. Potato cost. You have to pay for potatoes, sir. Raw material cost. Empty truck will come. Okay, I have to pay for potato. All these expenses, Ria told it earlier. So all these expenses, if I add, it will reach my factory gate. Once story gets over, half the standard is over, guys. Okay. Once it reaches factory gate, what I will do with these potatoes? What I will do? Immediately throw it in the factory and make chips up? No. First I will do something called quality check. Very good. Inspection, is it of good quality? So there will be a quality check. The bad quality potatoes will be thrown out. The good potatoes will be kept in the warehouse. Directly I will not go and manufacture. It will be kept in warehouse, which is basically a cold storage. Because potato will be kept there for 1 year, 2 years, nothing will happen, it will be fine. Now after that, that means they will keep manufacturing every day. Potatoes are not cultivated throughout the year. But the lace company will have potatoes always because of cold storage. Same for maza. For example, maza is available throughout the year. But mangoes are, because I kept in cold storage, they are available throughout the year. Are you guys following? Now after cold storage, what happens next? From cold storage, whenever I want, I will take these potatoes and then send it to my factory, which is another big building where I will start processing. Okay. Again, after I take out from cold storage, I will again do one more quality check. Very good. I will do one more second inspection because the potatoes would have stayed in the cold storage for, let's say, 2 to 3 months, 10 months, 11 months. I should again check up. Then again some potatoes will be spoiled. I will throw it. The rest will go in. First quality check why I am doing. If you don't do the quality check in the starting, if one good potato goes with other potatoes, everything else will get spoiled. So I have to take it and throw it out. Correct? That's our group of friends is. If one potato is spoiled, all the potatoes will get spoiled. I'm talking about potatoes, guys. Then we put it into the warehouse. Now all the potatoes in the warehouse are good. But even after being in cold storage, when I am doing my second inspection, still some potatoes will be spoiled. Some potatoes are like that. Whatever you do, they will be spoiled only. You can't do anything. So that we have to throw it. Are you following, guys? Now, then we go to the factory. Immediately I will throw it into the factory and become chips up. What I have to do? Wash it once first. There will be cleaning process. Then the skin has to be peeled. That and all machinery will take care how the skin is peeled or it will be cut. Then it will go over here. Then only it goes into that big frying container, pan of big frying container, where I will be adding what, guys? Potatoes, then oil, then sugar. Okay, sugar is added in today's chips. Then salt, all the spices, masalas. I will add some cholesterol. All of this. We will add all of this. Then finally from this, what comes out? Chips comes out. Now you are in this factory. Visualize. No, you saw some chips in front of you in container. Can I put my hand and take and eat it? Why? Why can't I put my hand and take and eat it, guys? No. They will not allow you to do it. It has to be sterilized, it has to be clean. So then it comes out, then only they will add that flavor. Flavor will be added, that sprinkles will be added once it's out. And then it comes over here, then again it goes into packing. And then finally you have that lace packet which is packed, freshly packed. Today's manufacture date will be printed on this. From here, where it will go? It will again go to consumer immediately. I will again be given to one more warehouse. But this time this is warehouse for finished goods. Earlier warehouse of raw materials. From this warehouse, whenever my distributors ask for it, I will send it back from the Delhi factory to Andhra, Chennai, here and there. I will keep sending. Correct? Now AS2 says, what is my cost of inventory? It says, until that final chips packet which was ready. This final chips packet which is now packed and ready, that can I take and eat? Yes, they will allow. You are an auditor. They will say, sir, you want to taste means please come to this part of the factory where just now freshly it's packed and come. You can take this and eat. It will be hot also, you can eat it. Correct? So you can eat over here. That means until the chips are ready in the final finished goods, from the time it left the Andhra Pradesh farmer till it became chips which you can actually open the packet and eat, all the expense that you incurred for this, let's say you spent all this put together, you spent 30 lakhs for example. Okay. In this 30 lakhs, you are able to manufacture, let's say, 3 lakh packets of chips, including everything put together. So what is the cost per unit of chips, sir? 10 rupees. Now I am adding, from this cost I am adding another 10 rupees profit. Add 10 rupees profit, I am selling one packet of chips for 20 rupees is what the company is doing. Okay. Now, imagine in this entire process, actual expense is not 30 lakhs. It is actually 50 lakhs. But I forgot to include 20 lakhs. My accounting was wrong. So I forgot to include 20 lakhs. So actually it's 50 lakhs. Now what is 50 lakhs by 3 lakhs? By 3 lakhs how much? 16.67. But still I am selling for 20. Still I will make profit of 3 point. But I thought my profit was 10, but it's only 3.33. Are you getting it? Now for whom it will be loss? For lace company. Imagine this expense is much higher. Instead of 16.67, if my cost itself was 26.67, loss for me. I would have better close down the factory, correct? That means valuing this rupees 10 is very important. Then only I can add my profit. Cost plus profit. This standard talks about how do you value this 10. How did the 10 come? 30 lakhs divided by 3 lakhs. 3 lakhs is my finished goods, easy. But the 30 lakhs is the total of all of this. Correct? That is the cost necessary to make this 3 lakhs units. Are you following, guys? Now, director of lace, let's say Satya, is sitting in Chennai. He is not even gone to the factory. For director, Satya's salary is 2 lakhs per month. His salary is 24 lakhs. Will I include Satya's salary in this? No. Why? The money paid to him is not relevant for making my inventory of 10 rupees per chips packet. Are you following? Within this factory, there are some employees who are doing inspection of this chips, cleaning the potatoes, doing that mixing, all of that. Will that salary be included here? Yes. Basically, for this process, whatever I am incurring, I will include it. Now, if we go here for cost of inventory, now again come back to this example, sorry, for a moment. If I come back to this example, now here initially at any point, let's say today we all left and went to lace factory. In this first warehouse, there will still be some potatoes always. That means in lace factory, always there will be some potatoes. I call it as raw materials. Always there will be oil, sugar, salt will be kept and stored up. They are raw materials used for chips. Always in lace factory, there will be finished goods of chips ready which I can take and eat. So finished goods also is there. Always whenever I go today also, in the manufacturing unit, some chips will be still there where frying is happening. Yesterday was 31st March. Do you think 31st March factory is closed? No. So 31st March evening, some chips is ready but not yet packed. Some quantity of chips is ready but not yet packed, or some chips is ready, flavor not yet added. That is called work in. Work in progress, you can't buy and eat. Raw materials, they will not let you buy and eat. They bought potato for using. Which you can buy and eat? So my inventory for any company into manufacturing sector will have three. Raw materials, work in progress, finished goods. Our example, potatoes are raw materials, salt, spices are raw materials. Work in progress is the chips which is going in the process, half done, half yet to be done. Finished goods is the final chips packet. Are you guys following? Now with this logic, if I go and see what is definition of inventory, it is nothing but finished goods, work in progress and raw materials. So here if I go and see, can you see definition of inventory? Inventory is an asset held for sale in ordinary course of business, lace packet, finished goods. In the process of production of such, sale, work in progress. In the process of production of such sale, chips is being made. In the form of materials, potatoes or supplies, salt, to be consumed in the production process. Are you following? That is my raw materials or rendering of service. For rendering service, I need raw materials. What do you mean by this? See, for lace example, raw materials, work in progress, finished goods makes sense. For rendering service, why will I use materials? Doctor service, injection. That is not a big cost. Vaccine, or let's say, take some other, you went to barber for a haircut. Sometimes they will use for your hair, they'll put some spray, they'll do some hair wash, they will use some shampoo for that, guys. That shampoo is materials used for rendering service. So for the barber, his raw materials will be the shampoo that he is using for rendering of service. Are you following? So inventory can be these three. Finished goods, work in progress. Our definition is held for sale in ordinary course of business, finished goods. In the process of production of such sale or held as materials or supplies to be consumed. These three are my, what to say, definition of inventory. This standard says inventory is valued at lower of cost or NRV, whichever is. Use the word only NRV. Can I say NRV or fair value, whichever is lower? No. It's not the same. Fair value NRV is different. Okay. Why whichever is lower? Concept of prudence. As of 31st March, my iPhone, I have 1 lakh cost of iPhone. I'm going to sell this iPhone for 1 lakh. iPhone definitely vaanguvaanga sir. It will get sold out. But why am I still showing cost at 1 lakh? It's going to be sold. But why whichever is lower? If I show 1 lakh 50, sir, definitely this iPhone they will buy, sir. Dhoni signed 10 iPhones. They will definitely buy for 5 lakh 50,000 rupees. Why can't I show at 5 lakh 50? Why should I show at 1 lakh? Prudence concept. What if before they buy, fire came, all the iPhones burnt? Then my loss will be 1 lakh or 5 lakh 50? 1 lakh. Even though Dhoni signed, my loss is going to be 1 lakh only. Don't include notional gain. So prudence concept, what I can lose. Are you following, guys? Now this whole standard revolves around me trying to find out what is, I will come to NRV a little later. Cost is this example total. In standard they have defined cost as, very simple, if you see, they have defined cost as three things. Yeah, perfect. Is it visible? Yeah, cost includes three things, guys. Questions now, they will ask questions only in this, which is included, which is not included. Cost of purchase, cost of conversion and bringing cost. Nothing new. I'm going to connect the whole standard to our example. Cost of purchase. Keep in mind, until those potatoes reach the factory gate. What is it? Purchase price, duty and taxes, freight inward, other expense directly attributable to the acquisition until goods reach the factory or godown. Until it comes to godown or factory gate, whatever I incurred, petrol, diesel, driver beta, all of that. GST, someone told, sir, GST. Will I include GST also? Simple. Sir, tax what to do? Input tax credit available, reduce. It's not a cost in GST. Credit not available, add it. That's the question. So less duties and taxes which are refundable, trade discount, rebate or other similar items which are deductible from my cost, discounts, trade discount, not cash discount. Are you following, guys? This is cost of purchase. Now the potatoes reach my factory gate. Are you following? After this, now it is until this potatoes become chips packet. Whatever I incur, I have to add. So until the potatoes become chips packet, they classify that into cost of conversion and bringing cost. Cost of conversion means converting the potatoes into chips packet. What is that? Cost of conversion. Direct material and direct labor, potato expense. Direct labor, people who are cleaning those potatoes, frying it, all of that. Variable overhead. What is variable overhead? No, that plant and machinery I purchase for manufacturing, for frying the chips. Do we do manual? Machine only cuts that. Machine only does everything. It's fully automated. Correct? So now for that plant and machinery, I purchase the asset, but asset has a benefit of 10 years. So 10 years I will get chips from that. So I will take full asset value or depreciation on the asset. Depreciation on that asset because that day's benefit. Are you following? So I will take depreciation on plant and machinery, variable production overhead. Are you following, guys? In costing, everybody have studied overheads is of two types, variable and I am not going to discuss what is it, guys. Variable is basically increases when output increases. Fixed is always going to remain the same. For example, class. Even if class is not there for 1 month, rent becomes fixed cost. Variable expense, only when class is there, current will be spent. Are you following, guys? So I will include even variable production overhead. All my POH, guys, production overheads, but in that fixed overhead alone. So production overheads of two types, variable and. So I'll explain this part. Here they are saying, for my inclusion, there is a beautiful logic. Production overhead is of two types, variable overhead and. After this we have two more overheads, admin overhead and. Will I include this in cost of chips? Admin overhead is for Satya director I paid up. Satya director admin overhead I will not include. Why not selling overhead I won't include? It is incurred after chips packet is ready. For chips I got some celebrity through the advertisement. That is my selling overhead. It's after chips is ready. I will not include. Are you following? Only until chips are ready. In that production overhead, variable overhead will be actual overhead incurred divided by actual output. Because you know in costing, variable overhead increases with the increase in quantity, output, correct? But for fixed overhead, we will divide what, guys? Actual fixed overhead divided by a new term here called normal capacity. Beautiful concept. I can't get into the full detail, but I'll just give you a quick brief. Here, if let's take class itself is not incurred. I mean, class itself never took place, sorry. So my actual electricity expense will be, number of students are, let's say 100 students came to class. So my expense is, let's say 10,000 rupees for electricity bill for a month. So my expense I will recover per student is 10,000 divided by 100. No need answer. Are you getting it, guys? But in this, even if students don't come, my rent, let's say it's 1 lakh per month. Students are 0. If I don't keep class, then I can't divide 1 lakh by 0. I can't tell I won't recover this. So I will estimate, suppose class irunda, or reasonable or 30 per or minimum or 30 students will come. So that is what I budget. My normal capacity, what I can expect normally, it doesn't matter about the class size. If I am taking class, let's say 30 will come minimum, then I will divide 1 lakh by 30, I will include in the fees of it. Are you following? If more than 30 come, it's good for me. If less than 30 come, it's not good for me. So I can't do those changes, I will just stick with 30. Are you following, guys? It's like saying, let's say I am quoting fees for class, it's rupees 5,000 per student, for example. How that 5,000 is considered, we will estimate, okay, for 1 month electricity bill is so much, total expense, material cost, AC cost, all of this, divide by number of students. We can't predict the number of students until students come. So we will estimate, okay, based on past trend, 30 students are coming. My rent is going to be 1 lakh. That means if at least 30 students come, I should get break even. So I will divide 1 lakh by 30. Whatever comes, I will add into the class fees. Are you following, guys? So that is what happens here. Fixed overheads based on normal production capacity. Are you following? If actual output is less than normal capacity, or else use actual output for overhead recovery. This is another very important point, not tested in old syllabus. New syllabus we have sums on this. Very simple. Let's take the same class example. 1 lakh is the rent for the class, where I am estimating 30 students to come. So per student, how much I will recover? 3,000? 333. So I should keep my fees more than this, correct? Now imagine actually only 20 students came. What is my cost? 1 lakh divided by 20, how much? 5,000 something. Now when I debit to my P&L as expense, will I debit 20 students into 3333 or will I debit 30 into 3333 or will I debit 20 into 5,000? Are you getting it, guys? For my class, which I will debit? If I do 20 into 3333, you are not following the principle of fixed. You are using actual, you are following principle of variable overhead. You are not following fixed. Because this 20 I will never know, correct? So I cannot take this. Are you getting it, guys? I can't take 20 into 5,000 also. Again you are taking what? Actual. Because I can't predict the actual, minimum I want to recover how much? 1 lakh. I will do 30 into 3333. So my P&L debit will be 1 lakh. Incur panna expense debit pannidlam. Are you following? But if it crosses 30, let's say it becomes 60. What is the cost now? 1 lakh divided by 60. 1667, correct? Now this time I am giving option 60 into 3333 or 30 into 3333 or 60 into 1667. Now if I take 60 into 3333, what's the answer? 1 lakh 99,980. What I incurred itself is 1 lakh. How can I recover 1 lakh 99,000? So this is not right. I can in 30 into 3333 or 60 into 167, both are 1 lakh. That means what I will recover is 1 lakh. Now they are saying if the actual output is more than, I estimated only 30 students, but I got 60, that means I can take 60 into 1667, taking lower is, I don't, lower is the loss I do. So I will take more than 30. So the standard says, if you go back and read, fixed overhead is based on normal production capacity, which we took as 30 in our example. If the actual output is less than normal capacity, if the actual output was only 20 students, so at least na spend panna recover pannu 1 lakh. So I can't do it less. Or else use actual output. If the actual is 60, use 60. Because in both, in the crux is, I should at least recover 1 lakh. அது நீ என்ன ரேஷியோல மல்டிப்ளை பண்ற? அது 30 கீழ இருந்தா 30 தான் எடுக்கணும். அப்பதான் 1 lakh வரும். But if it's more than 30, take the higher number but reduce the price. Because if more students come, I can reduce the fees. So I will take the actual. Are you following up? Getting the logic, guys? It's still much in depth, guys. I'm just trying to brief on top. Clear? This is important for exam. That's why I'm spending time. Whichever I feel is important, I'm spending because they haven't tested, but we have some. Clear? I don't know how many of you are even aware of this. Fixed now, what people think is normal. If the actual is more than normal, then I will take the actual. Are you following, guys? Next, bringing cost. What is bringing cost? The chips, once it's ready, can I eat it? We have to pack it, so other costs necessary to bring the inventory, chips, to its present condition and for it to come to the final godown where I can take it and eat. For that, what all expense I will need? Packing, all those expenses, transportation, all of that. Primary packing, guys. We are not talking about secondary packing. Primary packing now, let's say toothpaste, until that dabba, which is basically needed. Secondary packing is again putting in one more attapetti, again keeping one more big attapetti. No, all those are not included. Primary packing to its present condition and location where I can use the product. Are you getting it, guys? In simple, I will not remember all. I just remember cost includes cost of purchase, cost of conversion, bringing cost. Cost of purchase, cost of conversion and bringing cost, which is nothing but until the raw material becomes finished goods. Correct? You can keep any example for this. Exclusions from cost, very important. MCQ and all they asked. In the latest MTP, there is a mistake in the ICA MTP, which we will correct when I go to MTPs. Exclusion from cost. Now, this we already discussed. Okay, one A, B, C and D. Selling overhead we already discussed. I will also add administrative overhead. Again, I am not writing specifically AOH exclusion because it depends on which AOH. AOH in the factory I will include it. AOH outside factory I will not include. But SOH wherever I incur, I will exclude. Are you following, guys? Abnormal cost will be excluded. This also I will give you an example. Interest, will I capitalize or not? Will I include in cost of inventory? You have to take principles of AS 16. We will do that today. What is AS 16? Borrowing cost. In borrowing cost, if you are going to capitalize interest, then I will include in AS 2 also or AS 10. So basically, for interest, I will make a simple chart. Have I incurred interest as per AS 16? I will check first if it's a qualifying asset. Yes means I will go ahead and, but capitalize can be as per AS 10 PP or AS 2 for inventory, or it can also be for AS 26 intangible assets. So if I am taking loan for construction of inventory or making inventory, if it's a qualifying asset, then I will include. Classic example, Casa Grande, constructing apartments. For them, apartment is an inventory. For that, they took a loan. On that interest, I will capitalize. Manufacturing of wine. Wine takes 3 to 4 years. Qualifying asset. On that loan, interest, I will capitalize. Are you following? That's it. So, standard says, interest cost subject to AS 16. Go ask AS 16. It's diverting us. Are you following, guys? This is the point where there is a mistake in the MTP, guys. MTP, there is one MTP or RTP. MCQ is given where storage cost if incurred for finished goods. I think it's MTP. Latest MTP for May 2024. There is an MCQ where all the 4 options are wrong. The key is wrong. If you read, you will know. Simple. In our example, which storage cost I will include? The first warehouse, cold storage, I will include. Once ships become ready, one more warehouse for finished good, that I will not. The wording says storage cost if incurred for is excluded. So storage cost for raw materials, which is necessary part of my production, will be included. Are you following? In the MTP question, they told both are excluded. And my answer is there. Go check it out. Leave it. Storage cost up to finished product is included if it's necessary for my production. Sir, summa I am storing, sir. Then I will not include. It's needed for my production. Are you following? For example, Maza is classic example. Mangoes have to be stored because November, December, Jan in winter season we don't get mangoes, but we get Maza. Only if I can store, I can sell Maza. So that is necessary. Are you following, guys? That's it. This is the inclusion exclusion. Exclusion la MCQ lo kepan, guys. That's why I am insisting. What are the 4 exclusions? Interest subject to AS 16. Storage cost which is necessary, I will include, otherwise I will exclude. Generally, storage cost if incurred for finished goods will be excluded. SOH and abnormal loss. What they are saying, normal loss is normal for everybody. So I will include in part of my cost of production. Abnormal loss is because of some mistake you did. So you can't recover that from the customer. Are you following, guys? This abnormal loss, let me give an example which is equal to an exam sum. Let's say Bharatwaj went and purchased 100 apples, not for him to eat, guys, to sell it. He purchased 1 apple at 40 rupees. How much is Bharat? It's an exam sum, but apple badla metal. One apple is how much? He paid. Bharatwaj wants to sell these apples at some price, let's say 60 rupees per apple. So 100 into 60, he wants to sell it for. But when he bought the apples from Kashmir and came here, in the process of train transport or flight, whatever he did, 10 apples got spoiled. Because of the transit, they were throwing in the flight here and there. So he was left only with. Now what he will do? What if you are in Bharatwaj's place, what you will do? Let's say you want a profit of 20 rupees per apple, guys. That's your idea. Now, what you will do now? Okay. 4,000 is my apples divided by 90. How much is per apple now? 44 point. My new cost becomes 44 point. That means in my trading account, instead of writing 100 into, now he will write 44 point. This is normal loss absorbed in my cost of goods. Then he will sell plus 20 rupees. He will sell for 64.44. After it came to Chennai, he kept in the shop. Because of his negligence, he didn't, in lunch break, he didn't lock the door or something. Another 5 apples got stolen in lunch break. Now how many apples he has left? 85. Now this 85 apples, purchase is already mentioned as 100 into, sorry. If I write, this is equal to a sum, guys. Purchase will be 90 into 44 point. How much does it come to? 4,000. That's the whole idea. By 4,000 should be recovered in cost of purchase. Now sales, let's say, now follow carefully. Sales, how many apples were destroyed? So he has left, which he sold each for 64.44. So how much is coming? 5,000? 470. Assume there is no opening end. What is his gross profit? 1478. Correct? Now is this correct? Why it's not correct? What should be the gross profit? He sold how many apples? Into 64 point minus 44.44, which comes to how much? 85 into 20 is how much? 1,000. Idana profit. But he has only 1,4. It is wrong accounting because debit side you accounted 90, credit side only. So he will write here, by abnormal loss 5 apples. What is the loss per apple? 44.44. How much he is getting? 2. Now my gross profit becomes 1,700. Are you following? Sir, that is correct. Loss now, sir. You know, actual profit 1,478 only. No. How can I show GP of 1,700? Now, because of his negligence only I got it. So I will show that I should have got a profit of 1,000. This 1,700 will come this side by gross profit. Abnormal loss will come this side. 2 abnormal loss I will show 222, and then now I will show net profit 1,478. It is just for presentation. I should have earned 1,700, but because of my carelessness I got 1,478. That is why my abnormal loss always comes on the credit side of trading and on debit side of P&L account. Are you following? That means abnormal loss is not included in the cost of purchase. See, if you want to include this also, what he should have done, he purchased 4,000 of 85 per unit. Then it will become per unit. How much? 40.0. Then his purchase instead of 90 into 44 will be 85 into 47.06, which is again. That means abnormal loss cannot be recovered in goods. Are you following, guys? Another example to understand this. Instead of 85, let's say he sold only 80. Now my selling will be 80 into 64.44. How much, guys? 5,000? 155. Correct? Are you following, guys? Abnormal loss 5 போட்டிங்களா? What is left? By closing stock, which is 5 into 44.44. How much will come? 220. So now I will say my gross profit will change. Of course my GP will change. What is going to be my GP now, guys? You sold how many goods? 80 into 64.44 minus 44.44. How much? 1600. If you don't show abnormal loss here, again gross profit will decline. So my presentation is nothing but I purchased effectively 85 goods at 46 point. Sorry? Something, whatever, 47. In that 80 I sold. 5 are abnormal loss. 5 is in closing stock. Are you following, guys? Are you getting it? That is another revised example of if 80 are sold. Are you getting it, guys? Following? Anybody has a doubt in this? 70? Purchase 90. If it, see, we just change the example. If this was 90, then sales will be 80, abnormal loss 5, closing stock is 5. If the purchase is 90. Are you guys able to follow? Everybody getting it, guys? So basically what we are trying to convey is this abnormal cost should not be part of my inventory. That is why if you see in inventory, closing stock has only 5. This 5 is part of my purchase. Normal loss is recovered. Abnormal loss is taniya cut, like it's actually a loss. Are you following, guys? We can go into much detailing, guys, but I'm just trying to give you the brief concept. So for exam, what to remember? Abnormal loss is not included in my cost of goods. It should be recognized as a loss. I will exclude from my cost of inventory. Are you following? Then AS2 is applicable in all cases except AS7, AS13, biological assets and work in progress of services. This is all MCQ questions. Why? We have separate standard for each of these. Are you following, guys? Okay. Now if I go to what is NRV, are you following abnormal loss? Shall I give another example to understand this? Anybody wants another example? Sure, following, guys, clear. NRV, very simple, guys. There's a formula in the book which I don't like. Let me give a simple example. Most of us might have an old cycle in the house, in the childhood. That childhood cycle, some of you must have thrown it. You wouldn't have thrown it, parents would have thrown it. How long you will keep this here? Throw it out. So let's say that old cycle is there in your house, which you were riding in the childhood. Is it still in usable condition today? No. Rust. Why are you still keeping it? Memory, emotion. Someday after 20 years, my kid will sit on that, I will take photo, like that. Okay. Now, everybody has that, nothing wrong in that, guys. Now that cycle today, if you have to sell, how much you will get? How much? Sorry, 500 rupees I will get. There is a lot of money, guys. I don't know who will give, but example, 500 rupees. But Ria is like, why should I sell for 500? If she can do a little bit of repair for that cycle, just remove that chain, replace that seat, repaint it, she's guaranteeing saying she will get 1500 rupees. Okay, if she's able to make those changes. But to make those, that means she's going to get how much? 1000 from instead of. But to get 1500, she has to incur some expense. Otherwise, she'll get only some repair she has to spend, changing this chain, tire, all of that. How much will that be? 1000 rupees. Chain, tire, painting, guys. 400 rupees. I'm going to go to some small shop, guys, no branded. 400 rupees. Now she will get how much? 1000. But just because Ria is saying she will sell cycle, will people buy it? She has to put it on OLX, or she has to put it on some platform where some buyer is available, correct? For that platform, she has to give commission. That commission is how much? Again, let's say 100 rupees. Bharata is saying, give the cycle to me. I will sell and give it to you within 1 week. You give me 100 rupees. Ria is saying, very good, take it. So Ria was able to sell for 1500, but she has an expense of, and she has to spend 100. Now she has net how much? If she scraps it as it is 500. If she does some further work, she can get. But to get the 1000, she has to incur this expenses. So nothing but, now if I go back to my equation of what is net realizable value, is estimated selling price, not the actual selling price. I can sell for 1000 minus I can sell for 1500 only if my estimated cost of completion is 400. The chain, all of that. The cost of completing the cycle to me, for the cost of completing cycle, so that I can get 1500 less cost necessary to make the sale, 100 commission. Then she will get. So my NRV is 1000. Are you getting it, guys? That's the equation. Estimated selling price minus estimated cost of completion less cost necessary to make the sale. This is the equation of NRV. Are you following, guys? With this, we are done with the first page of our notes. What is the, sir? Exam, what to remember? Inventory is cost or NRV, whichever is lower. Inventory includes raw materials, finished goods, work in progress, that is defined. Raw material held as materials, work in progress in the process of production, finished goods, inventory held for sale in the ordinary course of business. Cost or NRV? NRV is estimated selling price less estimated cost of completion less cost necessary to make the sale. This side, my cost is going to be cost of purchase, cost of conversion, bringing cost. Nothing but from the time that reach from the farmer till the chips packet, that full, all of those things. Clear, guys? This is the first part of the standard. Quickly, let me just do 1-2 sums. We will finish the standard in another 15 minutes maximum. Easy standard. Just to give you confidence, let's take one question. Here it is in. This is in the material that's here, guys. I told you, scan the QR or check the description of the video online or check the channel, you will get it wherever it's there. Okay. If I go to AS2, I'm just going to do 2 or 3 random sums, guys. Sir, so much theory is there in study mat. No, sir. Notes covers everything. I can assure you it covers everything. If you want, you audit and tell me later. Okay. Now, this question and all will not may come. I can't say will not come. We can never predict. I say especially now. Okay. So, how to value inventory lower of cost or question? Total I will take how much? 40, 32, 16. How much? 80? 88 here. 50, 70. 80, I will take 84 or I will do individually one by one. 28, 32, 16, total is. Which one? Individually. Why, sir? Simple mathematical concept. If I have 3 inventories ABC, cost, NRV. Here if it is 10, 20, 30. Here if it's 30, 20. Total here also 60. No change. But Tanitanya if I do individually 10, 20, 10, total will be, only when I do individually, the loss will be accounted. If I do total, it gets set off. Are you getting it, guys? That's it. This question, I am not joking, guys. Just few years back, they asked for 4 marks in the exam. I don't know if it will repeat. Depends on the examiner. Answer is 76. Fine. In this, they are asking you to find what is the correct closing stock. What is closing stock? Cost or NRV, whichever is lower. What is the cost here? Goods costing. See, recording students, pause, read the question, proceed. Here, you have to be fast with me, guys. We are in marathon. 175, I am trying to consolidate in 20 hours. I am also trying for the first time. So, if it's fast, you have to tell me, guys. Okay. I am okay to sit till 8:30. It will be hard for you guys, but we will close. Don't worry. Purchase goods at 40 lakhs in October 21 till March 2022. 75% of the goods were sold. How much is unsold? 25%. What is 25% of 40 lakhs? So my cost is, I don't need calci. I don't think I will need calci. 10% of 40 lakhs is 4. 20 is 8. In that 5% 2. 10. You should also be able to do a basic percentage. 8-7 kids should be able to do it. 75% of stocks were sold. Company wants to disclose the closing stock at 10 lakhs. Adan cost. We have to check. The expected sale value is 11 lakhs with a commission of 10% of sale to the agent. So 11 lakhs minus 9 lakh. I should disclose only at 9 lakh. That's it. MCQ 2 marks over. Next. This is again that normal and abnormal loss question. Let me do it for your comfort, guys. Another 15 minutes the standard will get over. Okay. In production process, normal wastage is 5% of inputs. 5,000 metric tons were put in the production process, resulting in a wastage of, so 5,000 into 5% is how much, guys? 250 is supposed to be the wastage, but I wasted 300. So my 50 is abnormal loss. That's why I have an output of 4,700 is the output. The entire quantity of waste is on stock at the year end. How will I value the inventory? Cost or NRV, whichever is lower. But over here, actually my input is 5,000. Allowed deduction is how much? 250. So my actual output should be 4,000. Like that, apples, reducing normal loss. For a cost of how much? 5,000 metric tons into 1,000 of. So for 50 lakhs, I am allowed to take a deduction of 250, where you will get per metric ton how much, guys? 1,000? 52.63. So if I prepare over here like a trading account, if I prepare a trading account, my purchase will be 4,750 into 1,063. You will get 50 lakhs, whatever, guys. Approximation, I'm just not checking for now. 50 lakhs. Are you getting it, guys? Now in this, what is saying? Where is that? Yeah, found it. Okay, fine. So in this, he's saying how will you account the same? How much entire quantity of waste is on stock at the year end? With reference to accounting standard, how will I value my inventory in the year ending? Assume nothing is sold, is saying. Nothing is sold. So my closing stock will be how much? 4,700 only. Because 50 is abnormal loss. So 4,700 into 1052 point. And abnormal loss, this is 49 lakh. 3. My abnormal loss is 50 into this 1052.63, whatever comes, how much? 62,000? 6? 50 into 1052.63, how much are you getting? 52 point? 62? 1 second. 5263 point. The total panna tally anume. Point difference, okay. 63. Now it will tally. Whatever, guys. Is it totaling to 50 lakhs, sir? 1 rupee, 2 rupee difference. It's okay. We'll give charity. Leave it. Okay. Are you following? This is my presentation. Normal loss is recovered here. Abnormal loss shown separately. I hope you got more clarity now. Yes, sir. Perfect. Now let's go back to the sum. This is normal, abnormal loss. This is simple. You just have to add everything. Normal capacity will be 2 lakh divided by 20 lakhs divided by 2 lakhs, which is 20. Straightforward sum. Nothing to worry on this sum. Then that's it. Illustrations over. MCQs you will try. Practical question 1 is same question, different thing. I am just trying to see this one different sum. This is valuation of raw materials, work in progress, finished goods. Cost or NRV, whichever is less, with a new concept. This is a new sum added in our new study matter. Okay. Already it's there. In old practical. It's there. Okay. Then fine. This is again cost or NRV, whichever is lower. Nothing great in this sum. That's it. Standard gets over. But still I have some theory. I just took sums for you to get some confidence. Guess, are you following? Yes, now going to the second part. This theory I am not discussing much, guys. Usually I spend half an hour just on the cost formula. Okay. But for now I am just being exam oriented. There are two types of inventory. Inventory is interchangeable. Inventory is not I'll give an example. You go to a classmate or stationery shop and you buy a classmate notebook. He has 100 classmate notebooks. You took one. You said it's slightly bent. Give me other one, new one. Anyway, you're going to bend it, but you will take a new one, which cover is neat. So inventory is interchangeable. Pen, give this pen, take some other pen. You will use that pen, right? Ah, it's working. Give me new pen. You will take it. Correct? Inventory interchangeable now. Anybody can buy that. I can exchange like 10 lace packets. Take anyone. Are you following? That is inventory is interchangeable. Our regular Pepsi bottle, Coke bottle, this, that, all of that. Okay. In that, use either FIFO or weighted average. That is the standard rule. Use one of these two. Why LIFO is not allowed in AS2? LIFO is prohibited or not prohibited. Standard doesn't allow. What is LIFO? That means, let's say, in your house, let's say day 1, day 2, day 3. Today you got 1 liter of milk. Tomorrow you got 500 ml of milk. Third day you purchase 750 ml of milk. Day 3 ending, you have left 200 ml of milk. You tell me, applying common sense, which milk will this belong, which day milk it will belong to? Day 3. First one, first I will use. That only is FIFO. LIFO means last in, first out. That means the assumption on LIFO is the 200 ml of milk left in my house belongs to day 1. Then even if 100 days get over, the assumption says still day 1 milk is left. Who will drink that? Doesn't make sense, guys. Okay. Are you following? So the standard says LIFO cannot be used. Common sense, guys. Palaya stock, who will use? That only will send out first. So FIFO or weighted average. If you are not able to use these two methods, then they are saying additionally we have 2 more methods. Foundational parthirpinga. Standard cost method or retail selling price method. What is this? Retail selling price is very simple. Foundation inventory chapter, it's there. Still it's there in foundation. Retail selling price method. Instead of me trying to find the cost, selling price minus profit panna, I will get cost. The whole point is to find cost and whichever is. To find cost, I can do selling price minus profit. When I can do this easily? If the whole year goods are sold at a uniform profit percentage of MRP products. Supermarket. So for supermarket, instead of tracking cost, I will just take the stock at the year ending minus profit percentage because it will remain the same. That is one method. Standard cost method, your costing, standard cost is there, same. Are you following, guys? Where it's very difficult to ascertain the exact cost, we take a benchmark, which is my standard cost. I'm not getting into much detail. Pharma industries and all use standard cost. Inventory is not interchangeable. MCQ, nalada I'm discussing all these theory, guys. They will ask wherever, I hope you know the format. How many MCQs are going to have? 30 MCQs are. 15 MCQs. Each 2 marks. That is your template for exam. Have you seen the latest MTP? Accounts 15 MCQs into 2 mark each. Law 15 MCQs into. That is what is there in the MTP. That is the only material we have readily available released by ICA. So 30 MCQs now, no. 15 MCQs, 2 mark each. That's it. Okay. What is specific identification method? Inventory not interchangeable. Let's take an example. Let's say we will take, okay, you went and purchased, let's say in Tanishq jewelry, one specific jewel, customized for your need. I want it like this for my wedding. I want one bangle which goes like this and comes like that. Something customized that you made. Neck, it should go around my neck and should come like a snake. I should look. So you wanted to make one customized, what to say, necklace you made, which you ordered on 28th March. Okay. Your wedding is happening only on 10th May. Oh, sorry. It's happening in May. Your real wedding is in May. No postponement. Okay. May 2024 is the wedding. So you ordered for that. Now, as of 31st March, for the jewelry shop, this is not yet sales. It will be part of closing stock. You are yet to pay. Now, to value this particular jewel, he can't use FIFO, all of that. Specific identification method, because I purchased this specifically for you. Except you, nobody can buy it. I can't interchange to somebody else. Are you following, guys? So whenever my customer is specifically identified, I will value at the same exact price, specific price. Sir, I went and purchased one pink BMW car. Only you can buy, not interchangeable. Specific price for you. Are you following, guys? Clear? This is my theory. That's it, guys. Now, last three concepts, standard will get over. Shall we go and do that or not, guys? Okay, last three concept. One is joint and byproduct. Next is machinery spares. Last is the most important, reversal of raw material inclusion. Three concepts. These three have not been tested. Joint and byproduct, machinery spares, raw material as part of cost in finished goods. With this theory, I will close AS2. AS2 we are spending time. Most of these concepts will repeat in AS10. Okay. What is joint and byproduct? Everybody knows this. Same costing principles. Let's say, okay, follow guys. Let's say after, let's take raw petroleum. Okay. This raw petroleum is split into one, after a particular point it becomes diesel, next it becomes. So basically it's, I would say not raw petroleum, fossil fuels or crude oil. Initially it's the same raw material. After a particular process only it changes to diesel and petrol. Are they same raw materials? Now how do I value this? After this point is called split off point. After this point, diesel cost I will keep specific for diesel, petrol cost specific for. Up to this point, it's common cost of, I will allocate between diesel and petrol on a reasonable basis. Revenue percent, revenue number or any other expense number. Are you following, guys? This is called joint products. Clear? What is byproducts? Sugarcane. Classic example. Sugarcane classic example, what is that? The sugarcane, that waste is called molasses. That molasses can be used for paper, notebooks, few products, many products, correct? So, I don't want that molasses. My main revenue for a sugarcane company will be sales from the sugarcane juice. Additionally, I am getting scrap revenue. That is going to be my other income. So, this other income, two options. Either show separately as an other income or in the cost circular. From the cost I will show as a reduction. Are you following, guys? Thinking about the sugarcane example and byproduct, I got reminded. Many people ask me, sir, MCQ what to prepare? You don't have to prepare anything extra for MCQ. If your main preparation, main product is good, then your byproduct becomes MCQ. I'll give an example for you to understand the analogy. Molasses is going to be used for water, notebooks. But molasses means the juice should be fully crushed up. Sugar can only half juice crushed. Can I make paper? What I can? Nothing. You can't make paper because when you use that molasses, again sugar cane juice will come. Correct? So your byproduct will have a use only if the main product is properly used. So only if your preparation is properly crushed, then only your byproduct will be MCQ will answer correctly. Okay. Otherwise, MCQ will become juice for you. Okay. Follow. That's the main thing. Main product and byproduct. Just connecting our examples with preparation. Machinery spares. What is machinery spares? Very amended in 2016 but not yet tested. In every, let's say, this camera will have a spare part of. The spare parts of goods, is it AS2 inventory or AS10 PPE? Car has a tire which is spare part of AS2 inventory or AS10 of. It depends on the usage of that spare part. Sir, this spare part I can use for anything, sir. Nut and bolt. I can use for this camera, this system, that AC on third floor, anywhere I can use. It becomes AS2. This spare part can be specifically used only for this particular PPE. This camera battery cannot be used anywhere else. Only for that camera I can use. Then it becomes AS10. Property plant equipment. Are you following? A simple specific asset? And asset ku mattum use panna mudiyum. PPE. I can use for any asset. AS2 inventory. Are you following, guys? That's it. Concept done. Concept done. Last one, raw materials used in finished goods. Beautiful concept. Follow, guys. Let's take the same potato example to understand better. Lace packet, one is sold for, let's say, 20 rupees. Okay. In this lace packet, one lace packet, how many potatoes are used? In one lace packet, how many potatoes are used, guys? 2 potatoes. example சொல்றேன் guys. One potato வா? Fine, you are all not agreeing to example. One potato. என்ன சொல்றீங்க? 20 rupees lace packet, not even one potato வா? Half. Okay. Our example, one potato guys. Okay. What is the cost of one potato? 5 rupees. I am just giving example kaga 5 rupees. Don't do computation no. Okay. Now, this lace is 20 rupees. Where the lace, this is the, let's say, whatever price. Now, tomorrow some defamatory reel came. If you eat lace, you will get cholesterol. Food farmer put one reel. Okay. Now, after the food farmer on Instagram put one reel, suddenly the lace price from 20 rupees crashed. Assume this is cost, guys. Not the selling price. Assume this is cost. Or if cost is 10 plus 10, whatever. Assume the cost of finished goods or the NRV, the net realizable value. The net realizable value of finished goods. Here NRV is how much? 20. Assume it's 20. Forget cost or whatever. NRV is 20. This crashes and becomes 2 rupees. For whatever reason. Can I still value the potato, which is raw material, used in my production as 5 rupees per potato? Finished goods are not worth 20 now. Then how can I keep this at 5? This will become less than 5. That means I should check today in the potato one how much I will get. Somebody is saying I can get one potato for 1 rupee, sir. Then this 5 will be replaced to rupees 1. Are you following? Now I will teach this with theory. Okay, very important concept. Okay, follow guys. Here what they are saying. Okay, beautiful concept. Look at this. Finished goods are work in progress, no issue. Exam oriented, detailed concept. I am just giving you brief. Finished goods are work in progress. Value at cost or NRV, whichever is lower. This is the important area they should ask in exam. Cost or NRV, whichever is lower. This is the one. Raw material. That potato. Think of the potato. Usually there is an assumption or presumption that these raw material will not be sold separately and will be included as part of cost of. If I go to lace factory, I am a potato taniya vikka maatan. How much ever you beg him, he will tell no, it's for my usage. So when that potato will be used only for finished goods, I will not sell it separately. It's part of my finished goods. However, in certain cases where the finished good value falls below its cost, meaning, come back to our example. Where is that? Yeah. Here, finished goods, lace is 20 rupees. Let's do the breakup. Cost is rupees, let's say, okay, 10. 10. NRV is 20. Net realizable value, if I can sell it. This is the breakup of lace packet. Are you following? Cost is 10, NRV is 20. That's the actual thing. The cost is very low. Okay. Now, this NRV is falling below. Inventory is valued at cost or NRV, whichever is less. So I will always value it cost of. Now imagine this 20 becomes 8. So now I will value 10 or 8, whichever is. So I will value at 8. So when I value at 8, what is going to happen? When I value at 8, the finished goods has dropped below its cost. Now I have to reassess and check if the potato is actually worth 5. Are you following? So in this case, I will check. Falls below cost, valued at NRV. Then the raw material used in this finished goods has to be revalued as its final product as RM is used as lost. So look at this case where cost of this point second, where cost of finished goods is more than NRV of cost of finished good. Lace packet is 10, NRV is 8. When it crosses more, value raw material potato not at 5 but its replacement. How much I will get? If I buy today, how much I will get? Value at 1. But if my cost of finished goods, chips packet is still 10, but NRV of finished goods is still 15 rupees. I can still sell the chips packet at higher than cost, then continue valuing the potatoes at rupees 5 itself. Are you getting the logic to an extent? This is an important area they have not tested for a long time. I don't even know if you are aware of this. So this is that concept. This sum only is there in our study material. In the one, this last before some practical sum, question number 2. You will do it later at your end. It's an easy sum. I don't want to take much time now. We have spent good enough time for AS2. Are you guys following? Yes, understanding? Can we proceed to the next standard, guys? Yes, we will be going till 7:30, 7:40. No worries. Whoever feels, sir, I'm getting late to go to my house, absolutely fine. You can slowly get up without making noise. You can leave. If you are staying nearby, if you're okay to stay till around 7:30, please continue staying. Recording students, ignore the instruction. You sit in the house and watch, even if it's night. You have other than studying, what work you have now? Okay. Last 30 days. Sir, I'm seeing CSK match. You can keep seeing, guys. But exam only 30 days left. Okay, I will make exception. Sir, I saw Dhoni batting. It's okay. 2 overs only, no problem. Every match, Dhoni might bat for 20 minutes. That you enjoy. You have to enjoy, guys. I yourself tell, go watch the match. If you are a Dhoni fan, otherwise leave it. Sir, I am SRX fan. No problem. Okay. Punjab fan, Mumbai fan. Your wish. Anyway, Mumbai match you have to watch. It's interesting nowadays because of all the fights that's happening. Okay, today yes, I am waiting to just. I will see tomorrow morning highlights. This time dog came, cat came on the stadium. I want to see. Okay, for that. Fine. Let's proceed, guys. Next. AS. 10 or 16 or? 16. Okay. Fine. AS 16. 10 is very similar to 2. Already some are sleeping. I don't want them to sleep fully. So I'm going to AS 16. I'm also going in random order, guys. Are you all okay with the space? Yes, hello. 16 I will do at least one good sum. Follow, guys. AS 16 talks about. This standard is simple. First I have to see what is borrowing cost. For the time being, until the standard gets over, you think in mind borrowing cost means interest. Think in mind borrowing cost means interest on loan. Classic example to understand the standard very well, which I like a lot. Let's say you are constructing a house. For the house you constructed buying a land. Then for the house you have to buy some bricks, cement, sand, all of this, whatever, mud, all of that. Then labor will come and do the construction of work. Land you spent 10 crores, independent house in ECR beach house, guys. From the full house, wherever you are sitting, what you can see, guys? Beach. So that's the kind of house you want to buy. Bharatwaj is like, sir, from bathroom also I want to see the beach, sir, otherwise I will not go. That is the construction he wants to build. So for this construction, all the construction cost another 10 crores. Land is 10 crores. So total construction is, what is the entry for building? Building account debit to bank, how much? 20 crores. During the middle of construction, Bharatwaj told, common example which I always use, Bharatwaj wanted in this house 6 bedrooms. Independent house, guys. Today Bharatwaj is sitting, yes, Bharatwaj decided from 1 bedroom, he wants to slide and go to the other bedroom. He wants to slide inside the house. So L&T told, in the mind of Kattavai Kadiyada, I have not built a house like this. We will build for you extra 5 crores. Then only I can give you slide. From any bedroom, he can slide to other bedroom. Okay. Only 2 people can go. Oh, sorry, 1%. 1% can go, guys. Okay. Fine. Now in this extra 5 crores, he didn't have money. Come to the concept. He didn't have money, guys. So he took a loan. He took a loan of 5 crores, assuming interest is 10%, which is 50 lakhs per annum. This he used for construction of the house, and he paid, this money was used and he paid interest of. Bharatwaj is arguing with the department, with MCA or accountant department, is saying, see, bricks, cement, labor, land, everything was necessary for constructing the house. So I will capitalize building 2. Same way, this loan I will repay. 5 lakhs came, 5 lakhs went out. But interest is an expense on loan. Yes, this loan is used for what? Constructing house. If house was not there, loan is not there. Yes, so because house is there, I have a loan, and because of which I have an. He is saying this interest also I will capitalize. How bricks were necessary to construct the house, interest also is necessary to construct the house. Are you getting my school of thought, my viewpoint, guys? I will capitalize. See, normally do you capitalize T expense given to employees? But T expense given to employees during the period of construction I will capitalize. Building 20 crores means what? It's labor. Labor I am capitalizing. Always labor will be salary and wages, employee cost. How am I capitalizing labor? Because it's for construction. So same way interest also I can capitalize. Are you following? That only is the standard talking about when I can capitalize. The logic here is very simple. If you debit, see, balance sheet, building is capitalized, and then every year I charge depreciation of, because building has useful life of 10 years or 5 years. Same way, interest is incurred today. How much? But I am getting the benefit for next 5-10 years. How can I debit the full interest in the same year when I am getting benefit for 5-10 years? So the standard says this interest also you capitalize. So I get the benefit for the same period. Are you following? Now coming to concept over. Why you have to capitalize if you have doubt? Now concept. Everybody getting the concept, guys? Now accounting. First you have to check if the company or entity has incurred borrowing cost. Next you have to check, have they incurred borrowing cost for construction of an asset or any other purpose? Other purpose. Other purpose means I will debit the, when I say borrowing cost, what do you think, guys? But it's not the same. Borrowing cost includes interest and other items. What other items? For example, AS 19, finance charge and finance lease. Are you following? As finance charge and finance lease. So other purpose means I will debit my P&L. If it's for an asset, I will again check. Is it for a or not a? If it's for a qualifying asset only, yes, I will go ahead and not a qualifying asset. Again, I will come back and debit my P&L account. So all I have to check in the standard is it a borrowing cost first? Yes. Is it for an asset? Yes. Is it a qualifying asset? That is first point. Second point is, let me take two timelines. Let's say asset construction started here and asset construction ended here. Loan also, will it be in the same time period? Not necessarily. Loan could have been taken here, loan could have been repaid here, or loan could have been taken here, loan could have been repaid here. It could be any combination. So when should I start capitalization? When should I end capitalization? Are you following, guys? Let's say asset was for 3 years, loan is for every year, interest is 50 lakhs. Which interest should I capitalize? Correct? For this, answer is very easy. I will end my capitalization when the asset is ready for use. The right word is substantially ready for use. Sir, I moved into a new house. One doorknob pending, sir. Bathroom light is pending. Don't say asset is not ready for use. It is substantially ready for use. So when asset is substantially ready for its intended use, capitalization will stop because my purpose is served. After this, interest goes to my P&L. When I will start, we have a point I will show you. I will show you when I will start. Whichever is basically loan is, let's say, in 2024, asset construction started in the year 2026. When I will start? 2026. Asset started 2026. Loan was 2027. When I will start? 2027. Basically, whichever is later. Later of loan incurred, interest incurred, or asset work starting. Whichever is later. Are you following, guys? That only is given in the material. If I just go to AS 16. Yeah, quickly. AS 16. Yeah. Here what they are saying. Look at this, guys. I will capitalize MCQ question. I have seen MCQ questions of this in our study map. That's why I am insisting again, guys. Capitalize only if these three are met. First is general condition, which is normal. Future economic benefits, cost should be reliably measured. I am not focusing on that. Three important points. Borrowing cost should be, interest should have been incurred, accrued. Interest accrued. Second, expenditure should be I should have purchased cement, sand, and the loan instrument I would have purchased something. There should be activity on the qualifying asset. ஏதாவது construction start பண்ணிருக்கணும். Sir, I purchased sand and kept it idle. I purchased and didn't use it. No, you should have used it. So three things. Borrowing cost should be incurred, expenditure should be incurred, and activity should be incurred on the only when all three are met. Therefore, whichever is later. Only when all the three are met, I can go ahead and capitalize. That means borrowing cost should be incurred, loan should have been taken, and that money should have been spent for purchasing, and that should have been used for construction. Suma vaangi vecha, no, I cannot capitalize. Are you following? Start point is important because they have newly added MCQ questions and questions in this part. Whichever is later, guys. Clear? Now if I come back, what is borrowing cost? I will take in the ending, guys. Easy. What is definition of qualifying asset is important because once you know it's qualifying asset, topic is over. Correct? Important definition. If the question from this standard comes, you should be able to write this definition. What is qualifying asset? Qualifying asset means an asset which necessarily takes substantial period of time to get ready for intended use or sale. All the recording students pause it, write 3 times and proceed. Here you will write homework today. Write the definition 3 times and you will tell randomly. I will ask someone to tell tomorrow. So again, qualifying asset means an asset which necessarily takes substantial period of time to get ready for intended use or sale. Again, qualifying asset means an asset which necessarily takes substantial period of time to get ready for intended use or sale. Yes, Dhaneshwar, tell me without seeing definition, without seeing fast.
Qualifying asset.
Dhaneshwar, yeah, Dhaneshwar. One more Dhaneshwar is there. Huh? Yes, Dhaneshwar, go ahead. Fast. One more Dhaneshwar is there. Hello? Okay, Dhaneshwar, third row, next to Radharam Dhaneshwar. Yes, go ahead.
The qualifying asset is an asset which necessarily takes substantial period of time
To get ready for
the intended use of
sale. Let's understand this conceptually, very important because if you are good in this definition only, you can know capitalize pannuma, I should not capitalize. Once this is over, standard is over, few sums. Now, qualifying asset means an asset which necessarily takes substantial period of time. To construct a house, it takes how long? So my keywords here are necessarily is keyword, substantial period, intended use is the keyword. What do you mean by necessarily? Okay, to let's say construct a house, it takes how long? House, independent house, Bharatwaj house, 6 BHK, beach facing. How long it will take? 1 to 2 years. Whoever constructs, it will take 1 to 2 years. Huh? He took 10 years to construct. Is it a qualifying asset? Why? Necessarily, it takes that much time. Are you following, guys? Are you understanding? Another example for necessarily. How do I explain this? Anybody doing this work will take them that much time. Necessary, minimum time required to do this activity. Sorry? Ordinary time that you take. Are you following, guys? Now, to prepare a biryani asset for the company's inventory, biryani is an inventory. How long will it take? Half an hour, 1 hour, maximum 1 day. It's a dum biryani, 1 day. Okay. Now, is this substantial period? No. It's not a substantial. For making biryani, maximum 1 day, guys, irrespective of what cooking process is. 1 day, 2 days, okay, 1 week, okay, fine. Now, so for the restaurant, biryani is an inventory. So qualifying asset means an asset which necessarily takes time, but not substantial time. So the interest taken to make biryani, I cannot capitalize. But to manufacture wine, alcohol wine, it takes 3 to 4 years. It takes time. So that interest will be capitalized. He is not saying which asset. The asset can be AS10, AS2, AS26. Are you following, guys? Clear? Now, it takes substantial period of time to get ready for intended. Bharatwaj is constructing the house for him to live there. His intended use is to live there. Second, or for he is constructing the house to sell. Now, Bharatwaj constructed the house. It took him 2 years. But for the next 6 years, he's not staying in the house. House is empty. He's saying, astrologer told, until 2030, if he goes to new house, he will not get married. So he didn't go to the house. Now, can he say 6 years I will capitalize? Qualifying asset means an asset which necessarily takes, yes, 2 years to get ready for. It takes substantial period to get ready for. House is ready for using. He is not using it, not my fault. Once it's ready for use, I have to stop. Capitalization. Are you following? Or sale means what? I am constructing to sell. Casa Grande is constructing apartment, flats to sell. So for Casa Grande, construction of apartment is a qualifying asset. Qualifying asset means an asset which necessarily takes substantial period, 4 to 5 years to get ready for sale, not intended use. Are you following, guys? In the definition, in the key points, necessarily takes substantial period, intended use or sale or meet panna, I can capitalize it if it's a qualifying asset. Are you getting it, guys? Clear? So if I go back to our base theory, now you can understand the flow of this chart. Follow. What is borrowing cost? Last I will take after sums. Okay. You know what's an asset. It could be AS2, AS10, AS26, any asset. Are you following, guys? What is qualifying asset is very clear now. That means I constructed a house for 12 years. Is it a qualifying asset? In Germany, when flyover is near the flyover, when building is unconstructed for last 30 years, is it qualifying asset? No, it necessarily does not take so much time. Now, what is substantial period? Standard does not define it as 12 months. But we presume it to be 12 months. It can be 14, it can be 8 months. Okay, Bharatwaj is constructing house. How long it will take? 2 years. His astrologer told, within the next 6 months, if you don't go to new house, what will happen? You will not get married. So what he did, he made them construct the house in 5 months. He called 2 construction companies, ni ground floor panna, ni first floor panna. Together he made them construct the house in 6 months. So house was ready in 6 months. Is it a qualifying asset? Is it a qualifying asset, guys? Substantial period. Are you following? 2 years to 3 years, no, yes, solringa. 5 years means you are saying. Now he finished it in 6 months because there was a need for it. So can I say qualifying asset? Follow, guys. Can I say qualifying asset? Yes. You can't punish someone because you have to reward him. Because he was fast, you can't punish him. Are you following, guys? I bought some new technology. With this new technology, I constructed the house in 6 months. Are you following, guys? So there is a question which says, normally company takes 12 months, but my company finished this construction in 8 months. Can I capitalize? Yes. Are you following, guys? This is about qualifying asset. So all you have to do is, in this standard, compute what is the interest and decide how much I will debit to my. Can we quickly do a few sums, then come back and do other theory? Easily we will close this standard before our time that we have here. It is in which module? AS16 301. No? Okay, so all the examples are only for classroom purpose, guys, so that you don't sleep in marathon. Okay, fine. Illustration 1. Are you all following, guys? Okay. Of course, marathon days, those who are watching recording, especially offline students, will be tiring. Marathon is meant, post-lunch accounts theory sums, it will be theory. So you have to push yourself, especially law marathon day on 5th April. 8 a.m. to 8 p.m. theory marathon. It is going to be hard, but if you can stay till the end, it will add value to you. Okay. Whenever you feel sleepy, ask your neighbor to give you a slap. So give him that power. Okay. Tell your friend to slap you yourself. Both of you are sleeping now, we can't do anything. Okay. Fine. You can good slap the girl. Bharatwaj. What are you guys, restricted this side only, guys. That side only. Third floor, I can't see what you're doing also. Okay. Fine. Now, let's proceed, guys. Illustration 1. They have used 20 lakhs advance. They have taken loan. Now I'll give you the permutation and combinations. Loan amount used for qualifying asset. When you're going, bend and go, guys. Okay, fine. Now loan amount can be 100, 100. Maximum possible scenarios. The qualifying asset created using this loan, the maximum 3 possible type of sums could be matching. Irukra loan fulla used for asset. Second, qualifying asset could be 120, qualifying asset could be 70. All 3 possible or not? Possible. Why it's not possible? Here full loan is used. Here I use loan of 100 and extra 20 from my own funds. So if this scenario comes, you have to proportionately capitalize. And if here 100, only 70 is used. What about direct percentage? We are going to see all 3 type of sums. This sum is a straight away direct application. 120 lakhs is loan. The usage also is 120. The total interest is how much? 18 lakhs. Then I have to proportionately split the interest in the ratio of 50:40:20:10. Which I should capitalize? Construction of shed? Yes. Qualifying? Working capital? No. Purchase of truck? Advance for purchase of truck and purchase of machinery? No. Because they are not qualifying asset, because purchase of machinery was installed on the date of, so it does not take substantial period of time. Working capital I will never capitalize. It's not an asset. Okay. Advance for purchase of truck. This is the one point where old study mat and new study mat have different answers. It depends on the assumption that you take. Old study mat, different RTPs used to give different answers. You don't have to panic. You give an open-ended conclusion saying, my assumption advance for purchase of truck is not a qualifying asset because it's not taking substantial period of time, so I will debit to my. If you feel it's going to take substantial period of time, then you will capitalize. Answer also here, only shed would have been taken, capitalized. Are you following, guys? This is a simple sum. If you are lucky, it will come in MCQ. Latest mock test paper, MCQ, don't think 1 month standard only they will ask. No. They have started mixing standards. Latest MTP, AS 10, 16 and one more standard. 3 standards together they asked 1 case study. That is how case study will come, guys. They will mix multiple standards, similar standards, and they will ask MCQ. Are you following? Okay. Guys, sir, why sir institute is doing like this? You should know what you see. This is the preparation for what is going to come for you in CA final. Everybody knows CA final has paper 1, 2, 3, 4, 5. I don't even know if you are aware. My intention is not to scare you, but you need to get ready. CA final paper 6 is an open book exam where they can ask anything from paper 1 to 5. That means I can ask from accounts, let's say paper 2 is financial management, advanced management, or auditing, direct tax, anything they will ask in last paper. They will mix everything and ask. That's why I told you can't write group 2 without learning. That means if you need to do that in CA final, which is almost 2 to 3 years from now, you need to learn how to interlink the chapters. That's why now they are asking within the subject mix of chapters in the same question. Slowly you will get trained. Now if you look at this, it will look scary. But the more you start practicing this, that will become easy. That is why the new syllabus paper also will have mix and match in MCQ. We already had this in law, guys, old syllabus. Law MCQs. Was it same chapter? One MCQ used to cover multiple chapters up. If you are able to handle that, same thing. Okay. Now, let's go to next question. I will take only selective questions, guys. Illustration 2 is the last question. Beautiful question that we will do. Let me take some other small question. This and all you try, guys. Illustration 3. What is qualifying asset? What is not qualifying asset? I want to just take 2 more sums. Here only if you see, they will have given, it is assumed that the modernization renovation of plant of machinery will take substantial period of time. The alternate assumption is also allowed. So in this question, they would have taken modernization of qualifying. That is why they are saying It is assumed. Study mat itself is given it. Are you following, guys? This is one illustration. I want to solve only two sums for you guys. In practical question in AS 16, they have added new sum which I want to do it for you. This one, this one. C-link is a new question that they have added. Practical question 1 and practical question 3 is a new question they have added. This came from our previous MTP and RTP. They have added to study mat. Two good questions. Practical question 1 and 3 are new questions and illustration 2. I want to solve all these. Okay. First, let me do practical question. This one. He is asking a loan of 32 crores to be utilized as follows. It's a new question. Mostly what we do is we do illustrations and we close it. Practical question 1. They are saying they have constructed a sea-link between two cities. What is sea-link? That Mumbai, that sea-link, it goes on the sea. Okay, so two islands or whatever, they constructed a sea-link. For which, the following expense was incurred. 25 crores for construction, purchase of equipment, 3 crores, working capital, all of this. You tell me which I will consider, which I won't consider. Total interest is, this I have to split for the above. 25 crores will I consider? Yes. 3 crores purchase of equipment and machinery. It depends on the assumption whether it's a qualifying asset or not a qualifying asset. You will take the assumption. Working capital? No. Purchase of vehicles? No. I will assume it's not a qualifying asset. Advance for tools and cranes? No. Advance immediately I will get tools. Purchase of technical know-how? No. Because it's instantly you are getting access. What is technical know-how? How to do it? How to prepare biryani? Give me the recipe. Like that, how to construct this? Give me the recipe or give me the instructions. Are you following, guys? So all these are taken as no because it's not a. I will take only 25 crores. So what is the total expenditure I spent? 32. You add and check is 32 coming, 25 plus 3 plus 2 plus 50 plus 50 plus 1. You have to cross check. Okay, so 80 lakhs into 25 by 32. How much? 62? 62.50 lakhs is the amount of interest I will capitalize. Are you following? I hope it's correct. I don't remember. Guys. 5 lakhs is the interest I will capitalize. Yes, no, yes, no, yes, no. Give explanation below. Are you following, guys? Everybody understanding? New sum, but it is easy. Work was held up. I ignored this point completely intentionally. Work was held up for a month during the year due to high water levels. What is this? What is this, guys? Now, let's say during construction of the house, which is going to take, let's say, 2 years, sometimes there will be break in work. That break is technically called, let's say movies you will see, police or government employee or somebody has been, or any hero has been dashed from work, suspended from work. So here we use the word called suspension of borrowing cost, meaning you tell me logically before you see the point. No, do not see, guys, but still the logic point over here is during my 2 years of construction, work stopped for 1 month. I just have to ask, is it my fault or not my fault? Let's say flood came. Can I do something about it? No. So I can't stop capitalization. Full 2 years I will capitalize. During the 2 years, one employees went on a strike because I didn't pay them salary. Whose fault? My fault. I can't capitalize. So something which is not in my control, I can't be punished for it. That is called unavoidable. Flood, COVID, earthquake. During that period, borrowing cost should be avoidable suspension. Borrowing cost should not be capitalized. Are you following? Same principle for life. Unavoidable suspension. Unavoidable things. I can't do anything about it. Why should I stress about it? Avoidable. If it's in my control, then you cry about it. Sir, exam postponement, not in your control. What can you do? Nothing you can do at this point. What is it? Avoidable, unavoidable? Unavoidable within your power. Continue studying. Don't care about it. They will keep fighting, guys. You have to just proceed. Avoidable means it's in your hands. Then you do something about it. Are you guys following? That's it. Similarly, we are going to go for cessation of. I will finish the remaining theory and do the last two sums and close this topic. Quickly, guys. Is the speed fine for this topic? Yes. Are you guys able to understand? Yes. Now, next is cessation of capitalization. When you will stop capitalization? Whenever asset is substantially ready for use. One asset na easily I will find. What if I am building an apartment, Casa Grande, with 100 apartments. Today 30 are ready, 70 construction are still going on. In this 30, 20 people have occupied, remaining house construction going on. I took one loan of 100 crores for the entire apartment. What to do? Proportionately. For these 20 houses, stop the capitalization in the proportionate amount. Remaining 80 or remaining 70, whatever, continue. This proportionate I can do if the asset is capable of separate use, independent use. No sir, I can't sell them. Only when the entire 100 houses ready, people can walk in. Then you have to wait till the 100 houses are ready. Are you following? That only we have over here. Simple point. Cessation of capitalization. Cease capitalization when asset is substantially. However, where borrowing cost comprised of multiple assets, multiple houses, when where some assets are ready and capable of independent use, stop capitalization for assets which are ready for use. Are you guys following? Okay, perfect. Next, we have to see only last two concepts: measurement of capitalization, borrowing cost, and borrowing cost includes what? I will quickly run through theory again for MCQ purpose, guys. Borrowing cost includes. Don't have to mug up these 5 points. Just be aware of that. AS 19, you know. Yes, sir. In that there is something called finance charge. What is finance charge? Nothing but EMI. In EMI, the interest is called finance charge. Correct? EMI technical term is finance charge. When we do AS 19, you will get clarity. So, finance charge in finance lease. Next, exchange difference on foreign currency borrowing to the extent attributable towards. Remind me when we go to AS 11, I will discuss this concept, very interesting concept. I will discuss over there in detail. This is AS 19. Amortization of premium or discounting charges. What do you mean by this? Preference shares of 100, redeemed at 125. 25 is premium to be written off, that one. Amortization of ancillary costs related to loan processing fees. Interest loan interest alone is not expense. Loan processing fees, all of that. Are you following, guys? Last is commitment charges. What do you mean by commitment charges? You have a credit card. Credit card limit is 5 lakhs. But I never used it. So my charges are 0. That is today. But before, what they used to do, today they are saying credit card free, lifetime free, take it, they will keep troubling us. But earlier days, credit card is given for 5 lakhs. But whether you use or not, yearly he will take 1,000, one small amount, 1,000 rupees he used to take. Because whether you use or not, whenever you use, I will instantly give you 5 lakhs. I have committed to give you that 5 lakhs. That's called commitment charges from the bank. Are you following, guys? Getting it? So these are borrowing cost definition. Last, this measurement of borrowing cost with the sum. I will teach this, guys. Okay, let's go back to the sums. Last two sums, one new sum and one old sum. We will close this topic. If we don't do sums, we can go much faster. Do you want the sums? Yes. Perfect. Okay. Now, let me take the illustration 1 first. Not 1, sorry, 1, 2. Illustration 2. Beautiful question. This also is a new addition to our study mat. I think I don't remember about this. Sorry. It was old. It's old. Okay. Now, follow, guys. I will give a simple example. If you understand this, chapter is over. Then some last concept left. Let's say you have an SBI loan of 10 lakhs in your books. Then you have an ICICI bank loan of 12 lakhs and HDFC loan of 15 lakhs. Okay. Now, This SBI loan was specifically taken now to build a plant and machinery which is worth 30 lakhs. It's like, let's say you're going for a movie, your parents are giving you 500 rupees for ticket and popcorn. Sufficient? But 500 only you got. But you already had with you 2000 rupees. Okay. Now when you go for the movie, which money you will use first? That 500. Once that 500 gets over, 500 is enough if you don't buy popcorn. But you will buy popcorn. Yes, we need the popcorn. So let's say you purchased it. Now after 500 gets over, then you will use that. That 2000 came for you in various sources. Birthday gift, this, that, something. Can I tell what is the breakup of 2000? Difficult. It's a mix of multiple incomes. 100 rupees today I saved, 50 rupees some other day I saved. Same way here, this company took 10 lakhs loan for construction of, but already they would have had some loan in the books. So this 15 plus 12 is like that 2000 which you had already in wallet. This 500 is what you have taken specifically now, 10 lakhs. Now let's take the interest rate for all these three. Let's say SBI loan interest is 10%, ICICI loan is, let's say, 15%, HDFC, let's say it is 12%. Okay. Now, what is the total interest? SBI 10 lakhs into 10%? 1 lakh. ICICI 12 lakhs into 15%? 1 lakh? 80,000. HDFC 15 lakhs into 12%? 1 lakh 80 is coming up. Fine, let us change it. Let me make it 11%. Just for differentiation. 1 lakh 65,000. This money was used for construction of the plant and machinery. How much borrowing cost should be capitalized is the question. Now first in this 30 lakhs, which money you would have used? SBI 10 lakhs. So that I will straightforward reduce 10 lakhs. I am left with, for this 10 lakhs interest is straightforward 1 lakh into 10%, which is, 10 lakhs into 10%. My interest, or in other words borrowing cost is 1 lakh, which I will capitalize. Otherwise following? Clear? So now in this case, what about the remaining 20 lakhs? Money is 12 plus 15, 27 lakhs is available. But I used only, in this 20, which 20 is used? Is it 12 plus 8 or is it 15 plus 5 or is it 10 plus 10? Can I figure out? Are you following? No, it's like the 2000 rupee note in your wallet which you got on different days over the last few months. You don't know who gave how much. So you don't need to know also. 2000 rupees my money, I will spend in that. So how do I split this 20 for this 27? Because my total interest is 18 lakhs and 1 lakh 65. So I will do a simple computation. See, I can't specifically find out. So they are saying, Mottama, what is my loan? This SBI will strike off because it's accounted already. Apart from the SBI loan, apart from specific loan of SBI, you are left with, for which interest is 1 lakh 80 plus 1 lakh 65. How much is that? 3 lakh 45,000. So I am making a statement, tell me if I am correct. For a total borrowing of 27 lakhs, I paid a total interest of 3 lakh 45,000 into 100. Therefore my interest will be 12 point. So this I will take as my average rate. This is called weighted average cost of borrowing. In other words, what is weighted average? Very simple. Let's say you went out, you bought 10 kgs of potatoes, each kg at rupees, let's say 25 rupees. You paid 250 rupees for 10 kgs of potato. Next again, you purchased 30 kgs of potato when the price was 40 per kg. How much you paid? 1000. What is the total price paid for potato? 1450. Now somebody is asking you how many kgs of potatoes you purchased, how much you paid per kg. What you will tell? 1450 divided by 40 kgs, which is 36.25. is the correct number, correct? Can I say my average is 25 plus 40 by 2, 65 by 2? No. Can I say it's 32.5? No. That is simple average. Weighted average giving importance to my weight and price. 36.25 is correct because it's very close to 40. I purchased bulk at 30. Are you getting it, guys? So with this logic only, I will apply 12.77. Are you getting why weighted average, guys? So I use 20 lakhs into 12.77%. How much? 2 lakh? 5? 400. 2,55,400. So total comes to 3,55,000. Are you guys following? So if this is the case, I will capitalize how much? 3,55,000 out of total interest of how much? 1 lakh plus 1,80,000 plus 1,65,000. 4,45,000. So out of 4,45,000, 3,55,400 will be. So the balance is how much? 90? 89 will be debited to my. This only standard asks as disclosure requirements. It says what is the total interest? 4,45,000. In that how much is capitalized? 3,55,400. How much is debited to? Common mistake what students have done many times is what they capitalize is more than total interest. Students will capitalize 6 lakhs. Interest is 4,45,000. In some sums, I have seen it. Are you following, guys? That is a cross check you have to do. In study math, they don't check that. Some sums they have checked. Ensure the total interest you are capitalizing cannot cross the total borrowing cost itself. Are you following, guys? This background, that's it. In this background, we are going to do 2 sums. This is the first sum, which says this company took a loan of 1 lakh special loan for construction of building on 1st Jan at rate of 10%, and 2 non-specific loans is 5 lakh at 11%, 9 lakh at 13%. This sum and the next sum is the big sum, guys, building new sum. So what is the weighted average interest here? 5 lakhs into 11%, let's say it's X. 9 lakhs into 13%, let's say it's. So X plus Y divided by 14 lakhs, correct? 9 plus 5 into 100, how much? 12.285 percentage. That's what you will have here, 12.285 or 29 percentage. Are you following?
Yes, sir.
Understanding of this is my weighted average cost of interest. Are you all getting it?
Yes, sir.
Now, what is the specific loan? 1 lakh into 10%, which is 10,000. Now, how do I capitalize? Look at this. The spending was as follows. If you remember this question, they spent like this. In Jan, they spent. In April, they spent. How do I capitalize? First 2 lakhs will be spent from what? 1 lakh special loan. I'll just brief the question. Company took 1 lakh special loan. Then they already had 14 lakhs. Okay. So here I will do first 1 lakh into 10 percentage, 10,000 I will straightforward capitalize. Remaining in this 2 lakhs, how much is left? For this 1 lakh only, I will use the 12.285 percentage. So into 12.285 percentage. Next 2,50,000 I will multiply into 12.285 percentage. Next 4,50,000 into 12.285 percentage. Next 1,20,000 into 12.285 percentage. Are you guys getting it? But the common mistake what everybody has done here so many times is it is used from April up. So how can you capitalize interest for whole year? Into 9 by July is into 1 by. Very common mistake. 100 students write the exam, now 50 will do this mistake. Another 30 will do some other mistake. 20 only will get the correct answer. Are you following, guys? Are you understanding? Say I am not reading the question. Recording students pause and read the question. So here also if you see what they would have done is they have done in a different way. You leave this. You will get confused. 2 lakhs into 12 by 12. This first 2 lakhs I will split into 2. 1 lakh into 10 percentage plus 1 into 12.285 percentage into 12 by 12. This into 12.285, again 12.285, again 12.285, you will get the same answer as 1 lakh. No, not this. You will get total will be 74,189. Are you getting it, guys? What they have done in Institute Study Matters, because this is common, they are only dividing this and applying interest rate together at once. It's just a presentation disclosure. BODMAS rule, guys. Whatever is common, they are taking it separately. Are you following, guys? Clear? This is this question, common question, there in old syllabus and new syllabus. Mark it as important in AS 16. Last question with which we will conclude. These are all MCQs. Look at this, guys. This MCQ. For example, X Limited is commencing a new construction project which is to be financed by the following. These are the following dates. Which I will capitalize. Generally, whichever is later. Correct. Whichever is later, I will start. Loan interest is 15th May. Technical side is 2nd June. Expenditure is on 19th June. Construction work commences on 18th of. When I will capitalize? 18th of July. Answer will be 18th of July. 5th MCQ. Answer is, no, it should be 18th. 19th of 5th one B. They have taken, sorry, not construction work. Look at the pointer. It is later of three things. Borrowing cost, borrowing cost should be incurred, expenditure should be incurred, there should be activity on the qualifying asset. Only those 3 points. So loan interest means project started. Technical side planning is the activity. Expenditure on the project has started. Then only construction work has commenced. So it is later of these three. Correct? So answer is 19th June. What is the answer here? 19th June. See the. Oh, here. Okay. 19th June. Are you getting it, guys? So later of these three points: borrowing cost, expenditure, or activity on the qualifying asset. They never tested this part earlier. This part is important now because of MCQ. Are you getting it? Okay. This last sum I will just brief and then you guys will try it and we'll close this. Sorry, AS 16. New addition, that's why I am discussing, guys. Question number 3, Harish construction. We will close with this. Are you following? AS 16, fast or slow? Fine, we will discuss in the end, and tomorrow accordingly I will adjust the pace once you vote, guys. Fine. Are you all able to understand whatever speed we are going? Anybody feels it's fast? Then I am fine. If nobody feels it's fast, then totally okay. Fine. Harish Construction Company is constructing a huge building project consisting of 4 phases. New question. Push yourself for just another 5 minutes. That's it. It is expected that the full building will be constructed over several years, many years. But phase 1 and phase 2 will be started as soon as they are completed. Following is the detailed work done for the building. Phase 1, phase 2, phase 3, phase 4. Visualize an apartment, big community, Nal building. Okay, 4 big towers like that. Okay. Phase 1, 2, 3, 4. Cash expenditure 10, 30, 25 and 30. Building purchase 24, 34, 30 and 38. Doesn't matter. What is the total money I have spent? 34, 64, 55 and 68. So total expenditure is 221. In that loan taken is, this is a case where loan was 200, spent is, so proportionately I have to do. You can't apply 221 into 15%. Interest rate 202. In the sum only you will capitalize more than interest. If you miss that, are you following, guys? That is one. Next, what is then they are saying during the mid of the current year, phase 1 and 2 have become operational. What is the total interest to be capitalized? Look at the working, guys. I will do in a simple way. What is the total interest? 200 into 15% is how much? This only is total interest. In this, how much should I capitalize? How much should I debit to? This only is question of. So in this, I will categorize this interest as phase 1 and phase 2, phase 3 and 4. Why I am splitting? Because phase 1 is ready in the middle of the year, where it's given question liye kuduthirupom. Phase 1 and 2 have become operational during the middle of the year. So here what I have to do, for phase 3 and 4, whatever interest comes will be 100%, because full year construction was going on. Whatever interest comes for phase 1 and 2, I will split as 6 months, and this I will capitalize first 6 months, next 6 months I will debit to. This is the structure of the sum. Are you guys following? So they constructed building in 4 phases. How much I will capitalize, how much I will debit to P&L. How do I do this? Now for phase 1 and 2, what is the total spending? You tell me the total. 34 plus 68. Similarly do for phase 3 and 4, 55 plus 68. So here total is, here 120. Total together comes 220. Common mistake what everyone will do is 98 into 15% into 6 by 12, and they will do this into 15% into 12 by 12, which is not correct. Why it's not correct? Because expenditure is more than loan itself. Expenditure is 221, loan is, so my interest has to be proportionate of. So what I will do, how do I split proportionately? I will split in the same ratio of 98 and 123. My interest, what is my interest? So I will split in the same ratio. 30 lakhs into 98 by 221. Here 30 lakhs into 123 by 221. How much are you getting for interest, guys? Here 32 point 13 point, here 16.7, correct. This 16.7 is fully capitalized. This 13.3 I will split into 2. 6.65 lakhs and 6.65. In this will be debited to my, everything else will be capitalized. Are you following, guys? That only they would have done in a much little complex way in study math, but once you read you will understand. Are you following, guys? Easy to understand. Mark this also as an double important question, because new addition to study math means examiner will be waiting when I can ask this. Some attempt he will ask, guys, within the next 2-3 attempts, but we don't want to go till that. We will learn and keep. If it comes now, we will close. Okay. So with this, in this session, we are done with AS 2N. No, second session AS 2N. We planned AS 2, 10, 3 and 16. That's how your preparation also will be. You will plan 100 things. You will do only 50 or 60%. It is okay, guys. You will at least do that. At least do that. Are you following? Clear? Whole day we are done with 2, 4, 12, 22. 5 standards. Fine. We will proceed in the next session. See you guys. Thank you, recording students. Next class. Yeah. So hi guys, welcome back to the second day of our accounts marathon. Today our agenda is to complete all these topics bare minimum. Buyback, internal reconstruction in standards 10, 26, 19 and 28 impairment. This is the agenda for the day. We'll try to complete as much as possible. First 2 topics. First I will take up internal reconstruction, spend maximum 20 to 30 minutes, do one sum, and then I will straight away jump to AS 19 in the first half, and then based on the time we can do one more topic also, small one. Let's start off, guys. Let's go to internal reconstruction. I will just do 1 or 2 sums, few key adjustments. It is important. This is one of the easiest chapter for scoring 10 to 15 marks depending upon how many marks it comes in exam. Old syllabus it used to be for 20 mark question also, they used to ask for 20 mark. So if I just take a balance sheet for internal reconstruction, anybody studying for the first time internal reconstruction? Fine, follow guys. Let's say share capital is 300, reserves and surplus is 400, liabilities in this bank loan 500, creditors let's say 600. Okay. PPE, let's say, is, for example, 1000, current assets 400. Is it tallying, guys? Tallying, hello? Now tallying? Tallying now, guys? Okay. So let's say it's a company is like this, where they are in losses. So when someone does internal reconstruction is when company is not in a good position. Let's say if your health is not good, what do? You go and see a doctor. Doctor will give some medication and then you will take those medicines. If those medicines also don't work, then what you will do? Go for some serious treatment, surgery, this, that, and then finally you will try everything possible, correct? Same way for a company, you can't just like that say, close down the company if company is loss making. Here the company is having a financial loss, negative 400. So the idea is to make this negative 400 zero or make it positive, because if I show this company to outsiders, it will look like a company is unwell, company is sick, the financial health of company is not good. So if you want to transact with this company, you may not be confident because of the negative, correct? So the idea is this company goes to a doctor, that doctor is a CA, financial doctor, asking for advice. What can I do to make my company better? So the company will call all its stakeholders together. I will call all the creditors, I will call all the bank loan people, I will call everybody together and I will put some sad music in this room and say, this company is there for last 30 years. You are the first banker for me. 30 varshama I am doing the banking service with you. Currently company is not in a good position. What do you mean company is not in good position? If I sell my PPE today 1000, I will get only 600. If I sell my current assets, book value is 1000, but Kaila I will get only 600. If I sell my current assets for 400, in hand I will get only 100. So effectively I have only 700 rupees. That 700 is not even enough to pay my liabilities of 1100. I will tell, see, bank loan 500 varadu. Creditors, you will not get 600, you will get much lower. Option 1, let us close down the business, take whatever you get, I will get nothing anyway, I will get zero share capital. I am okay closing down the business, but we are in a tough time. Put one sad music BGM and tell, I want to make a comeback, will you support me? I am ready to sacrifice. Are you also ready to sacrifice? Let's bounce back. Then these creditors will think, I will make them think. In the thinking time, I will again put some music. Then they will tell, yes. So now what is that bounce back for the company? I will tell them, okay, I will sacrifice all the sums. Each adjustment is going to be same. I will sacrifice some money. Share capital is saying out of 300, you give me 30 rupees. It's enough. I will reduce my shareholders funds from 300 to 30. That can be in many combination. Maybe 30 lakh shares of 10 is becoming 3 lakh share of 10. Correct? Or it can become 30 lakh shares of 1. Are you following, guys? See, this is 300. This is 30 lakhs and this is 30 lakhs. Are you guys following? Repeat with me, guys. Understanding? Hello? Yes, so in the mind I will tell number of either face value per share is reduced or number of shares are reduced. For this only in law you will see section 66, reduction of share capital. That procedure we will see. So now shareholders have agreed to reduce what is payable to them. So what is payable to them now? Only 30. So what is the entry for reduction of share capital? Equity share capital account debit. How much? 300. Let me write off fully. To new equity share capital, how much? 30. What is my loss? But it's loss for shareholder, gain for company, because I don't have to pay my shareholder 270. So this gain will go to my reserves and surplus. So now from negative 400, I will add a positive. So if I open my reserves and surplus account, it opens with a negative 400. Now a positive 270. Are you following? Like this, each person will keep sacrificing. Let's say creditors is saying, you are sacrificing 90%. Okay, I will sacrifice 20%. So he's saying, don't pay me 120, 20% I will sacrifice. So what is the new creditor is sacrificing? How much? Creditors account debit 120. Full sacrifice. Sacrifice for creditor, gain for the company. 2. Reserves and surplus 120. Again I will write here plus 120. This I will write plus 120. My new creditors will now become 480. Are you following, guys? Now what is the new reserves total? 390 negative 400. Now bank loan. Bank loan is saying, hey, if I don't sacrifice, then my name will be damaged. I will also sacrifice 15, so on. Like this, each person will keep sacrificing in different forms which comes in question. All you have to do in this chapter is, okay, bank loan is now becoming 450. So my entry will be, loan is reducing by 50 up. Loan account debit. The sacrifice goes to reserves and surplus 50. I will write here plus 50. So now my new reserves and surplus closing balance is how much? 40. Correct? Total is 440. My positive is 40. So my reserves now will look like 40 positive. Now this balance sheet has undergone a process of internal reconstruction. Externally nobody helped us. Internally shareholders, creditors, they helped us. So I will use in balance sheet after you prepare and reduce this mandatory. In presentation, when you prepare balance sheet after reconstruction, you have to use the word and reduce, because you are reducing. Everyone should know that you have undergone one bypass surgery. Are you following, guys? Otherwise, they will think that okay, it's a profit making company. So this full chapter, the sums will be, they will give you, how I gave you 3 adjustments now, shareholder sacrifice, different adjustments they will give, for which you have to pass journal entries. This was one journal entry 2, journal entry 3, and whatever gain or loss comes, it's because of this reconstruction, it goes to my reserves and surplus. But which reserve? This is not a day-to-day activity, correct? This is section 66 of Companies Act. What is section 66? Reduction. Reduction of what? Share capital. So the capital base of the company is reducing. If you see effectively, the shareholders funds and reserves are reducing. This only is called the shareholders funds. So my capital base is reducing. So I create a temporary account. I call that account as capital reduction account. It's nothing but part of my reserves. At the end of the sum, whatever closing balance I have left in this will be transferred to capital reserve or general reserve. Because it's not a day-to-day activity, it goes to my capital reserve. Are you following, guys? At the end of the sum, you have to check for one hidden adjustment in the question. I'm focusing exam oriented. Hidden adjustment in the balance sheet. Sometimes he will give you goodwill or any other intangible assets. If they are there, even if the question is silent, you have to write off all the intangible assets and goodwill, because goodwill is the value. Company lost of goodwill value. No value for goodwill. I will write off all of that. Are you following, guys? This is the template. Even somebody studying first time, you can understand. Straight away, we'll go to 1 or 2 good sums in internal reconstruction module 3, 10-mark question, guys. MTP they ask 10 marks. Internal reconstruction are chapters that should be your strong. It should be your strength. Start with that. 20 minutes, first 10 marks in my pocket. This is an easy chapter like that. Page 221 over here. Okay. I will just go through a few key adjustments, guys. Are you able to follow, guys? Okay. So I am not going to the first illustration. There are about 25 illustrations in the book, I think, including practical sums, everything. I will just take 25 or 20 or something, guys, overall, or 15, doesn't matter. I will go through a few key adjustments. I am not going to do the whole sum, because normally if I am doing the whole sum, one sum will take half an hour. Instead, I will focus on 7-8 key adjustments which are relevant. Are you all following, guys? Everybody knows this chapter. I will take the common adjustments. 1. So they have given the balance sheet, all of that is fine. How do I know it's internal reconstruction in exam? Generally the hint will be reserves will be in negative. Reserves will be in negative. That is 1 number hint. And beyond that, question they will tell prepare internal reconstruction. Journals are mandatory. This is one chapter where you have to prepare journals and balance sheet. Remember, guys, this chapter you cannot tell your balance sheet will not tally. Why? Because you already have an existing balance sheet which is tallying in the question, that you can't untally it, correct? Unless you are an expert, then you will not make the tally. Then you are going to pass some journals, 10 marks sum, roughly about 10 to 12 journals you will pass. Even if your journal is wrong, Your journal will have a debit and credit. So there will be 10 debits and 10. Give impact for the 10 debits, give impact for the 10 credits. Your new balance sheet and reduce should come. Even if your answer is wrong, you don't tell balance sheet is not tallying. It's just the 10, 12 journals. Are you following, guys? That is one main thing. So we'll go back to the sum. Okay. Let me take some random adjustments. Court approved. Now what is this? Court approved. One more place where we lose presentation marks in internal reconstruction. In the journal entries relating to share changes in internal reconstruction, what should you do? Narration is mandatory, where you have to add on the word being scheme of internal reconstruction reduction of share through a resolution passed under section 66 and approved by the court. That narration is important. Look at the study mat for those entries wherever share capital changes. Your narration should have the word through court approval. The word court approval should be there in my narration. No need for all Path journal. That equity shares and preference reduction, that narration is important, it carries marks. Sir, I wrote narration, will I get marks? If you don't write narration, you will lose marks. Those words are missing. Are you following, guys? Okay. Now, for example, preference shares are written down to 75 each and equity shares to 2 each. Okay. Now, what is the preference shares here? Preference shares, 4,000 preference shares of 100 each. So 4,000 into 100 is becoming 4,000 into 75. Similarly, 75,000 preference shares into equity shares of 10 becomes 7,000 equity shares of 2 each. Whatever difference comes here, gain is 75,000 into 8. Here gain is 4,000 into. This is gain for me. Yes, shareholder loss, separate legal entity, company gain. This gain will be transferred where, guys? Capital reduction account. Are you guys following? Understanding? That's it. So the entry will be equity share capital to capital reduction and to new share capital. And same way, preference share capital, write off the whole amount, create a new preference share capital. Are you following, guys? Clear? Okay, let's take other adjustments. Now, next key adjustment which comes in most of the sums is this one. You will find them in most sums. One is, the adjustment says, there were capital commitments totaling to 2,50,000. These contracts are to be cancelled on payment of 5% of contract price. This is a common adjustment which comes. Now this is a new transaction. That means I have a contract for 2,50,000. I am not able to honor that. So I have to settle that by paying how much? 2,50,000 into 5%, how much, guys? 12,000 without calci. Good. So 12,500 without calci. This will not be in my balance sheet. I have to create a new entry. So I will write to bank 12,500. Debit what? Normally I will debit P&L, but this transaction is happening because of internal reconstruction. So I will write capital reduction account. Are you guys able to follow, guys? Understanding? I'm just taking a few key adjustments. Rest and all are very simple. Create a provision. What is the entry for provision, guys? What is the entry for provision? P&L account debit to provision for bad and doubtful debts. Here to be provided for bad debts. So what is entry for bad debts? Normal entry for bad debts. P&L to debtors. Normally P&L to debtors. Now instead of P&L, I will write what? Capital reduction account debit to debtors. Like this we will keep doing it. Are you following? Okay. Next one, I'm just trying to take some key adjustments. This is a solution. Are you okay with the key adjustments, guys? Hello? Okay. Okay. Now, let me go to the practical questions in this chapter where we have good sums. Okay, one more important adjustment. Shares surrendered. I will come to that in the ending. Okay. Sometimes they will give one. taking one more adjustment. Sometimes they will mention, they will talk about preference dividend are waived. Have you seen this? Our students get confused. When preference dividend are waived, you don't have to pass any entry, because in balance sheet only if here I can see dividend payable, and if this is waived, it's a sacrifice of liability, correct? This preference dividend is a footnote which is a cumulative preference. So this one, if it's waived, you don't have to pass any entry. In some sums they will tell the shareholders have agreed to waive preference dividend. Which sum is it? I'm just trying to find that. Did you find it anywhere, guys? First sum. Okay. Illustration 1, correct? Yeah, this which one? Okay, super. So the same question of the preference dividend which are in arrears for 4 years, 3/4 of them are waived and equity shares are allotted for the remaining of rupees 2 for the remaining 1/4. So go and search the balance sheet. Do you have any liability of preference dividend? No, not there. I'm seeing, I am not able to find it, but just see again if it's there. Dividend payable, nothing is there. That means this is a liability which is not yet recognized in books. It's cumulative preference shares. So how much is the preference dividend? If I take here 4 lakhs, correct? 4 lakhs into 6% into 4 years. Totally 4 years, correct? How much is that? This 96,000 was never a liability. It's only a cumulative preference shares which I may have to pay in the future. In this they are sacrificing 3/4. I don't care. How much I have to pay now additionally? 96,000 into 1/4. How much? 24,000 is my new payment, for which I am giving shares each worth 2 rupees. So 24,000 divided by 2 is how much? I am giving 12,000 new equity shares. I am issuing equity shares. So my entry will be 2 equity share capital. 24,000. Normally when I issue shares I will debit what? Bank. But here I am not getting money. I am giving you shares for free, but for a dividend. So for me it's expense. So normally I will debit P&L. I can't debit P&L. Capital reduction account debit to equity share capital. How much, guys? 24,000. This will be my entry for preference dividend. I am taking key adjustments, guys, not the whole sum. Are you following? Okay. Next, this sum is actually a good sum. If you want to practice this illustration 2 or this is illustration 3 itself covers a lot of good adjustments. Okay. Now let's take adjustment number 4. Debenture and 3 and 4 together. Interest payable on debentures to be paid in cash. Whenever you are doing any transaction with debentures, check if interest is there, any adjustment is there. So go to the question first. Try to find debentures over here. Interest payable on debentures is 6%, which is 22,500, and debentures in the question is 3 lakh. This related adjustment what he has given. Try to follow. Interest payable on debentures is to be paid in cash. That means it's simple, guys. This 22,500 my entry. Already it's a liability. So I will debit my other current liabilities. Account debit 22,500 to bank 22,500. That's it. This is done. Clear? Now if I come down, debenture holders agreed to take over freehold property, book value 1 lakh at a valuation of 1,20,000 in part repayment of their holding, and to provide additional cash of 1,30,000 secured by floating charge on company's assets at an interest rate of 8%. What are they doing? The full debenture holders to whom I have to pay 3,75,000. Let me erase this part. This is done, correct? So I have to pay them 3,75,000. This guy has agreed to take over the freehold property, book value of 1 lakh at a valuation of 1,20,000 in part payment of their holdings. full stop. Full stop. Let's go check. What is the freehold property? 4 lakh. In this 4,25,000, they are taking freehold property worth 1 lakh the book value, and the balance is this 3,25,000 is still with me as of now. But this 1,20,000 debentures are taking over at 1,20,000. So they are ready to agree 1,20,000 as a settlement. Balance how much is there? 2,55,000. Let's go read the second part of adjustment. And to provide additional cash of 1,30,000 secured by a floating charge on company's assets. இவன் என்ன சொல்றான்? Already you have to pay me 2,55,000. இதை தாண்டி I'll give you more money. So first let me account for what has happened. What has happened? How much of debentures are gone out of books? 1,20,000. So my entry will be 6%. Debentures account debit 1,00,000. What this guys took? Freehold property. So 2 freehold property account how much? 1,00,000. That means it's like my debentures in the books liabilities took 1,20,000 worth of freehold property, but whose book value is 1,00,000. So what is the gain for me? 20,000 is the gain for me. So 2 capital reduction. This will be my entry. Are you guys able to follow? Okay. Now he's additionally giving how much cash? 1,30,000. Providing cash. What is the entry for receipt of cash? Cash or bank account? 1,30,000. To what? New loan, correct? He's issuing by floating charge and interest rate of 8%. What is the debentures interest rate? 6%. So he's basically issuing new 8% debentures at 1,30,000. Are you following, guys? So what is the debentures already in the books here? 2,55,000. Now new debentures 1,30,000. It will be 3,88,000. 85,000, correct? 3,85,000. Check if there is any other debentures adjustment here. Debentures related adjustment. No, not first point, third, fourth, no. Eighth point is it's regarding freehold property. Nothing to do with debentures. I'll come to that. So go see debentures value, guys, in the revised balance sheet. We have to check if it's correct. Otherwise, no point. 3,85,000. Old one is 2,55,000 and 8% is 1,30,000. Are you guys following? Now come to freehold property. Freehold property in our adjustment that we did became how much, guys? 3,25,000. 4,25,000 1,00,000 I gave. I have 3,25,000. This 3,25,000 is revalued to what? 3,87,500. So the excess gain is what? Revaluation reserve. That goes to my revaluation reserve. No. This revaluation is because of internal reconstruction. So that gain also goes to my capital reduction. My freehold property will now in balance sheet become 3,87,500. Are you guys following? This is how you do the adjustments. Basically what we have to do is, like this they will give for each liability, each creditor, some share capital, some adjustment. You have to pass journals for each. It will come to around 10 to 15 journals and then prepare the balance sheet. Are you guys following? Let me take one last sum in this. Go to the practical problems. There is one very good question. Practical question, just one question, and then we will go to the next chapter. Yeah, in practical questions, we have a concept of first debentures and second debentures. I'll tell you which one. Question 9 practical. I think this illustration, no? Illustration or practical? Practical question 11. No, I'm not able to find it here. Which one? This one, okay. This one, yes, I was waiting for this one. So here it is, Green Limited, practical question number 3 as per ICA study mat. Here it's question 3, okay. Last sum I'm not doing the whole sum, I'm only going to do debenture adjustment. Very big important adjustment. One unique sum, okay. Green Limited has decided to reconstruct balance sheet, has accumulated huge losses, okay. Fairly similar balance sheet as all sums. And then if you come down, you can see 12% first debentures 5 lakh, 12% second debentures 10 lakhs. And then if you come down further, there are two people, X and Y. Their interest in the company Green is given as follows. X has 3 lakh first debenture, 7 lakh second debenture. Trade payables he has 2. So X itself is a creditor for. Are you following? And he also has fully paid up shares 3 lakhs, partly paid up shares 5 lakhs out of the total share capital of 25 lakhs and 40 lakhs. So Mr. X is a debenture holder, trade payable and shareholder. So now following scheme of reconstruction took place, approved by all the parties and also by the court. First uncalled capital is called up, that is fine. I am only focusing on X. If I do for X, you will understand for Y. X is to cancel 7 lakh of his total debt other than, so leave share liability, and to pay 2 lakhs to the company and receive 14 lakhs first debentures for the balance amount. We have to journalize this. So how much is cancelling? 7 lakhs, and is also paying the company 2 lakhs. So we all need someone like X in your life, guys. Why? Look at this fellow. Forget the shares. They are saying other than shares. So I have to pay X. How much? 12 lakhs. In this 12 lakhs, he is cancelling how much? 7 lakhs sacrifice panna. Other Tandi, he is giving extra 2 lakhs. He is saying, I have lot of money. You please take this also. I know I won't get it. He gave more money. So out of 12 I cancelled 7. I am left with 5 lakhs. Plus he is giving 2 more lakhs. Are you following, guys? For what? They have not told what is taken. For 14% first debentures for the balance amount. So what I have to do here, simple. Look at this. X is cancel. So basically X is cancelling how much? 7 lakhs. Okay. So and is giving money off. So I will write, if I just go to the page here, or let me do it here itself, sorry. Yeah. So he is giving me in bank how much? Bank account debit 2 lakhs. And he is sacrificing how much? 7 lakhs is a sacrifice. But which is sacrificed? Which 7 lakhs? Are you following, guys? Will I cancel first debentures or second debentures or trade payables? To the extent of which one? Full second you will cancel and keep balance as first and trade payables. Let me write these values once. Can you help me out for X? First debentures, how much? He has 1 second. For X, he has first debentures, how much, guys? 3 lakhs. Then second debentures 7 lakhs. Then trade payables 2 lakhs. Correct? This fully he sacrificed. No, he sacrificed only. So 2 sacrifice is my gain. I'll write 2 capital reduction account 7 lakhs. Correct? Now which one to debit? My question. That is the question. Which one do I debit? The question is saying for whatever he is balance, I am issuing new 14% debenture account. So what is the total of this? 12 lakhs. I will debit all of this. I will close everything. Instead, he is getting new 14% debentures of 5 lakhs. Are you following, guys? So அவனுக்கு கொடுக்க வேண்டிய எல்லாத்தையும் க்ளோஸ் பண்ணிட்டு I will transfer whatever is sacrificed to capital reduction. So balance 5 lakhs goes to my new debentures. Are you following? But beyond this, he is also giving cash of 2 lakhs. Should I repay it to him or is giving for free? Look at that. Should I repay or is he giving it for free? And to pay 2 lakhs to the company and to receive 14% for debentures for the balance amount. That means he's again giving me cash, bank account, debit 2 lakhs to 14%, new debentures how much? 2 lakhs. Are you guys following? Why to 14% debentures? It's not a sacrifice, correct? I'll explain. Follow. Let's see if I can explain with solution. I'll explain. Where is that? This is Y. Capital reduction. Where is this? Yeah, full sacrifice. This is X, correct? Oh, they have done it somewhere down, I guess. Yeah, fine. I'll again explain, guys. Follow. What is the total liability for X? This is the new adjustment, guys. I don't know if you have seen it or not. This is the most difficult adjustment in this chapter. Okay. X. First debentures. How much? I am closing it fully. Okay. Fully I am closing it. I am going to pass one entry. Book they would have passed 4 entries just to confuse us. I am going to pass one entry. First debentures account debit fully closed. Next. Second debentures account debit. How much? 7 lakhs. This also I will close fully. First let me close all this liability. Third. Trade payables account debit. Fully I am closing it. But is fully for me gain? No. He has specifically agreed to sacrifice how much? 7 lakhs. So I can transfer to capital reduction account only 7 lakhs. Are you guys following? That then he's also giving me how much money? He is given me a bank of. That also come on debit side. So this fellow has been very kind. He is giving 2 lakhs and sacrificing everything to the extent of 7 lakhs. That means totally he has given me 2 plus 3 plus 7 plus 2 how much? 14 lakhs. In that 14 lakhs he is sacrificing. How much is left? 7 lakhs. This 7 lakhs will go to my new 14% debentures. Are you guys following now, guys? Clear? Similarly, if you want to do it quickly for Y, just for confidence, what is Y doing? He is cancelling 3 lakh of his total debt. He is giving 14% debentures for the balance. Y you should pay how much? In that is cancelling how much? So entry will be full 6 lakhs debit to capital reduction 3 lakhs to 14% debentures 3 lakhs. If I go to my entry for Y, you can see full 6 lakhs of Y is cancelled. 2 Y new debentures, 2 capital reduction 3 lakhs. Same way for this fellow. 14 lakhs is the amount of X 77. What they would have done in the book is on liability first they are transferring to the respective account. That's it. Should I do that? Not necessary. You can put it in narration. Clear? Understanding, guys? So if you look at this sum, only point B and C are the key points. After this, whatever money is available, they are saying they will write off. Are you following, guys? Are you understanding? Clear? So this is internal reconstruction. I am only focusing on the key adjustments. What are the key adjustments? We will repeat that capital commitments 5% penalty is 1. Preference dividend is 1. This one, debentures first 10, second debentures is 1. And last key adjustment, with this we will close this chapter, something called share surrender, where students get confused again. If share surrender comes, this chapter is hard. No, it's not hard at all. Basically what happens, I will not take an illustration, I will give an example for you to understand this better. balance sheet, equity share capital 50, let's say reserves and surplus is 0 for ease purpose, and let's say creditor is 100. Okay, now let's say creditor is sacrificing fully. What entry I will pass? Creditor account debit 100 to capital reduction account 100. My CR will have 100. This is a normal sum. But in share surrender, what will happen? And let's say equity share capital also is sacrificing fully. My entry will be equity share capital account debit 50 to capital reduction 50. I will get here 50 if that happens. Correct? Now in share surrender, what happens? Okay, let this be like this. Now third scenario. Now everybody sacrificed. What to do? My capital reduction has 150. Correct? Now my creditors is taking shares of 75. Creditors is taking shares of, okay, let's not take 75. Is taking shares of 40, guys. Taking shares of 40. So I'm issuing new shares to equity share capital. How much? 40. Capital reduction account debit 40. Correct? So I will write here 40. What is my closing balance? 150 minus 40, 110. So my new balance sheet post internal reconstruction will be like equity share capital 40, reserves and surplus 110. Are you following, guys? First shareholders full sacrifice they did, creditors fully did sacrifice. Then for those creditors I am issuing new shares of 40. So my new balance sheet becomes equity share capital 40, reserves will become 110. Are you guys following? Understanding this? This is without share surrender. I didn't use share surrender method. Now same example with share surrender, what will happen? Now in share surrender, visualize the same balance sheet. Equity share capital 50, reserves and surplus was 0, creditors 100. First shareholders are sacrificing. So entry will be equity share capital. I am writing two accounts, share surrender account, capital reduction account. But this time the problem in the above method was, if you look at this, I cancelled shares. I cancelled shares and again reissued. Journal entry is easy, but in reality the procedure of cancelling and reissue shares is difficult. So let's say Bharatwaj is giving shares. I have to reissue it to Vasundhara. I will cancel his shares and again give it to Vasundhara. Instead, get his shares, replace the name and give it to Vasundhara. So I will do something called share surrender. So when shareholders are surrendering this 50, my entry will be equity share capital account debit 50 to share surrender account 50. It is a gain only. Promise it's a gain. But this gain will be transferred to capital reduction later. Now let's say creditors, I am saying out of 100, they are sacrificing fully. So my entry will be creditors account debit 100 to capital, same like previous sum, guys, 100. Correct? Now to those creditors I am issuing shares. So my entry will be, I am giving them equity share capital of how much? 40. But instead of debiting capital reduction, I will debit what, guys? How much? 40. I will give 40. Are you following? Now what is left in share surrender account balance? 10. This 10 will be transferred to capital reduction. I get more, 10. So closing balance is, now if I prepare the new balance sheet, again my share capital is 40, reserves and surplus 110. The difference is whatever shareholder is sacrificing, in previous case everything went through the same account. Here, if you in exam you will not get confused if you open this account. Here what I am doing, I am transferring to a temporary dummy account called share surrender. Inga one adjustment now, there will be 10 adjustments. Take it wherever shares comes, share surrender, and balance goes to my capital reduction account. Now this I am going to make some small iteration to this adjustment. instead of creditors cancelling 100 and reissuing 40, they are effectively cancelling how much? 60. So my adjustment would be like this. Creditors sacrificed 60 and received equity shares for the balance in Kurupa. Creditors sacrificed 60 and got shares for balance. So now my entry will be creditors account debit 100. Their creditors are sacrificed 60 and getting shares for balance up. So fully gone. Creditors account debit 100. 2. Capital reduction sacrifice how much? 60. 2. Equity share capital 40. Are you guys following? So now if this is where it will get little tricky, guys. Follow. Okay. Now I am again redoing the second adjustment. First adjustment, equity share capital 2. Share surrender 50 came, correct? The second adjustment is the main adjustment how you get in book. In book what they will tell, creditor sacrificed 60 and he took shares for the balance. So my entry will be creditor account debit 100. 2 capital, he sacrificed 60 up. So I will write here by creditor 60 and 2 equity share capital 40. Sir, from where I gave shares, sir? From the shares which are surrendered, I gave it to him. Now sum is over. How much is left? 50 is left here. This 50 will be transferred here. 60 plus 50, same 110. Meaning, sir, I am not getting it, sir. We are basically skipping one entry because of passing this direct entry. What is happening, if you look at this, here you are crediting share surrender and again debiting share surrender. But when I am passing this entry, what is actually happening? Sacrifice of 60 is fine, but this 40, ideally I should have debited creditors only for 60 and I should have debited share surrender account debit 40. But book they will not do it like that. In book what they will write? Creditors will be debited for 100. That means this other 40 is debited too. Which should have been debited here is not debited. Are you following, guys? I'll again repeat this part. Follow. Share surrender account credit was 50. Capital reduction has nothing. Take the balance sheet. Equity share capital 50. Creditors 100. First I cancelled my shares. Shares are surrendered. Transferred here 50. Are you following, guys? Next to what I am doing after this creditors 100 I am giving them shares for. The correct entry should have been creditors account debit 60, share surrender account debit 40, 2 equity share capital 40, 2 capital reduction 60. Now are you understanding? So creditors 100 is reduced by 60. How much is left in creditors? 40. So my entry will be creditors to capital reduction. How much? 40 will come. Are you following, guys? Correct? No, they sacrificed 60. 60 will come. And then again this 40 will come. Meaning the total of both these entries put together. First I am giving creditors shares. So creditors I am splitting into 2. And the 60 shares alone is going to capital reduction sacrifice and I am giving him shares. I am using share surrender 2 equity share capital 40. Are you getting it? This part is not touched. I debited only 60. In this 100 how much is left still? This 40 is also transferred to capital reduction. Share surrender debit by 40. You have 10 which comes over here. 110. Are you getting it? But we don't do it like this in exam. Exam it is not done like this. What they will do, what is done in the study mat and what you should be doing is, when creditors are taking the shares, entry will be like this. Creditors account debit 100 debit panino. Because creditors is getting closed in the books. For this 100, how much is sacrificing? So to capital reduction 60. So if I write new account here, capital reduction, I will get 60. And now what is taking? Equity share capital. Entry is tallying up. Ideally, when you are crediting 40 here, I should have debited here. Share surrender. But I didn't debit. That means creditor you are doing both these. That means this 40 is not, it's actually used. So this 50 has two parts. 10 unused share capital, 40 which creditor took it but I didn't debit here. So this I will take it, I will transfer this full 50 over here, 60 plus 50, 1110. Everybody will understand 60, 40, 10. But 60, 50 is what you have to do in exam. See, share surrender itself I will need 2 to 3 hours to explain. I am trying to be very fast. How many of you not understanding share surrender? No problem. One. How many of you genuinely understanding share surrender? Clear, guys. Exam if you get confused, best is to prepare share surrender account and capital reduction account. In essence, instead of preparing one account, capital reduction, and transferring everything to that, you are transferring to two different accounts. One is share surrender, one is capital reduction. You pass all the entries. In share surrender ending, whatever is the closing balance, transfer to capital reduction. Are you able to follow, guys? Are you understanding? The only tricky part over here is this one. By debiting creditors 100 and giving them shares, you will be confused as to seeing why the account is still having 50. That is because creditors should have been debited only for 60. But I debited 100, so the extra 40 which is a gain for me is sitting in share surrender account, which will be transferred to capital reduction account. Are you following now? Clear? Getting it, guys? So with this we will pause or close internal reconstruction. I am not doing the whole sum, guys, but the key adjustments, share surrender, that capital commitments one, preference dividend, first debentures, all these we finished. Rest and all are simple. Creditor, debenture took asset was given to liability, all of that, transfer to capital reduction, write off that goodwill even if question is silent, balance goes to capital reserve. Are you guys following? Anybody wants me to do anything more in this chapter? Yes. Debenture holder we give interest, yes. No, now his doubt is in question debenture holder interest. Depends on the question. If it's already there in balance sheet means I have accounted. Sometimes it will not be in balance sheet. Then you have to account. Based on the question, hint will be given. Debentures are redeemed in the beginning of the year, or debentures are repaid, or interest was not paid. And some hint will be given somewhere in the question. So his doubt is balance sheet also they have not given interest. Adjustment they will give some clue, but if they are saying debentures are taking so much money settlement, then I will assume that this is happening on mostly 31st March. So interest is paid, I will not account for it. Already castle every good interest law. So unless question specifies, then I will pay. Otherwise just give a note. It's assumed that interest has already been paid in the balance sheet. See, if a trial balance is given, asset value is given, assumption is depreciation is yet to be charged or already charged. Already charged. When do you charge? Only when they specify. So interest also same assumption. Are you following, guys? Anybody else any other doubt in this chapter? Hello? Anyone?
Sir, in certain questions in study material they have not written off intangible.
No. In study material in certain questions they would have not written off intangible asset. Check if capital reduction balance is there. So in my capital reduction account, this is credit off, this is debit side. So if you have a closing excess, then I can write off intangible assets. Balance say lesser. How can I write off intangible? Then write off to the extent balance available. Are you following? Otherwise, if question is silent, you have to write off. Why? As per AS 26, you will write off. Are you following, guys? Any other doubts? Clear? Can we go to next standard? Now we will move on to AS 19. Okay, yes, perfect. Okay, follow guys. Internal reconstruction, was it of some use guys? See, we hardly see chapters like internal reconstruction, buyback, amalgamation. In our 20 hours we can't do much, but I'm trying to focus on the key adjustments which come in exam. Is it of some use guys? Hello? Yes, sure. Already studied, now it will be like revision for you. First time, of course, this chapter will be challenging, which internal reconstruction, if you didn't study. Anybody studying first time understood? No first timers? Okay. Let's go to AS 19, everyone's favorite standard, talks about leases. Okay. Yes, favorite Bharatwaj. Okay. First time. Okay, get ready. Okay. Now, we will spend about 45 minutes on this standard. We will easily finish. Just like deferred tax AS 22 yesterday, I have one example. We will discuss that example. I am going to derive all the formulas what is there in the book. Sir, GRV, nothing. I am going to derive everything. You will understand that with the example. Then sums are like this. I will just do 1-2 sums. That's it. Okay. So this in deferred tax, how that one example gave you the full concept clarity. Here also we will do full concept clarity. Are you following guys? Clear? Okay. Now, in AS 19, let's start off. We have, forget about the terms in the standard. Let's say, we'll take 2 examples. Let's take Ambrish is there. Ambrish is staying in a rented house. We'll also take, yes, Rajaram. Okay. Rajaram is buying a BMW car. 2 different examples. Okay. Now, in Ambrish case, Ambrish is the one who is the tenant. There is some house owner. Rajaram only took the car on hire, and BMW car company is the owner. Now, in Ambrish example, who will pay money to whom? Tenant will pay to the. In Rajaram example, who will pay money to whom? Rajaram will pay to the owner. Correct? Now, in Ambrish example, staying in the house, can he put, let's say, can he change the paint of the house? Can he repaint the house? Can he install a new AC in the rented house? Can he put the Ani and put some frames? Can he make 2 bedrooms into 1 bedroom by breaking the wall, guys? I meant breaking the wall, guys. 2 bedrooms into 1 bedroom. Okay. Can he do all of those things, guys? Let's say in the rented house, from top water is leaking, AC, some pipeline leaking. Who will spend that money for repair? House owner. Rented house, owner itself gave the AC. Now the AC is not working. Who will repair it? Owner. Will you repair it? No. Why should I do it? Not my AC, correct? Are you following, guys? So these are the examples we saw in this side. In this case, who is paying money to whom? Rajaram is paying money to the BMW car company. Now, in Ambrish house, can Ambrish break the wall if he wants to break it? In Rajaram example, he is paying EMI. Can he break the car glass if he wants? Car is going puncture. Who has to bear the expense? Let's say glass broke. Who has to bear the expense? Can he burn the car if he wants to burn it? Yes. All that he has to do is pay EMI. In both cases, you are paying the same some EMI or some rent, but you have told me a difference. In Ambrish case, you don't have the full benefit of the asset. Only limited rights you can use. Let's say Ambrish is staying in a house in Nungambakam rent. Suddenly metro station came there. That house value became double rate. Metro didn't become the house, so nearby it came. So house value became double rate. Who will get that benefit? Owner. This BMW car, Dhoni came and signed. So value increased. Who will be benefited? Rajaram. Are you following? So this on the left hand side is called, so Ambrish is called, this is called an operating lease. This is called a finance lease. Basically normal rent transaction, normal EMI transaction, the standard gives some 10 to 15 fancy terms, guys. I'm going to make those fancy terms basic for you. So operating lease and finance lease, I don't call him tenant anymore. I will call him as lessee, and house owner will be called as lessor. Here also Rajaram, no hire and all, he is called lessee. The BMW car company is called lessor. Where the lessor, BMW car company, is transferring significant risk and rewards to the other party, it's called finance lease. Where only some rights are transferred, it's called an operating lease. Now forget about lease. You tell me the entries they will pass, guys. You already know the standard in and out. What entry will Ambrish pass when he is paying rent? Rent account debit to bank. What entry will house owner pass when he is getting bank account debit to rental income? Correct? Bank account debit to rental income. Bank account debit to rental income. Correct? This only is entry for operating lease. Instead of rent, you will write finance charge. We have a technical term. You will write operating lease expense, all of that. Okay. Now come this side. In this case, who will charge depreciation? Ambrisha, house owner. House owner only will charge depreciation because he owns the house. So in operating lease, depreciation will be charged by house owner. Even if you stay in the house for 40 years and pay rent, will the house become yours? No. That's why the agreement keeps getting renewed every 11 months. Okay, next. Come this side. BMW car is sold to Rajaram. He is paying lease. First Rajaram will get the asset. So he will pass entry BMW car account debit. But has he paid yet? No, he has to pay. So to some liability account. Correct? For BMW car, they made a sales. What's the entry for sales? Debtors. Rajaram basically account to sales. Correct? This will be my entry. Are you following, guys? This only we will have fancy terms later. This entry number 1. Do I have an entry number 1 in operating lease? No. When a rental agreement is made, no entry is passed. Only when the rent payment is made, we pass an entry. Come here, second case, BMW second. EMI is paid. Forget about this chapter. EMI is paid. What entry will Rajaram pass for paying EMI? To bank. EMI includes two things. Principal, interest. So principal will be debited to liability account. Interest will be debited to P&L. Sir, purila sir. Let's say you took a loan of 100. You are paying interest of 10. And you are paying with principal of 5. You are repaying 15. Every putting an entry to bank 15. Loan account debit 10. Interest account debit 5. That's all. That's my entry. So here also my entry will be liability is my principal 10. Interest is 5. To bank 15. What entry will BMW pass? What entry will the bank pass when they receive money? When I receive money, I will debit. Bank account debit 15. 2. Who is paying? Debtors is repaying the principal of 10. 2. Interest income 5. Are you guys following? That's it. So when I am paying, the payment will be split into principal and interest. We don't use those terms. I'll get to the fancy terms later. Recipient also, I'm getting the money. I will debit bank and credit receivable and interest. Are you guys following, guys? Perfect. This is the entries accounting for finance and operating lease. Next, third, depreciation. Will it come in operating lease? In the books of Ambrish? No. It will come only in the books of lessor, who is the owner. Similarly here, depreciation. Will it come in the books of Radharam? Yes. Because asset is in his name. No, asset is in the name of BMW. But I am using it, using the principle of substance over form. I have to account based on the substance of form. Substance, who's using it? Radharam is using it, so I will account it. Will depreciation come in BMW? No, because it's being used by the other party. Are you following, guys? So three core principles. Two types of lease we have. Operating and in both lease the parties are called lessor and lessee. Online repeat. Everybody in third floor, everybody repeat, guys. Lessor and lessee. In operating lease, who's the owner of the asset? In both owner as lessor, but sale is accounted only in the books of lessor in a finance lease. In the Radharam example only sale is accounted. In rent example, no sale. Lease payment, in operating lease, normal payment, no split as principal and no need to split because I never recognize liability. Rent, so we just make normal debit to P&L. Here the payment is split into principal and interest. Third, depreciation, in operating lease only the lessor, the owner of the house will provide depreciation. Here the user will provide the depreciation. Are you guys following? Now let's proceed further with an example. Let's say this one example is enough. We will take 15-20 minutes, no problem, but this whole standard will get over. Let's say we take Zomato. Okay, Zomato is a company where they have an employee. We'll take, okay, whom will take? Where is Shiva? Okay, we will take let's say, okay, we'll take Shahrukh. Okay, Shahrukh is the employee of Zomato, expert employee. Because of him, sales in Chennai is very high. He is not delivery executive, he is the manager. Now Zomato wants to expand in Bihar, so they told Shahrukh, you shift from Chennai and you go to Bihar and you work there for 3 years. Shahrukh said, no, I will not go. So Zomato said, okay, I will buy a car for you. So the follow the story, guys, we'll understand with that. So Zomato is going to, let's say, Hyundai and asking them for a i10 car, saying that one of my employees, Shahrukh, will be using this car in Bihar for the next 3 years. So now I am telling Shahrukh, we will send you to Bihar with a car, driver, house, everything. Now he is thinking, okay, fine, I have everything with me, let me go there for 3 years. He shifted to Bihar. Are you following us for what? Expanding Zomato business over there. Are you following, guys? Okay. Now, who is the one? And this agreement was, Zomato told, Hyundai told the car is going to cost you 6 lakhs if you want to buy now. Zomato is thinking, why to buy for 6 lakhs? What if this fellow comes back within a year? We don't know, he's going first time. So I asked, do you have any EMI option? They told yes. You pay, sorry, let's take the car as small change. Let's say if you buy the car now, it is 5 lakhs. You have to pay 5 lakhs and buy it. Hyundai told yes, I will give EMI. How many years you want the car? They said we want it for 3 years. So they told 2 lakhs plus 2 lakhs plus 2 lakhs. They told every year you pay me EMI of 2 lakhs, I will give you the car. So the agreement, now they have fixed this. Zomato will pay Hyundai 2 lakhs, 2 lakhs, 2 lakhs each of these 3 years. This car will be used by Shahrukh in Bihar. Who is the lessor here? Lessor. Lessor. Hyundai. Lessor is the one giving the car, seller of the car. Who is the lessee? Who took the asset on lease? Zomato is the, who is Shahrukh? He is using the car. He is a third party. We don't care. Accounting is only for lessor and lessee in both our books. Are you following, guys? So today if you buy the car, you have to pay how much? But because of the lease agreement, you are going to pay 6 lakhs. Are you following till here, guys? Understanding? Who's going to pay to whom? Zomato will pay 2 plus 2 to Hyundai. Are you guys understanding till here? Yes, super. Fine. Next. At the end of the lease period or end of 3 years, what happens to the car? Car, let's say project in Bihar is over. Zomato told Shahrukh, you come back. We don't want this car. I gave the car back to Hyundai. What Hyundai will do with this car? Hyundai got the car back. Return it. See, Hyundai agreement was for 3 years. Car came back to Hyundai after 3 years of usage by Shahrukh in Bihar. That too, it's not his car. So the car came back. Hyundai didn't know what to do with this car. They wanted to sell for scrap. Are you following, guys? Are you understanding? 3 years over. Car came back to Hyundai. So Hyundai will now sell this car for scrap, and let's say they're going to get 50,000 rupees. Are you following? 50,000 rupees, guys. 3 years old car. Varuma varada? Hello. 3 years old i10 Hyundai car. 50 varuma. Even if Shahrukh used. Hello. Okay. Now, Shahrukh is sitting in 3rd floor, guys. Okay. 50,000 rupees. Online students recording, ignore, you focus on this. I'm not talking about the Shahrukh you have in mind. Now, so for Hyundai, 50,000 is called residual value. Now look at this. We go back to CA foundation. A contract, a sale can be made only when there is consideration. Contract is valid only if there is consideration. Now this is so well drafted in AS 19, where the 3 years what you paid 2 lakhs, 2 lakhs, 2 lakhs is not consideration to buy the asset. It is consideration to use the asset for that respective year. Are you following, guys? Now, end of 3 years, Zomato is thinking, sorry, why should I give the car back? 6 lakhs pay pantane. I want the ownership in the car. That's why you pay EMI to get the ownership. Hyundai also wants to give it. That's why I'm charging you 2 lakhs plus 2 lakhs plus. But I can't give you the car for free. So at end of the lease, this is not sale entry. Ending, I have to pass another entry for transferring ownership. As per Sale of Goods Act, read along with Contract Act, to transfer ownership, consideration is mandatory. This 6 lakhs is not consideration. This is consideration to use the asset. So end of 3 years, what they will do, Zomato will pay to Hyundai another small amount, very nominal amount, rupees 1. In reality also, if you see EMI, the last EMI, apparama there will be 1 rupee, 10 rupees EMI. One small amount will be there. That is the entry. So Zomato will now pay, apart from 6 lakhs, 1 rupee, ownership will be transferred. Now the car will come to Zomato. Are you following, guys? In our example, let's assume that small amount is 10,000 rupees. Our example, let's assume it is 10,000. So what is the 10,000 in our story? After 3 years, if Zomato wants to buy this car, even though Bihar project is over, for new location, Zomato has to pay how much? 10,000. To whom? Hyundai. But will they pay? They may pay or may not pay. So now look at the scenario, guys. Are you following the story? See, we will spend 10-15 minutes for story. Story over, standard over. Promise. Okay. Now, look at this. End of the 3 years, Zomato will pay to Hyundai how much? 10,000 rupees additional to get the car. Now take Hyundai. If Zomato pays, how much will Hyundai get? 2 lakh plus 2 lakh plus 2 lakh plus 10,000. Correct? 6 lakh 10,000. If Zomato does not pay that 10,000, how much they will get? 2 lakhs plus 2 lakhs plus 2 lakhs plus in the 50. Will somebody else is giving up? So I will get 50. You will get 6 lakh. Look in the angle of Hyundai. 6 lakh is guaranteed. But beyond that, either I will get 10,000 from Zomato or I will get 50 from. So that means for Hyundai, out of this 50, how much they will definitely get? 10,000. See, if Zomato pays, they will get 10,000. If Zomato is not paying, they will get 50. So out of the 50, if you are Hyundai, how much can you confidently tell? Yeah, definitely 6 lakhs mala. 10,000. How much is doubtful? Depends on whose action. Zomato's action after 3 years. So out of this 50, what is 50 called? Residual value. How much I will definitely get? So definitely we call it as guaranteed. Residual value is 10,000. So the other 40 is unguaranteed. Residual value is 40,000. Are you guys following? Okay. We are going to build on all the terms. Every term is concept. Okay. So Hyundai is going to get 50,000 as residual value, but in that guarantee they will get 10,000 GRV. So UGRV is 40,000. This is formula. GRV plus UGRV, RV minus, I don't know, RV minus GRV is UGRV, whatever guys. The same thing. Are you following guys? 10 plus 40 is 50 guys. You have to find out. Clear? Let's proceed further. Now, you are going to Zomato's office. You are going to Zomato's and you are standing in the terrace of Zomato's office. Okay. And you are looking at Hyundai. Let's say Hyundai is there. You are looking at Hyundai. How much are you going to pay them? In the whole period, how much you will pay? 2 lakhs plus 2 lakhs plus 2 lakhs, and maybe you might pay 10,000. If you pay less than 2 lakhs, will you accept? 1,99,999, will you accept? 2 lakh 10 rupees, will you accept? So less than 2 lakhs you won't accept. So for you to use the asset, you have to minimum pay how much? For the purpose of this what? Lease. For this transaction is called a lease. Minimum you have to pay how much? So this is called minimum lease payments. Are you following guys? It's called MLPs. Okay. It's called MLPs is what Zomato is going. Who is Zomato? For example, lessee. Zomato is lessee. Will pay to the lessor. How much? 2 lakh plus 2 lakh plus 2 lakh plus 10,000. They may pay or they may not pay. But from Zomato's angle, it's going to be 2 lakh plus 2 lakh plus 2 lakh plus 10,000. Correct? Now, what they will definitely pay? Minimum is 2 lakh plus 2 lakh plus. They may pay GRV. So this 2 lakh plus 2 lakh plus 10, can I rewrite as MLP plus GRV? This will be paid by whom? Will be paid by Zomato. Let's see from their angle. Correct? So this is called MLP from. I'll just go there 1 second. Material is easier. Yeah, 19 is here. Fine. So I just revise till here and then I will take it forward. So we have seen leases of two types, operating and finance lease. Rest I will come back to it. This is the last part of the standard. The main terms are here. We have two types of residual value. Residual value is GRV and UGRV. Our example 50, 10, 40. Are you following guys? Now this payment of 2 lakh plus 2 lakh plus 10 is from the terrace of Zomato. It's from the angle of Zomato. So this is called MLP from standpoint, standing in Zomato's terrace and looking at Hyundai. Standpoint of lessee. MLP from standpoint, my viewpoint of Zomato is 2 lakh plus 2 lakh plus 2 lakh plus 10, which is nothing but 2 lakh is MLPs plus GRV. Are you following guys? Now I'll go to Hyundai's office. I got down lifter, went to Hyundai's office, went to Hyundai's terrace. From Hyundai's terrace, if you look at Zomato, if I look at Zomato, I can see it's receipt. But for Hyundai, Zomato is paying. Are you following? For Hyundai, Zomato is paying. How much? Same 2 lakh plus 2 lakh plus 2 lakh plus. Now follow carefully. 3 years are over. The car is in a good condition. Zomato and the project got over in Bihar. Zomato is saying project over. Shahrukh, your job is over. You can go find a new job. Job ended. Contract ended. Zomato told Hyundai, we don't need this car. Keep it with yourself. I paid 2 lakh plus 2 lakh plus 2 lakh. Ended. We didn't pay how much? 10,000. Shahrukh is telling Zomato, see, can I pay the 10,000? I will take the car for myself. Will Zomato say no? Zomato is okay. See, my project was 3 years. You did a good job. Project over. So Shahrukh is telling Hyundai, I will pay you 10,000. Give the car to me. Will they agree? Yes. Why they won't agree? Or Zomato badla, Shahrukh is saying, I will pay 10,000. You take the car and give it to me. Zomato is saying, okay, fine. I don't need the car, so I'm not paying 10,000. You need the car, you pay 10,000. Now in Hyundai's angle, That 10,000 can come either from Shahrukh or. So in Hyundai's angle, they will receive 2 lakh plus 2 lakh plus 2 lakh plus 10,000. But this 10,000 can come from Zomato. Who's Zomato? Or Shahrukh. Who's Shahrukh? Third party. Now go and let's go follow. If you look at this, minimum lease payments, MLP from standpoint of lessee. Who's lessee? From Zomato's angle, aggregate of payments during the lease period 2 lakhs plus 2 lakhs plus, and GRV from lessee. How much our example? 10,000. Go to Hyundai. Lessor is who, guys? Now look at Hyundai. Aggregate of payments during the lease period. How much? 2 lakh plus 2 lakh plus 2 lakhs. Look how beautifully they are worded. And GRV from lessee or any other third party. Who's the third party? Shahrukh. That is the only difference between these two. Are you getting it, guys? So till here it's clear. So what are the terms we have learnt? Sorry. So far, lease, there are two types of lease. Operating and finance lease. These parties are called lessor and lessee. Then we learnt residual value is 50,000. That has two components, GRV and then the money you pay is called lease payments. MLP from standpoint of lessee. Who's lessee? Zomato is 2 lakh plus 2 lakh plus 2 lakh plus 10. There also it's the same. MLP from standpoint of Hyundai lessor is 2 lakh plus 2 lakh plus 2 lakh plus 10,000, or any other third party is the new addition, guys. Using up for Hyundai, I can get from Shahrukh or Zomato. That's it. Are you following, guys? Now only we are entering the terms. Follow. Now, totally, what is the money or Hyundai is going to get in this entire project, or what is the maximum money they can get in the example? 2 lakhs plus 50. No, I'm not saying they will get this, but this is the maximum possible. Can I rewrite this as 2 lakh plus 2 lakh plus 2 lakh plus 10,000 plus 40? This is the maximum they can get. Correct? So in this project of this i10 Hyundai car, the maximum they can get is how much? 6 lakh 50,000. This is called the maximum return you can get from your investment, gross investment in lease. So what is GIL? Nothing but 2 lakh plus 2 lakh plus 2 lakh plus 10 plus. Rewrite English. What is 2 lakh plus 2 lakh plus 2 lakh plus 10,000? MLP from standpoint. Now GIL who's going to get? GIL who's going to get, guys? GIL who's going to get? Lessor. So in whose standpoint? In my angle. Hyundai only is going to get 6 lakh 50. So it should be MLP from standpoint of lessor plus UGRV, which is nothing. Or I can again rewrite this as lease rental plus 40 is nothing but my plus UGRV is equal to gross investment in lease. Are you following? Gross investment, now maximum possible return. We are trying to derive the formula, and sums are very easy if you understand this. Look at this. Gross investment in lease is MLP from standpoint of lessor plus UGRV, and the 2 lakh plus 2 lakh plus 2 lakh plus 10 plus 40,000. Are you following, guys? Okay, next. Today if you buy the car, how much you will have to pay? 5 lakhs. But because of this lease, you are going to get maximum 6 lakh 50. So what is the money Hyundai is going to get totally? 6 lakh 50,000. Correct? But am I getting this all today? I am getting 2 lakhs year 1, 2 lakhs year 2, 3 lakhs, 2 lakhs year 3, and 50 maybe in year 3. Correct? Is it equal to 6 lakh 50 today? No. Time value of what is it equal to today? We have to discount it. So 6,50,000 received over a span of 3 years is not equal to 6,50,000 today. That means what is the value today? I have to find present value of 6,50,000. So that is the value today. Let's assume for the time being present value of 6,50,000 is just for the time being. Okay. So that means if you look at this carefully, can I say 6,50,000 minus present value of 6,50,000, which we wrote as 5 lakhs, is going to be what? The income I am earning of today. If I have invested 5 lakhs, it is becoming 6,50,000. Correct? It's becoming 6,50,000. Are you following, guys? So now if you go and see what is 6,50,000 gross investment in, what is the 5 lakhs present value of gross investment in? So GIL minus present value of GIL is equal to the income you are going to get, you already got. So today Hyundai will plan, okay, in the car is worth 5 lakhs. If I make an agreement of 2 plus 2 plus 2 plus 10 plus 40, over the next 3 years, I may earn, including time value of money, an income of how much? Earned or going to earn? What is an income? So it's called unearned finance income. Why is it called finance income? I am providing a finance facility to the other person by giving the car. So if I go and see next one, which one? Unearned finance income is nothing but GIL minus present value of GIL. This, if I write in expanded way, it is nothing but, what is GIL? You know, MLPs, which is my 2 lakh plus 2 lakh plus 2 lakh plus 10,000, or you can even split that, plus GRV plus UGRV minus present value of the same thing will give me unearned finance income. Are you following? It's like I invested 1 lakh in bank today. I'm getting 1,50,000 after 5 years. What I earned as interest? 50,000. So I will just do minus 1,50,000 minus present value of 1,50,000, which should be equal to 1 lakh. I'll come to that later. Are you following, guys? Clear? So this is unearned finance income. Now I am going to maximum earn 6,50,000 and my interest income is going to be 1,50,000. What have I invested now? 5 lakhs, correct? Now this equation will be equal only in a few cases. We'll come to that later. Let's say I am investing 1 lakh. You got a return of 1,50,000. So your interest is 50,000. Now I'm asking you a question. How much you invested? 1 lakh. What is the return? 50,000. What is the total return? 1,50,000. Now I'm telling you opposite. I'm telling you only these two things. You got 1,50,000 totally. Your income is 50. How much you invested? 1 lakh. Now I'm saying you got 1,50,000. Your interest is 40,000 only. How much you invested? 1,10,000. If this is not given, if it's not given, you invested 1,10,000. Correct? So follow carefully. 6,50,000 is my total possible return, including my interest. If I reduce my interest of 1,50,000, which is nothing but unearned finance income, I will find what I would have invested now. Correct? If that's not given, so what you invested is how much? 5 lakhs, which is nothing but net investment in lease. Are you following, guys? So GIL minus unearned is equal to net investment in lease, or in other words, what is 6,50,000? Gross investment in lease. What is 1,50,000? Unearned finance income. So 5 lakhs is net investment in lease. Are you guys following? Let me repeat again. From the first, 2 lakh plus 2 lakh plus 2 lakh is what, guys? Lease payments made. For 10,000 is GRV, 40 is UGRV. What is the lessor receiving from lessee in standpoint of lessor? 2 lakh plus 2 lakh plus 2 lakh plus 10,000. What is the lessee paying? 2 lakh plus 2 lakh plus 2 lakh plus 10,000. But what is the maximum return lessor Hyundai can get? 2 lakh plus 2 lakh plus 2 lakh plus 10 plus 40. That's gross investment in lease. This is the total money I am getting over the period of 3, 4, whatever years. The present value of that, if I find, the difference is my income. So 6 lakh 50 minus present value of 6 lakh 50 is unearned finance income. So GIL minus present value of GIL is equal to unearned finance income. Are you following, guys? Clear? So now 6 lakh 50 minus 1 lakh 50, GIL minus unearned finance income is equal to net investment 5 lakhs. This will tally if everything is accounted using the same rate. We will come to that after I do the sum. Same thing here. Net investment in lease, gross investment in lease minus unearned finance income. I will come to this in a moment. Then these are the 3 equations, guys. Straight away we will go to sums. I will do 2 sums for you to understand these concepts. We still have initial recognition is there over in this. Let's go to AS 19, which is okay. Let's straight away do illustration 2. Now exam oriented. Okay. I'm going to do 2, 3 sums, teach some concept with the sums, and that's it. I spend time because most students get confused with those terms and formulas. Is it strong now, guys? What is gross investment in lease in mind? 2 lakh plus 2 lakh plus 2 lakh plus 10 plus 40. That equation you write in English. What is unearned finance income? 1 lakh 50, which is nothing but 6 lakh 50 minus present value of 6 lakh 50. What is the amount I invested today? By investing 5 lakhs, I am going to get 6 lakh 50. So gross investment 6 lakh 50. What I invested now is 5 lakhs. Return is income. But this is to understand. When we do sums, you will get more clarity. Prakash Limited leased the machine to Badal in the following terms. Illustration 2 of study mat. I will not be solving it, but I will run through it. Who is the lessor? Prakash. Who is the lessee? They are given lot of things. Okay, fair value of machine, this, that, GRV. They are given the discount rates. Usually if they give discount rates, take that only. Ascertain unearned finance income. Think of the equation. In our equation, UFI is 1 lakh 50. But how that 1 lakh 50 came? 6 lakh 50 minus present value of, what is 6 lakh 50? GIL. What is GIL? MLP from standpoint of lessor, from lessor plus UGRV. Why MLP from standpoint of lessor only includes 2 lakh plus 10,000 plus 40,000. Now replace those values to what we have in question. What is the lease rental here? 8 lakhs. For how many years? So I will write 8 into 5, which is 40 lakhs, plus what is GRV? Given in the question, how much? 1.60 lakhs. What is UGRV? Residual value is 3 minus 1.6. So I am left with 1.4 plus 1.4. So you are totally expecting a return of 43 lakhs over a period of 5 years. What is the present value of this? Same, I am just going to table. Look at this. 8 lakhs for 5 years. Common mistake. You will write 6th year and write GRV. In the 5th year itself, you have to write GRV. In the same 5th year itself, you have to write. Kurta discounting rates. I'm hoping all of you know how to discount. Hello guys. FM. Okay. So you will find discounted values. How much, guys? 28 lakh 30,000 920. Are you following? I am just trying to find out present value of 43 lakhs. That means if you invest 10 lakhs today in bank, you will get 17 lakhs after 5 years. The difference is my interest. I am trying to find year wise. You will get how much now? So if you look at this, 43 lakhs is my GIL minus present value of GIL, you get 14 lakh 69,080. Are you guys following? That's it. Sum is over. Are you getting it, guys? Okay, now we will proceed further. Within the same sum, I want to break the concept. Okay, now this is whose books? Lessar's book. So in Lessar's book, you are saying the present value is 28,30,920. Let's do a simple computation with your help, guys. Okay, in the books of Lessar, I will write year 1, year 2, year 3, year 4 and year 5. What is the opening receivable I will recognize? The present value is how much? 28 lakh. 28 lakh 30,920 and interest rate is 15%. Follow this, guys. 28 lakh 30,920. Okay. What is the first year interest I will earn? I will earn interest at 15%. Can you tell me how much is the interest, guys? 4 lakh 638. But what is the MLP I am receiving first year? 8 lakhs. Correct. Out of this 8 lakhs, if you are saying 4 lakh 24,638 is interest, what is the balance? I will explain. Follow, guys. Once we finish the table, you will get full concept clarity. MLP is? No, each year MLP 8 lakhs. Okay. So what is principal? I am just trying to say, if this is A, if this is B is equal to A into 15%, C is given, D is equal to C minus B. How much are you getting? 3 lakh 362. Now what is the closing principal or closing balance? I will explain once I do the first year. Closing E is equal to A minus D. I will explain, guys. How much are you getting? 24 lakh 55,558. Okay. Now we are doing accounting in whose books, sir? Lessar's book. The Lessar first sold this. This is what is it? Plant. He sold some machinery. Correct. When I sell the machine, the entry this Lessar will pass is, entry I will pass is lessee or debtors account debit. How much? 28 lakh 30,920 to sales. Are you following, guys? This I will pass in the year 1 start. In year 1 end, I will receive my MLP. So what is my MLP I am receiving? Bank account debit 8 lakhs. Now to what? That is what we did break up here. Look at this. I am saying, hey, 28 lakh 30,920 is my total receivable. In that I got interest of 15%, 4 lakh 24,638. So but I am supposed to get interest of 4 lakh 24,638. I got MLP of 8 lakhs. So the difference I got towards principal is 3 lakh 75,362. So the balance closing principal is 28 lakh 30,920 minus 3 lakh 75,362. You get 24 lakh 55. So if I come to this entry, if I write this entry, guys, bank account debit, to interest, to debtors. What is to interest? I will take this one, 4 lakh 4 lakh 24 638. Two debtors will be 3 lakh 70 362. Are you following, guys? So if I do it like this, I recorded a liability receivable of 28 lakh 30. In this I already reduced how much? 3 lakh. You are left with 24 lakh 55,558. This is first year accounting. Are you following, guys? Now if I keep repeating this for second year, third year quickly with me, guys. Second year opening 24 lakh 55,558. Interest 15% on this 368. MLP will still remain at 8 lakhs. So 8 lakhs minus interest 368, 334, you will get 4 lakh 666. Closing principal. How will I find closing principal? From 24 lakh 55 minus D. You will get 23,892. Are you able to follow, guys? Getting it? I'm going to repeat for 5 years. Let me do for one more third year with your participation. 20 lakh 23,000. Idila I have to get interest income. How much? Into 15%. 3 lakh 584. MLP I got is out of 8 lakh 3 lakh 3,584 is interest. So what is the principal? 4 lakh 90 416. So what is the balance principal? 20 lakh 23,892 minus 4 lakh 96 416. How much? 15 lakh 470. Again I will rewrite in fourth year starting. 15 lakh 27,476. Interest 2 lakh 29,120. MLP will be 8 lakhs. So principal 578 570,000 878 all over 9. Closing principal 956 597. Everybody follow online. Try with me. Those sitting up above. Use the calculator and repeat the answers, guys. Opening principal 9 lakh 56 597. In this my interest will be into 15%. How much? 1 lakh 40 4,000 490. So my principal again EMI is 8 lakhs. So my principal will be how much? 6 lakh 56,000 5. Closing principal approximately 3 lakhs. Approximately 3 lakhs. Everybody understanding what we are doing? Okay. Now basically what I am doing every year, I am calculating what is the interest receivable, how much I received. So in that what is the balance? Principal, closing principal. Now let's say what is the entry I will pass in the third year? Can you guess? Third year, what entry will the lessor pass when he receives EMI? Third year, how much he will receive? Every year I will receive 8 lakhs. So third year my entry will be bank account debit 8 lakhs. 2. Interest how much? 3 lakh 3,584. 2. Debtor how much? 4 lakh 416. Like this, if I keep passing entry every year, in the last year my asset receivable becomes, what is this 3 lakhs? Residual value. In this I will definitely get GRV. Are you following, guys? Now take the column of interest. Add all of this of all the 5 years. 4 lakh 24 638 plus 368 334. Add everything. Add everything, guys. How much are you getting? 424 638. Add everything. 14 lakh. Is it same as the interest here, guys? Unearned finance income 14 lakh 69,080. 175. That means in this table the sum ended by me calculating 14,69,080 as the total unearned finance income for all the 5 years. I just showed breakup for 5 years because sometimes he will ask you past journal entry for second year, past journal entry for fourth year in Kepa. How to do? No other option than preparing this table. Mostly they will tell pass entry for first year. Clear? That means you can pass entry for first year only if you find the present value of 28 lakh 30 and recognize in the books at 28 lakh 30,920. Are you guys following? This is illustration 2. Let's go to illustration 1. Last 2 more sums and the standard will get over. This sum is important. This is the common sum they will ask. Now you did accounting in whose books, sir? Are you getting concept? I am trying to see some standards like 22, 19. I am trying to teach you with the concept. I don't know to teach without concept, just formula, guys. Are you getting it now? Fine. Look at this question. Esquire has taken machinery on lease from SK. Who is the lessee? Esquire. Who is the lessor? SK. Adhe question now. Lease term, fair value, lease rental, GRV, all of the thing. And is asking calculate the lease liability. That means at how here it was lease receivable. Now I have to find what is the liability for lessee. For lessee, what is he going to pay? MLP from standpoint of lessee. For lessee, it's what I am going to pay. I will pay only 2 lakhs plus 2 lakhs plus 2 lakhs plus 10,000. Idan I will pay. So this is what I am going to pay totally. What is the present value of this? Look at this. In this question, if you see, my 2 lakhs is nothing but 6 lakh 25,000. Are you following, guys? And my GRV is 1 lakh. So first year I will pay 6 lakh 25. Second year 6 lakh 25. Third year 6 lakh 25. Fourth year 6 lakh 25. So fifth year alone will be 6 lakh 25 plus 1 lakh 25, which is 7 lakh 50. This is what I am going to pay as a lessee for 4 years. Today's present value is 18 lakh 55,850. In the 18 lakh 55, a lessee books like opening, if I write here 18 lakh 55,850 and prepare this dabba, the closing will become how much? 1 lakh 25 GRV. This will be the interest I have paid. So lessor will recognize income including UGRV. Lessee will recognize liability excluding UGRV. Are you getting the logic, guys? Shahrukh is the key. If he pays that 10,000 or not for both parties. No, I mean the GRV pay panlana, I will still take it here. Are you following, guys? Clear? Are you getting it? I am trying to say for lessor, for Hyundai, I will take the full amount, including that UGRV, because I will estimate I will get the whole thing. Are you getting it? Now coming to the main concept over here. 18 lakh 55,850. In the question order, present value is 18 lakh 55,850. The fair value in the previous question, previous scenario, lessor books la I don't care about fair value. Lessor books la I don't care about fair value because yanakku business idda, giving on lease and getting income. But for lessee, Zomato, if they purchase the car today, they should have paid 20 lakhs today. But because of this lease transaction, they are paying only 18 lakh 55,850. Good or bad? Good for me. My liability is less. That means somehow I got some benefit. 20 lakhs pay panna badla, I am getting to pay. In terms of present value, I am paying only 18 lakh 55,850 because my discounting rate is 15%. That's the amount of interest I am paying. Meaning, na in the car vaangama, in the 20 lakhs I invest panna, I would have got more. So my liability is reduced. So it's no more 20 lakhs. My liability is only 18 lakh 55,850. So I will recognize liability in my books at 18 lakh 55,850. Now imagine your present value instead of 18 lakh 55,850 is, let's say, 22 lakhs after doing the same thing. Okay, that means an asset that you should have paid only, you paid 22 lakhs. That means current fair value of asset is only இன்னைக்கு வாங்கியிருந்தாலே உன் liability 20 lakhs தான். But you paid 22 means you paid much more higher. So standard is saying anything you pay over and above 20 lakhs is an interest only for you. Don't take 22 lakhs as principal, take only 20 lakhs as principal, and whatever you pay extra is nothing but my interest that you are paying. Are you following? Are you getting it, guys? So that's why if you see in the sum also they will mention in every sum of the lessee present value of MLP is 18,55,000 in this case, which is less than fair value. Hence I will recognize at 18,55,000 itself. Basically recognize that whichever is lower. But there's a logic to it which we just understood. Same thing is there in the book. So if you see here, now here what they're saying, value at which asset is recorded in the books of lessee Zomato at the inception of the lease, however recorded other than fair value where the present value of MLP from standpoint of lessee is less than, here it came 18 lakhs, less than 20 lakhs I will record. But if the present value is more than fair value, I will record at fair value. Here fair value was 20 lakhs, if present value is 22 lakhs, I will record at 22 lakhs. Are you following, guys? I mean, I'll record it 20 lakhs. 20 lakhs. Are you following? Last two or three small concepts. Can I finish it?
Yes, sir.
This standard alone? Okay. Now, last 2-3 small concepts. One, depreciation. In operating lease, who will provide depreciation? All MCQ questions. Who will provide? Lessor. In finance lease? So, depreciation is provided in books of lessee in finance lease and lessor in case of? In finance lease, what term I will provide the depreciation? What term? Now, in the Hyundai car example, lease period was 3 years, but car life is 10 years. So let's say car life is 10 years, when lease is 3 years. Depreciation for 3 years or 10 years? Depends. If you are planning to pay that 10,000 and buy the car, then you will depreciate for 10. Illa GRV pay panna idea illa, I am going to give it back, then no depreciation for. That's what. Depreciation has to be provided based on the life of the asset, which is 10 years and not lease period. However, if the lessee Zomato is not expected to take ownership of the asset at the end of the lease period, then compute based on lease period of 3 years. Are you following, guys? Here we have two terms that you have to learn. Lease, we have 3 pages in the notes itself, guys. Two terms, economic life and useful life. The difference, economic life is the total life of the asset. For example, let's say one car has a useful life of 20 years. Whole life till the last day possible, if I use the car, 20 years varum. But after 15 years I will sell the car to somebody else will buy in second hand. Useful life is what I am going to use it. So Zomato's car is, in the Zomato Hyundai car is having 20 years life, for example, but I am using only for. So useful life is 3, but economic life is 20 years. Are you following this point, guys? Clear? This is one. Then there are some general disclosures which you will have a read by yourself. I am not discussing disclosures. In every standard you have a disclosure. The table we prepared up. How much is the receivable? How much is the interest, unearned finance income? All that breakup you have to show that you have a read of disclosures, guys. For want of time, I am focusing only on other important points. Next, going to one more, last 2 important concepts. One is how to categorize as finance and operating lease, and lastly sale and lease back. That's it. These are possible 2 questions you can get in this standard. Finance and operating lease is simple. They gave you 8 points, guys. 5 plus 3 in the study mat. Okay. If you satisfy in this 5, any one itself, it becomes a 5 la any one, not like CA exams. Any one you pass, you become finance lease. Only if I fail all the 5, it becomes an operating lease. I can spend much more time in these points, but I'm going to be purely exam oriented over here. Okay. And there are 3 more additional points called suggestive measures. Even if you satisfy all the 3, it may not be a finance lease. Secondary points, only these 5 points are important. Now come to our example. Follow. I told you GIL, which is 6,50,000 minus unearned finance income is equal to net investment in lease. What was the formula for net investment in lease? Same, GIL minus unearned finance income. In this equation, follow very carefully. The numbers we took was 6,50,000 was GIL, unearned finance income was, net investment was. The net investment will be equal to fair value. In all the questions we did now, fair value was 20 lakhs, that present value was some 18 lakhs something. Both will be same when. What is fair value? Inik vaangna, how much I will pay? He is saying these both will be same if you discount using a rate called IRR. IRR rate is nothing but, this rate is nothing but, see, it's a huge concept. For exam oriented, simple. 6,50,000 minus 1,50,000 is equal to net investment. Net investment is nothing but GIL minus unearned finance income. This unearned finance income is computed using some discount rate. That discount rate, if you use IRR, it's equal to fair value. Let me explain a simple logic for you to understand this. Today, if you buy the car, you have to pay 5 lakhs. That's how I started our example. But ide car, if I take on lease, you are ending up paying 6,50,000 or 6,10,000. Now this compounding is using some discount rate. If this discount rate is perfect, then the present value of 6,50,000 will be equal to 5 lakhs. Now let's see the present value is actually, instead of 5 lakhs, it comes to 4,20,000. That means you paid more interest or less interest? Okay, let's say the present value is 5,50,000. You paid less interest, correct? So if it is 4,20,000, my discounting rate is going to be high, correct? If it's 5,50,000, my discounting rate will be low. But the ideal rate is one where whether I buy the asset today or whether I buy in EMI, it's the same. That will never happen except in books. Ideal rate na IRR rate. It's like, see, iPhone I have to pay 1 lakh. EMI I have to pay 2 lakhs for example. Now EMI will definitely be higher. Now somebody is saying my EMI's present value is equal to 1 lakh. If you buy the asset by paying full amount now or by paying in EMI basis, it's going to be the same expense for you. Are you getting it? So now if I buy it today, I will pay how much? Okay, in this case 5 lakhs. If I pay in EMIs for next 3 years, I will pay 6,50,000. If I tell you if both are same, nobody will pay this. Everybody will pay 6,50,000 over 3 years. But in one particular rate, both will match. The ideal scenario, that's called IRR. At this rate, both will be same. Are you getting it, guys? So IRR is a rate. For exam purpose, we are not going much in detail, guys. I need at least 40 minutes just for IRR. But for exam purpose, IRR is the rate at which present value of gross investment in lease, which is present value of 6,50,000 is equal to fair value of asset, which is 5 lakhs. Our example, both are same. That means my IRR is the perfect rate. Nothing can be perfect. You will never find that rate except in books. Are you following? Getting it, guys? If it is 4,20,000, rate is higher than IRR. Correct? If your present value is 4,20,000, your rate is more than IRR. If present value is 5,50,000, rate is less than IRR. Are you following, guys? Clear? So here we have a sum where they will tell you to find the IRR. It is not there in the study mat, but it's in the examples I will show you. First, let me finish off these theory points quickly. What are the points we have to finish here, guys? Satisfy any 1 out of 5. First, present value of lease payments is substantially equal to the fair value of the asset. What is this? Where the lease payments here you paid 2 lakh plus 2 lakh plus 2 lakhs. The present value of this almost came to 5 lakhs. Fair value also 5 lakhs. That means you almost paid the full asset price. When this will not work, you went to Goa. You took a bike for 1 week rent. Each day bike rent is 500 rupees. 7 into 500, you paid 3,500. Is this lease payment equal to fair value of asset? No, it's an operating lease. Are you getting it now, guys? Next. The lease period is for major part of the economic life, even if the asset is not transferred. You went to Goa, you took the bike for 5 years on rent. Even though the lease rental is less or more, the economic life and useful life are similar. Asset life 5 years, are used for 4 years. Finance lease. Okay, next. The lessee has the option to buy the asset at the end of the lease at less than our example. Pay 10,000, buy the asset. Correct? That option to buy is there. If there is no option to buy, it's not a finance lease. The nature of asset is a specific purpose asset. What is specific purpose asset? If you take Deloitte, all articles will have same laptop. If you leave, next article will use your laptop. You leave, next article will use your laptop. But partner of Deloitte will have only one specific, his separate unique laptop he will have. That only partner can use. Specifically purchased for him. Specific purpose asset. Are you following, guys? With some specific needs I have taken it. Made some customizations. Specific purpose asset. The lease transfers ownership at the end of the lease term. That's why I am charging depreciation. Then only it's a finance lease. Are you following, guys? These points don't have to mug up. You have to be aware of these 5 points. These 3 points are additional. So I will not focus on this. In the mood may satisfy suggestive measures. Decision maker is 1 out of these 5. So you have a look at these 3 points because MCQ this fellow will ask us. This fellow means I meant ICA, guys. Sorry. Okay. So the lessee can cancel the lease. I took iPhone on EMI. I want to cancel it after 6 months. Okay. Does not mean that it won't decide finance or operating lease. Next. The gain or loss in fluctuation residual value are accrued to the lessee. Not that important. The lessee can continue the lease for a secondary period. Secondary period a rent lower than market rate. So lessee can continue the lease for a secondary period. After lease period is over, I will again renew for a lower period for a lower price. Does not mean it's a finance lease. Are you following, guys? Which 5 I should focus? First 5 points. Are you following, guys? Clear? With this theory also is done, guys. I will tell you 2 more sums which you guys have to definitely refer to in study mat. What smartly ICA has done is, previously this used to be a question, but they removed it as a question and they gave it as an example in the book. This I will not be teaching, no, but I will just mark it for you. It's very easy. This is a case where it's part of FM. They will tell you present value of GIL is equal to fair value. GIL 50,000 each year, 5 years, GRV is 25, and he also gives fair value as, he will ask you to find what is that rate. Find that IRR rate using interpolation. In FM you have one sum, guys, capital budgeting. Adhe madi here you have to use trial and error method. Once you try at one rate, once you try at other rate, get 2 answers. My fair value is 2 lakhs. So one you get one present value which is more than 2 lakhs. One you get present value which is less than. And then you use interpolation and find the percentage. In study mat it's there in accounts. It's not an illustration. It is given as example number 1 inside the chapter. Ensure you do this. Old syllabus it was MTP question. Now it became example. This only he will ask. Because students will do illustration, practical problems, examples I didn't do, sir. I didn't know. Following, guys. All these are done. So So now if you look at our material, all the core provisions here we have finished. I told you what is IRR. If IRR not available, then you use incremental borrowing rate. MCQ question, guys. I'm not getting into detail of it. Remember, IRR not there means use incremental borrowing rate. I finished even discounting points, the disclosures. Initial direct cost or other like loan processing cost, all those costs, those things also will be included. We are left only with one concept, sale and lease back. This itself will take some time. Sale and lease back, I will try to be quick here so the standard will get over. Is it fine, guys? Can we proceed? Okay. Are we going slowly? Some standards I'm just focusing on time. Okay. Can we do sale and lease back, or you know the topic? Hello? We'll do it. Okay, I'll be quick over here. Fine. Sale and lease back. Let's say the balance sheet is there. I'm only going to give example. Some you will go and do it by yourself. Okay. Sale and lease back. I have a plant and machinery of 100. Only example I'm going to tell you guys. Now, and I have a reserves and surplus, loss of, okay, 0 reserves and surplus, and I also have a bank loan of 100, cash of 0. I am in a difficult situation now, unable to pay my loan. So what I am doing, I called my friend and told, I will sell the asset to you for a dummy entry. So I sold it to him for 125, but he paid me cash. Asset is in my books only, but dummy sales entry. So what will happen? Asset 100 becomes, cash becomes 125. With this cash, my friend is helping me. I repaid the loan. So again cash becomes, loan becomes 0. Are you following? Now again, my friend will lease the asset back to me. Everything is a book entry. Asset just for closing this loan and making it look better, he will lease the asset back to me. Or let me do it from first. I sold the asset of 100 became 0. Let me again restart this like a story, guys. Basically, it's a case of financial window dressing. I had first asset of 100, cash 0, loan of. I sold the asset for how much, guys? So this becomes 0, cash becomes 125. Now with this cash I am paying loan. Cash becomes 25, sorry, and loan becomes 0. Are you following, guys? Now he is giving the asset back to me on a finance lease. In my books, asset is 0. No, I be business partner. He is giving it back to me at a finance lease. So I will get again plant and machinery back at. I will get a new lease liability at 125. Are you following, guys? So if you look at my, when I sold the asset from 100 to 125, you also make a profit of 25, correct? See, asset was 100, I sold it for 125, profit of 25. So my old balance sheet, which looked like this, asset 100, loan 100, because of this transaction, now it looks like reserves and surplus 25, lease liability 125, asset 125, cash 25. Basically, asset is still in my books. I just passed some book entry and I am inflating my numbers. And if you see here, what is happening because of this? Because of this, what will happen? Asset of 100 became 125 and you would have recognized 25 as a profit in P&L. And my lease became from 100 to. So what will happen next if you see? Earlier my lease rental was on 100. So let's say it was 10. Let's, for example, take asset itself. Asset was 100, depreciation 10%. So my depreciation used to be 10. Now asset is 125, depreciation 10%, 12.5. Fraud. I didn't do anything. Just by passing book entry, I am inflating an asset of 100 to a depreciation of 10, making it 125, making it 12.5. And I also recognized in the previous year, depreciation is for future years. First year recognized profit of 25. Are you following, guys? This is a case of sale and lease back. The standard says, look at the substance. This is actually not a profit. What this fellow did, 100 rupees asset, 125 akita, 25 he is showing as gain. It's not a profit, it's a revaluation gain. So he is saying, this profit of 25, don't take it to P&L, take it to my revaluation reserve. Are you following? This asset and loan, he is saying you treat it like a finance lease. Asset and loan, treat it like a, but still I have a problem here. Depreciation is 10. Here depreciation, he is saying this 25 which is in my reserves and 25 will be transferred back to my P&L every year in the ratio of the additional depreciation. Let's say 10 years, 2.5. Are you following, guys? So what is the net effect here? 10. Net effect here? 10. I am nullifying the effect of sale and lease back. Are you following, guys? Getting it up? Everybody clear? Following? So what is my accounting for sale and lease back? Exam, what to remember? The profit loss 25 should be treated as revaluation profit loss, should not be recognized in. The gain 25 should be amortized over the lease period in the same proportion of depreciation. So instead of 10 depreciation, 12.5 will be 2.5. Are you guys following? Super. Next. Sale and lease back, last concept, guys, resulting in operating lease. Ide example, asset was 100, loan 100, reserve 0, cash 0. Are you all with me, guys? Okay. Now what they are saying, very simple. You sold the asset for 125. So asset became, profit is, loan, cash came 125, cash I paid loan, cash became 25, loan became. Now only if I do a lease back as finance lease problem. Now I will do a lease back as an operating lease. That means asset never comes back into my books. Correct? So what is left in my balance sheet now? Asset 0, cash, P&L profit, and loan 0. Correct? Now he is saying this is an actual profit recognized in books. Now the new asset I will lease back in operating lease on 125. I will keep paying lease rental. That he is saying you recognize in the books as normal lease rental. But how much is my profit? Can I recognize full 25 is the key. He is saying this is from AS 10. So I won't teach in AS 10. If the asset is worth 100, I sold for 125. Check the original cost of asset and solrong. This is the book value of, correct? Imagine original cost is 150. I sold for 125. So you will credit P&L how much? Let's take all scenarios, guys. Let's take all scenarios. I sold for 100. My original cost could be 3 scenarios. One is original cost. One is original cost. Let's say 130. Let's say original cost is 90 original cost. I'm talking about original. Okay, let me just do it in a different way. Cost, depreciation, book value. Okay. Assume the cost is 150, depreciation is 50, book value is 100. Selling price. Selling price in our scenario we sold at 125. One more scenario sold at 170. One more scenario sold at 90. Let's take all scenarios. Are you following, guys? This is sale and lease back resulting in an operating lease. 100 asset sold for 125. What is the profit? 25. Recognized fully in P&L. 100 asset sold for 90. What is my loss? 10. Debit fully to my P&L. 100 asset sold for 170. My profit is recognized. How much in P&L? 50 in P&L, 20 in capital reserve. I'll explain why. Look at this. Profit up to cost. Profit up to cost is up to 150. I purchased, no, current cost is 100. Profit up to 150. Then up to that 50 only you can go to. In first case it's 100 up. Sold at 125. Original cost is how much? That original cost only in the book they will give us fair value. They will give us fair value in operating lease. So up to fair value of 150, 25 I can recognize in P&L. Second case loss of I will recognize in P&L. Third case original cost is 150. You sold for, that means original cost, no, original fair value is 150. You sold for 170. So only out of 70, 50 goes to 20 gets debited, goes to my capital reserve. Logic, very simple. Original cost is 150, now value became 100. Value became how? Depreciation was 50 was debited to my P&L. That means I am allowed to credit my P&L up to 50. So up to the debit of depreciation, I can credit my P&L which is up to 50. Are you following? Anything beyond my original cost can't come to credit of P&L because you never debited the P&L, it goes to my capital reserve. Are you guys following? That's what is there over here. Yes. Okay. Profit or loss should be recognized in P&L account. However, if sale is other than cost badla fair value, profit loss up to fair value up to 150, take it to P&L. Profit loss beyond fair value should be deferred and amortized over the lease period. Take it to capital reserve, keep amortizing over the lease period. Are you following, guys? With this, we will close. AS 19 is done. Perfect. Okay. Yeah. Thank you for AS 19. Shall we do one more Kuti standard and go for break? One more small standard and break. Small one. I'll take a very small one. Otherwise, post break you will get tired, guys. Small one, 20 minutes standard. Like that, I'll take something small. Recording, what I will do? Okay. AS 19, were you guys able to follow? Now, just a small story. Okay, how many of you following what Elon Musk is doing, guys? Elon Musk is doing, what are the companies that he is building? One such company that he is building, many companies, some have already started, some are in the pipeline. One company is called Starlink. What does Starlink do? Starlink is basically, if assume this is the earth, guys, okay. Now, around the earth, Elon Musk, through his company of SpaceX, he is sending satellites to create an artificial orbit around the earth. From that satellite, what he will do? Send internet to your, wherever you are. For internet, instead of tower, it comes in from space. That means if you are in desert or in city or village or middle of the ocean, we will all get the Guna caves, correct? You will all get the same speed of internet. Okay. This is live or yet to be live? It's already live. When there was war in Ukraine or when war was going on, he sent satellites over there to give internet. It's already live. You just have to go and follow the Instagram page called Starlink, and you can see people putting reels as to they settle down now in villages, settle down in forest. It's like when Tata Sky Dabba, you will have a suitcase where internet will come from space. This is already live. That means if he starts giving internet in India, what will happen to Jio now? It will be much more cheaper. He can give internet for full space, full earth. Okay. Now Indian government is not allowing Elon Musk to give SpaceX internet in India. So he is trying to tie up with Jio or Airtel. So if you want Starlink internet, get it from Jio. Still they are discussing. Elon Musk is not happy, so he's saying, okay, leave, I'll go to other countries. Like that. One more thing which he planned 10 years back. Like this, many things he's planning, guys. One he planned is Hyperloop, but they have almost dropped that plan itself. What is Hyperloop? To travel between 2 points, he will put one pipe. Okay, it's not a pipe, it's a huge tube, like a loop you call it, and then inside that tunnel inside that vehicle will go in full speed, so hyper speed, where a normal journey of 6 hours you can complete it in 1 hour. But for various reasons, scalability and safety reasons, cost, everything, they dropped it. Now next trending, last 12 years is doing it, but last 6 months are trending is Neuralink. What is Neuralink? What is Neuralink? For example, Amrish, Neuralink basically you see in movies, they will do a small minor surgery and put a chip inside your head. Now you are only Amazon Alexa, you are only Google Home. So before I will tell in phone la AC off, na AC will be off, or I will tell Alexa turn the AC off. Now if I think AC off, AC will go off. Okay. If I think, sir, let's say Amrish is having one chip. Amrish has one chip. Let's say, second row your name. Next to Sandil. Fazil and Sindil have 2 chips in their head. If they are not talking also, they can talk to each other through the mind. What all they can do, I don't know, guys. The chip only can communicate. Okay. Now, so this chip is already live, guys. Now this guy, there was one experiment fellow, they put the chip inside his head. He didn't even use his hands. He just thought in his mind and he put a tweet on Twitter. He is able to access the internet through his mind and put a tweet. Sir, what all we can see, sir? That depends on the restrictions given in that chip. Okay. Now, fine. This is one project. Now, my question is, in 2024, the revenue of Neuralink is still 0. Revenue of Neuralink is still 0. But for the last 10 plus years, he has been experimenting. Almost 1,000 plus monkeys were killed. It's a report. First, before you putting on human head, they put on monkey head only. 1,000 plus monkeys were killed in this experiment. Don't ask me, sir, what, sir, go put a case in PETA. Not. We are discussing example of what happened. Now in these 10 years, lot of expense has been spent. Correct?
Yes, sir.
But will I get a future benefit? I don't know. There is one more company in the US which is doing a research to find a medicine, and if I take that medicine, I will never die. That means you will never age. That why humans die? Because the organs age. They will stop the aging. That means, sir, I am immortal. Accident, what will happen? Natural death will not happen, guys. Yes, they're trying that. They have spent billions of dollars. There is one more company where that Spider-Man movie, my lizard hand will regrow. So they actually are spending money to see if human organs can regrow. But okay, they are spending on all of this. Now, all these spendings, will it, now let's say if this aging drug or medicine actually becomes real, okay, many people will buy. See, it's not like life is immortal, but your life will increase by another 20 years. It's not 1000 years or 100 badla 120, 60 badla 80, like that. Are you following, guys? Now, they will just slow down the process. It's not like you will never die. They will slow down. Many people will buy. So this company is saying this entire expense, I am spending $20 billion today, that after 25 years, when I become successful, everybody will buy this. I will become the richest person in the world. I will capitalize this money. Can I do that, guys? No distraction. Introduction to next standard. Okay. Follow this entire expense which I am spending. Neuralink, whatever I spent. Let's take Elon Musk example itself. Neuralink, whatever he spent in last 10 years. Two options. If he, let's say he spent 10,000 crores till now, guys, okay, in this project. Credit is easy, to bank. Debit what? P&L, balance sheet. Are you following? If I debit P&L, okay, it's an expense. But Elon Musk is saying, I am proving no, that I will get this. Future in 5 years, you may not put the chip, but lot of people are already ready to put the chip in the head. It will become a new normal. So that time he is saying, my revenue will boost high because I am the only company in the world to make this chip. ChatGPT is number one now because they are the only AI tool which is in terms of accuracy on one of the top. So they are able to make that revenue, correct? So they are saying, I will get lot of revenue. So this money, why should I debit to P&L? I will capitalize by debiting to my asset as an intangible asset. Are you following, guys? Now this argument, we are discussing which standard? AS 26, intangible asset. Now, intangible asset, in all these scenarios, guys, Hyperloop, project fail. Fail means they dropped it, but they spent a lot of money, crores of money, okay. Why Elon Musk is richest in the world now? Tesla financials is still a loss or very mere profits. It's still a loss making company for the major part. But you invest in someone because of the future, not the past. His ideas like Neuralink, Starlink, Hyperloop, many more things is planning, something in AI, this, that. People believe something will become success. So, leave all of that. The money which Elon Musk spent, all this money, if should I debit to P&L or should I capitalize as an asset? Are you getting it, guys? Are you understanding? COVID vaccine. When COVID came, some 20 companies tried to make vaccine in India. We were also waiting, epada vaccine. Then finally, 2 vaccines were approved. But all these 20 companies spent money. We didn't know which 2 will come until they came. Only for the 2 companies which spent and the vaccine was successful, it's an asset. They started getting revenue in terms of 250 per vaccine, 1000 per vaccine, whatever, correct? But all companies spent. Now my question is, it is not within 1 year. Vaccine also took a period of about 3 years journey to get it. Year 1 I spent some money. Year 2 I spent some money. Year 3 let's say I am getting the revenue. Now what to do with the expense in year 1 and year 2? Are you following, guys? What to do? If I capitalize, my vaccine failed, I'll write off a Hyperloop or Neuralink, I'll capitalize 10,000 crores. Now, if it fails, humans are dying, so project cancelled. Full money I will debit P&L now. Or, if you debit P&L, 3rd year vaccine success. Now will I reverse my P&L entry? No, doesn't make sense, correct? And the year expense, that year I have to account. So this standard AS 26 majorly talks about only 3 things for us. One is, what is an intangible asset? Second, how do you account for an intangible asset? And what are some key points to keep in mind for accounting of intangible asset? Are you guys following? Got the background? Okay. Okay, let's proceed, guys. I will come to a definition in a moment. What they are saying for accounting is very easy. They are saying categorize your expense into 2 phases: research development. R&D, research and development are not the same. அவன் என்ன சொல்றான், ரிசர்ச்னா இது பண்ண முடியுமான்னு கண்டுபிடிக்க ட்ரை பண்றேன். I am trying to find out if something is possible. I'll give an example of same Elon Musk. 12 years back when Elon Musk told, I will put a chip in your head, you can talk to others, you can control computer, what everybody will tell? They'll laugh. They'll tell, how is it possible? Even Elon Musk didn't know if it's possible, but he wanted to research and see if it is possible. So he wanted to know if it's possible. So for 7-8 years he was doing research. Money waste. Is there a future which is certain I will get it? No. So research expense will be debited to my P&L. The minute he put the first chip in the one monkey's brain and the video came out where monkey was playing video game through its mind in a computer, then he proved that it's possible. His research was true, it's possible, but it is still not developed and ready for humans to use. There is a company in SRM College Chennai, they want to replace ACs, where they are saying instead of AC, we will keep an bio AC. Inside the AC there will be algae kept, where that AC will absorb the air, algae will convert CO2 to O2 and air will come out cool, very cold air. The company is called Climate Labs in SRM, where they raised some money also. They now did research and found out it's possible. They developed a small prototype which maybe looks like this small one thing where it can actually convert, but it's still not ready for people to buy because we have to test for a lot of things. Will it work for 12 hours continuously? I need to develop that product. Correct? Are you understanding? Same way now Elon Musk what is doing, by putting the first chip inside the human head, he is developing to make it market ready. COVID vaccine work ஆகுமா இல்லையா ரிசர்ச் பண்ணிருந்தாங்க. Then 2-3 companies said it's going to work. Then immediately you got it. We have to do trials. We have to check for many different kinds of population age groups. That I am developing to make it market ready. This period is guaranteeing that this product will work. I just have to make it ready for people to use. So development phase, if I am spending something, I will. So in the standard, what you have to do is basically identify what is research, identify what is development phase. Okay, simple one guys, follow. Here they are saying you classify my expense into research and development. Research means debit, P&L. Development means I will capitalize. Sir, what is the most important thing to learn in this standard? It is these points. Capitalize subject to these conditions. How do I know I can capitalize, or how do I know development is taking place? The development is technically feasible. That means irukra technology today I can do it. Sir, I want to travel from Earth to 3 solar systems away. Today's, even if you have found water 5 million light years away, with the technology today I can't travel, so you can't develop anything for that. Okay, cost should be reliably, you should be able to track the cost. Appo capitalize panna mudiyum, entry poda mudiyum. Next, there should be future. Sir, I developed something but nobody is ready to buy. What's the use? Are you getting it? You thinking ahead, you build some product, even you don't know how to why you build it. No future economic benefits. Entity should have intent of putting it to commercial use. There is a company which found a vaccine in US, where and the vaccine use panna you will never get cold varadu, but that company never released that vaccine because business adi vaangolla, so they never put it to commercial use. Vaccine is hidden and kept. Are you following guys? Clear? There should be availability of technical, financial and other resources. This is simple. Now Elon Musk has, technically it's possible, financially he has the money, other resources. That SRM students, technically they made it do, but they didn't have funds. So now they are getting funds. Are you following guys? Next, ability to use and sell the intangible assets. If these points are met only, you can capitalize. Are you following? You don't have to memorize this, but be aware of the key points over here. Clear? Once you capitalize an intangible asset, what is an intangible asset? Small standard, guys. 15-20 minutes we will finish off this standard. They have given definition of an intangible asset. We will just run through it. Regular class prints we will mug up, write 3 times. Quick points. When I say intangible asset, for this definition alone, keep in mind software. It could be anything: copyright, goodwill, brand, music rights, this, that, many things, royalty, all of that. Intangible asset is an identifiable non-monetary asset without physical substance. What is identifiable? I can separately identify, buy and sell. A classic example in book: Maruti Suzuki has 30% market share in India. Is it an intangible asset? Maruti has 35% market share in India. Is that an intangible asset? No, because it's identifiable, but you can't transfer that. Maruti can close the business. Can I sell my market share to somebody? Can I say everybody biryani tell I'm number 1 biryani in Chennai? I'm going to sell my market share. Nee brand vikkalam. You can't sell the market share. So it is identifiable non-monetary asset without physical substance, held for use in production of goods or rendering of service or admin purpose. So software is an identifiable non-monetary asset. Non-monetary asset without physical substance. You can't touch it. Software is used for production of goods. Where? Software used for production of goods. Factory, toothpaste. Manually we are closing. No, machine will close. So software used for closing. Software used for rendering of service. YouTube, Zoom, Google Meet, class. All softwares for rendering of service. All the mobile games, mobile apps. How many are there, guys? Example solline polam. Software or intangible asset used for admin purpose. Biometric, attendance. Are you following, guys? So this intangible asset is identifiable non-monetary asset without physical substance, used for 3 things: production of goods, rendering of service or admin purpose, and not for sale. Microsoft developed MS Office not to sell the source code, but they are giving you license to use. So if I am developing an intangible asset to sell, it is covered in AS2. Are you following? Developing an asset for me to use it, AS2, PPE. Casa Grande building house for them to stay, PPE. Casa Grande building house to sell, inventory. So when will I sell, build software and sell? Software companies, they will make software and sell. For them it's inventory. I am building software and I am going to use intangible asset. Are you following, guys? Are you getting the logic? Okay. So we are done with research and development phase. Next, they are saying, let's say I made a software. I will recognize by passing software to bank. I made copyright. Entry is copyright to bank. Any intangible asset can be recognized except goodwill. Goodwill cannot be recognized in the books. Are you following, guys? Why? Self-generated goodwill cannot be accounted in the books because software, let's say, for example, I forgot your name, Dilip. Dilip is, let's say, building a software, guys. What is his cost? Dilip, his team of 5 developers, AC cost, rental cost, laptop cost, depreciation, salary, in the cost add panna software cost, correct? His salary, all of that. Now Dilip is running a restaurant for 5 years. This restaurant is doing good. So he is saying, a restaurant had a goodwill value 1 crore. How do I value goodwill in Dilip's restaurant? Can't value, because goodwill is not one thing that he did. It's 10 different things he did. The customer's experience becomes goodwill. So they are saying internally generated goodwill value pandrathu custom. Sir, for example, internally generated intangible asset to bank, except for goodwill. I will value goodwill only if you purchase it. Amalgamation, purchase. Are you following, guys? Clear? Next, any preliminary expense in the books like pre-incorporation expense, all these should be written off. These are not intangible assets. Look at this. Intangible items like advertisement, Preliminary expense are not intangible assets. Sir, I paid 5 crores. Dhoni is my brand ambassador. By paying Dhoni 5 crores, people will use the product. Can I guarantee or tell that? No. So, you can't tell marketing expense is capitalized. Marketing expense should never be capitalized. Are you following, guys? Sir, what are the key points for exam so far? Intangible assets is an identifiable, non-monetary asset loudly without physical substance which is held for use, held for production of goods, rendering of services or admin purpose and not held for such intangible asset. Expense is classified into research and research debit to P&L. Development I will capitalize. Internally generated intangible asset I will account except for goodwill. Preliminary expense I will not account. I will write off. If it's there, I will write off. Why logic not relevant? I will write off. Clear, guys? Next to 2 more points. For intangible asset, will you provide what to say depreciation? Yes, but it's called amortization. Key points. Now, amortization. Before you read, what is the useful life? You decide whatever you want. But if you are silent, the default setting is I will amortize for. But can I make it 12 years? Yes. Can I make it 8 years? Yes. Can I make it 6 years? Yes. You can do anything you want. But if you are silent, 10 years. Make it more than 10, justification. Less than 10, justification. At the amortization period. Are you following, guys? Yes, clear? Next, residual value. Default is 0. Because Kingfisher Airlines, when they were there, good goodwill, good brand value. Suddenly it became 0, negative. Correct? So, at the residual value comes at the end of useful life. A brand, software, end of useful life becomes 0. Apple version 7 software, what's the use now? Nothing. Are you getting it? So, default setting, residual value is 0. Again, unless you prove, residual value is 10 lakhs. How you will prove? Somebody is giving me commitment, hey, I will buy this for 10 lakhs. So, unless there is a commitment by third party that somebody will buy in active market, then only you can take it as this. Sir, for exam, what remember? Amortization period is 10 years. But I can take more or less. Residual value is 0. But I can take any value which is if third party provides a commitment. Clear, guys? Cost of internally generated asset. I just told over here he was building a software. His salary expense, depreciation, all of those will come. Salary, wages, material, all of that. Exclusion, just like AS2, few things which are excluded is what, guys? Selling expense, admin expense, expense on staff training to operate the asset use that training, and initial operating losses will not be included. It's a loss, it's not an expense. Sir, I launched the software, nobody purchased for 1 year. Loss, can I capitalize, sir? No. Are you following, guys? That's it. These are the key provisions. Rest to what I have given here is only some theory, guys. Like what is this? This page was not there in my previous material. Now only I am adding this. Why? Because of MCQ. In book they will ask what is an active market. I don't commitment by third party in active market. What is active market? Market where the following conditions exist. Items traded in the market are homogeneous, willingful buyers and sellers could be found. Coinbase market. Whenever I go, I will find buyers and sellers. Prices are available to the public. That only is active market. Otherwise, it's not an active market. These are all some simple, what to say, theory points for MCQ. Straight away, let's go and do 1-2 questions and close this topic. This is in which okay, that's it, guys. Maximum we'll go till 12 more minutes maximum, and we will do these sums and close AS26. So we finished in this session internal reconstruction, AS19 fully in detail, 26 also all the standard. I finished all the exam key points. Following, look at the first question. Take the page, illustration 1 as per study mat. I will do 3 to 4 key questions. Okay, follow guys. Sorry. Yeah. Follow. ABC Limited developed know-how by incurring expenditure of rupees 20 lakhs. Know-how is an intangible asset which was used by company from 1/4/2021. Useful life of the asset is 10 years from the year of commencement of its use. The company இப்போ வரைக்கும் amortize பண்ணல. How many years? Till 2018. How many years from 2011? 7 years amortize பண்ணல. இப்போ ஒண்ணு பண்ண சொல்றோம். So for 7 years what is amortization? 1/4/2021 to 31st March 2028. 7 years பண்ணுமா? So my 7 years, if it's 20 lakhs for 10 years, each year is into 7. So I will now amortize 2 know-how 14. But in that 1 year is current year. So 2 lakhs is current year, 12 lakhs is prior period item as per AS 5. Are you following guys? It's a prior period item. Mix of AS 5 along with AS 26. Why it's a prior period item? Mistake, omission to account in the previous year, error or omission in the previous period. Are you following guys? Most people what we will do? We will do P&L to know-how 14 lakhs. But you didn't split 12 and 2. Are you following guys? Okay, next. Quickly. Company spent 45 lakhs for publicity and research. Can I capitalize? No. I just now told you advertisement expenses not included. No, I don't have to read the question. That's the question. That's it. Advertisement expense la pannakoodadhu avladha. Next. A company with a turnover of 250 crores annual advertising. One I know the answer guys, but let's read. Of 2 crores had taken up marketing of. It was estimated turnover would be 25 crores divided to P&L total expense of 2 crores. Is it correct? Yes. Yes. They have to debit to advertising has to be debited. They did the correct treatment. Are you following guys? Capitalize da panakooda. Correct. Okay, next. Students are advised to read in final. Okay. 3 illustration 3 over. MCQ you guys tried guys. You have to do it. Practical questions they've added. This question 1 is I think old question only. I'll tell you which one is new. Yeah, this question 3 only is a new question. Okay, following guys. That's it. These 2 questions. With that the standard will come to an end. Following guys. Okay. Swift Limited. This is very easy guys. Acquired at a cost of 80 lakhs for a period of 5 years. Product life cycle is also so I will amortize for 5 years. The company capitalized the cost and started amortizing at 10 lakhs per annum. So what they are doing, 80 lakhs, so they started amortizing at 10 lakhs per annum. Company amortized patent at 10 lakhs per annum in the first 2 years on the basis of economic benefits derived from the product under the patent. After 2 years, it was found that the product life cycle may continue for another 5 years. So initially they thought it's going to be 5. How many years over? 2. How many were left? Now they will continue for another. So totally is it 3 plus 5? 8 years. Or is it 5 plus just 5 totally? 3 plus 5 or total 5? We will see that. The patent was renewable and Swift got it renewed after the period of 5 years. Net cash flow during this 5 years was expected. Now, after 2 years, it was found that product life cycle may continue for another 5 years from then. So totally 5 more, no, see, 2 years, 5 years from then. So year 1 over year 2, after this plus 5. 7 years. Are you following guys? Inset year. Now they are asking you to amortize. Year 1 and 2 already amortized. Avane amortize pantan guys. So year 1 and 2 out of 80 lakhs, that fellow already amortized 10 and 10. So you are left with how much? 60 lakhs. How many years are left more? Year 1, 2, 4 and 5 more years are left. I have to amortize more, 60 lakhs. If question is silent, I will amortize in the ratio of equally in systematic way. But here, in this chapter, no SLM method, no WDV method. They say use the best method, what is suitable there. So here, cash flows expected is 36 lakhs, 46, 44, 40 and 34. So what is the benefit I am getting is this, sir. So amortize in the ratio of 36 is to 44 is to 40 is to 40 is to 34 for the amount of 60 lakhs. Are you getting it? Randomly if I do 60 lakhs into 36 whole divided by 200, how much you get? 10 lakh 80. Are you following? Easier. This was the question in my CA final 5 marks when I wrote CA final. Yesterday we did math question AS 22. That question also came in my CA final 5 marks, but that time I didn't know. Okay. Following. Last time they asked the November 23 for how many marks? 5 marks. Easy guys. Following. Okay. I don't remember. Radha remembers now. Appo correct panniyo? Panla. Okay. Skip pantam. Okay. Idu skip panna. What is there in this guys? 60 lakhs. Everybody getting it guys? You have to amortize in the most appropriate manner. Are you following? Clear? Let's go to the last question. This is a simple theory question guys. Again they talk about launch the product, company incurred 20 lakhs towards research. What to do? Debit. P&L. Management came to conclusion that product cannot be manufactured and sold to the market for next 10 years. Management also defer the expenditure. Are they correct? No. Debit to P&L. Super. Next. Last question. I will brief the question since we have less time. New question added in new study mat from what I have seen. All these new questions have come from one author's book. I will tell the author's book later. Okay. During 11-12, enterprise incurred cost to develop and produce a low risk computer software product. They wanted to build some software product for which they incurred phase 1 something 2, 3, 4, 5 and 6. I don't know what it is, coding and testing cost, detailed program and design. I am not expert in computer software now. Okay. That's why they gave whatever it is, phase 1, 2, 3, 4, 5, 6. Okay. Now, after completion of phase 2, whatever it is established that the product is technically feasible. That means now it has reached development phase. Research over. That means what I will do? Phase 1 and 2 I will debit to P&L. Super. Are you following? You are required to show how you will account the full. That means can I capitalize all of this? That is what we will do and not get the full marks. Phase 1 and 2 I will debit P&L. But that means phase 3 and 4 I will capitalize. This also I will capitalize. This also I will capitalize. Phase 3, 4 and 5. What is happening in phase 6? Packing the inventory. In phase 6, number of units, now I am starting to duplicate. I am creating inventories. That means in phase 5 it is ready. So I will only capitalize these 3. And last one will be inventory as per AS 2. Are you following? Product master for training materials. It's the final one. Let's go check the answer. The expense, inventory and expense, it goes to my P&L. So that's our answer. What is the answer? First 2 will be debited to P&L as per research phase. Next 3 development phase I will capitalize. Last one debit to P&L. Sir, where is the hint for that? This 1500 units in bracket. Are you guys following? With this we are done with AS 26. Are you guys able to follow guys? Super. Okay. Perfect. So we are done with the 3 standards as per plan now. We'll go for a break. Come back in 30 minutes and resume with the next set of standards. Thank you guys. Yeah. Hi guys. Welcome back. So this session, this part, what we'll do, we will start off with AS 28, which talks about impairment of assets. Related, we will take up AS 10. We will finish AS 10 and we also had in our agenda to do buyback is what we will do. This is what I have in agenda. Then once this gets over, we will take up something else as well. Okay. AS 28, which talks about impairment. This standard we can keep talking for a lot of time, but I will be focusing again exam oriented. What are the sums we have? Because these new standards, if they are going to ask, they will ask only study mat sums. So let's focus on understanding those questions first, along with the limited concept for this. Let's say you purchased a phone, iPhone 15 now for 1,50,000. Okay. But every year the value of this iPhone will keep reducing, guys, depreciation, because iPhone 16 will come, iPhone 17 will come. Let's say you are depreciating at 20% per year. The value will anyway keep dropping. So first year you will debit P&L by 30,000 minus 20,000, so minus 30, your value becomes 1,20,000. Again second year you will debit by 24,000 and so on. We will keep reducing, which is normally for our wear and tear of the asset, and even beyond that, asset ni recover panna, you will only get less. That is the whole idea. But let's say suddenly tomorrow some new company comes and launches. I will give an example. iPhone, one of the USPs or many things they had was Siri is one feature which people use or not. They will say if you ask Siri to call somebody, it will call. If you ask Siri to find something on Google, it will help and find you. Correct? Same way you had Amazon Alexa, which responds and talks back to you, which felt, hey, pudusa irukku, this is new when it came. So that is one of the core features people use. Connect the phone, Siri integrates with so many things. But suddenly after ChatGPT came, guys, when I look at Alexa or Siri, it looks like a 10-year-old technology. Correct? What ChatGPT can do, Siri is nothing in front of that. So instead of me having Siri, I can have ChatGPT in voice base. It can do much more. So currently actually Apple also knows that. So Apple are looking to partner with either ChatGPT AI tool, or they are in more close contact with Google's Gemini AI tool. They are in talks to integrate the Gemini AI feature into iPhone. iPhone will now have AI. The next phone will have some AI enabled features. Okay. Suddenly nobody expected what ChatGPT could do. It just came out of nowhere, and because of which so many companies even got closed down. It affected so many companies in terms of productivity, work, etc. Correct? So now my iPhone, if I continue depreciating at 20%, it may not make sense. Imagine some other phone, let's say Google is launching some other phone like iPhone 15 with much better specs. Are you following, guys? Then the fall in value of my asset is much significant than what I thought. Correct? So when ChatGPT came, the basic chatbot, many companies have this chatbot. You talk to me, I will give you chatbot. Now with ChatGPT, this is nothing. Google itself is worried now. What will happen to Google? Our value will fall. What about all the small chatbots? They fall. Correct? So sometimes when some technological changes happen or anything happens, the fall in value of asset is not just 20%. It could be much more significant. Are you following, guys? Let's say common in Xerox machine. If some other new advanced machine comes, then the old machine value will not be there itself. Electric cars came. Now all the petrol diesel cars of the same variant will suddenly have zero value. Because instead of me paying 20 lakhs and buying a petrol diesel car, I can get a more efficient electric car now for 20 lakhs. So the technology, the plant and machinery that I purchased for petrol and diesel car is not having any value now. Correct? So we have a separate standard called AS 28. AS 10 talks about checking for depreciation. AS 28 talks about sudden fall in the value of asset, that is called impairment of asset, and they are saying that fall is almost permanent. how that impairment can happen? Now in this Apple example, something happened outside Apple. ChatGPT came, or for chatbot, ChatGPT came. This happened what? Externally, not in my control, but my value of asset fell. Are you following guys? Can you give me an example of an asset whose value fell because something else happened outside, not in my control? Yes. Camera. Okay, let's take Sony camera. The DSLRs used to be a hot selling cake, but after now iPhones and other smartphones came with good camera, only professionals buy this now. Day-to-day users don't buy it, they buy phone camera is enough. So externally something happened, some technological development affected my Sony company's full plant and machinery, correct? This is outside my control. Next is within my control, or internally, not within my control, but internally in my company. Let's say some short circuit happened, so plant and machinery got damaged, flood came, suddenly all my plant and machinery value crashed. I have a car is sitting in the house, I-20, suddenly flood came, now car is damaged, now it's become value has dropped massively. Are you following guys? So these are called external and internal indicators. Okay, external and internal. Whenever I have an external or internal indicator, I have to check for impairment, and if the asset value falls, I will account for that. How do I check for impairment? First you compute your normal carrying value of asset, applying all the other standards, applying AS10, cost minus depreciation, whatever, I will find my normal carrying value of the asset. How inventory, you compare cost versus NRV. In AS10 you don't do that comparison, correct? You just value at cost. Now they are saying you compare with this carrying value of asset which you normally compute with what you can get if you sell it now. That is called recoverable amount. For example, let's say I have a mobile phone with me, OnePlus 9. This phone carrying value in book, this phone is worth 20,000. But recoverable amount means today if I sell, how much I will get this, how much I will get from this OnePlus 9 old model, 4 years old, 3 years old. If I sell today, how much I will get? Every time a new model comes, this value will drop. So let's say today if I sell, I will get 12,000 rupees. Okay, 12,000 rupees for 3 years old OnePlus 9 some phone. Okay, so you are still showing in books an asset for 20 when its worth is only 12,000. Write off how much? 8,000. Are you following up? So this 12,000 is called net selling price. Now, second, they are also introducing a new term called value in use. Beautiful logic over here. Value in use means, let's say I use this asset from year 1 to year 5. I use it for 5 more years. In these 5 more years, you generated a cash of 5,000 in first year, 2,000 in next year, different cash. Let's say 4,000 in third year, 4,000 in fourth year, 2,000 in fifth year. So total cash I generated is how much? 17,000. This is without considering present value. Now you have to find the present value of this. Present value of 17,000. Let's say it came to 14,000. So first I'll tell the formula. The formula is, which I don't like, but carrying value of asset, you compare with the recoverable value. Recoverable value is the higher of net selling price or value in use. What is higher here, 12 or 14? I will take 14,000. 14,000 is the value of asset. Today in books it is 20. Your loss is 6,000. I will write off. What is the logic behind this equation? Why is it whichever is higher? What's the logic over here? Now, an asset, either you will sell it today or either you will use it. If I sell it today, I will get 12,000 rupees. If I use it, I will get 14,000 rupees. which you will do? As a normal human being, if I sell today 12, if I use you will get, you will take then use, you will use only a use panna I will get 14,000. Present value of future cash flows. If it's plant and machinery, it will generate future economic benefits, correct? So now this 14,000 is what anybody will choose. That's why whichever is higher. Sir, today if I sell 12,000, sir, but if I use for 5 years, I will get 25,000 rupees. Which you will do? I will use. So if you use, you will get 25. I will take whichever is higher. 25. Do I provide for impairment? No. This it says, see, current value is 20. With that 12,000 now. But if I use for a long time, I will get. No need to provide for impairment loss, because intention of asset is not to sell, it's to keep it for a long time. When I will sell, today if you sell 12,000, if I use, I will get only 7,000 rupees. Now what you will do? Sell it. There is no point of me having this asset. So I will sell it. I will get 12,000. What's the current value? 20,000. Still it's a loss of how much? I will provide for impairment. Are you following, guys? Lot to go in detail. So this is the logic of the equation, guys. Y whichever is higher. So all you have to do in exam is find three things. Find the carrying value of asset. Find recoverable amount, which is higher of net selling price, value in use. Then you compare. If your carrying value is more than recoverable value, in our example, it's more, then what you can recover is less. So the difference is my impairment. If recoverable value is more than carrying value, why will I sell the asset? Why should I provide for loss? I'm going to get more than what is my book value. I will continue and use it. Are you following?
Yes, sir.
This computation of checking how depreciation is provided every year, should I do this every year? No. I will do this only if there is an external or internal indicator. What are external or internal indicators? If you see, internal indicators, physical damage, some fight happened, they broke some machinery, or obsolescence of assets, technology got old, economic performance of asset is worsened, suddenly it's not performing well. It was performing well, suddenly some lot of repairs is coming, adverse effect, asset is idle, 6 months are used panla, it's not working. Are you following, guys? External indicators, significant fall in market price, then technological changes, legal changes. Look at this point. Market interest has increased significantly, leading to increase in discount rate. What is this? Now what is value in use? Cash flow into discount rate we will find. If cash flow is 10,000, if discount rate for example is 10%, for 1 year, present value is some 9,000 something. Now if this discount rate becomes 20%, what will happen to present value? Present value will increase or decrease? Decrease. For example, 10% will be 90. If it's 20%, 8,333. So if discount rate increases, present value will. If present value decreases, value in use will decrease. Value in use is the present value. It will decrease. So if this decreases, it might impact my recoverable value. Are you following? That's the point. Market interest rate increase significantly. That means if market rate goes up, discount rate will go up. So my increase in discount rate, present value will fall. Then you check for recoverable value. Are you following, guys? This is the first part. In initial attempts, this only they have to test. So keeping this in mind, let's straight away go to illustration 1. 3 things you have to find. Carrying value, recoverable value. Recoverable value is higher of net selling price or value in use. What is value in use? Present value of future cash flows. So here they have given Ergo Industries, following cash flows relating to PP. They have given discount rate. They have given cash flow. What you can find out? You can find out value in use. Correct? Similarly, they have given PP purchased on 1st Jan, which is 40,000 opening. Useful life is 8 years. Net selling price on 31st December. This is given in the question. He is asking you to calculate amount, carrying amount. So that means I need to calculate three things, guys. Some will get over. I need to calculate carrying amount versus recoverable amount. Recoverable amount is net selling price or value in use, whichever is higher. Let's look at the values. Net selling price, how many kuduthana now? 20,000. Value in use, cash flow into discount rate and find what, guys? Present value. Carrying value, how to find? They gave the opening value of 40,000. You will reduce what? Depreciation. Depreciation for, this is beginning of the year, end of the year. For how many years is this? 8 years. How many years over? 2021. Yeah, residual value at the end of 2026 also they have given. So you will find the carrying value. Are you following, guys? We will see the answer. Common mistake students do over here is when you find value in use, they take only cash flow and they forget residual value. Because the cash flow from the asset is not only cash flow, including, it also includes residual value. Number one common mistake. Okay. So I am taking all the cash flows, residual value, applying discount rate, which is anyway given in the question at how much, guys? 15%. This I am sure you know how to compute, guys. 1 divided by 1.15 and you found discounted cash flow as 19,025. So here I will write down value in use is 19,025. Are you following, guys? Net selling price is 20,000. So if I look at the answer, I will take whichever is higher. Look at this. Net selling price is given as 20,000. Value in use is 19,025. So which is higher? 20,000. Are you following, guys? Now how do you find which one? Carrying value. Opening value minus depreciation. For how many years? Now you have to see here, asset is purchased on 1st Jan 20. Check the book, I think this printing 2019. Closing year is 31st December 2021. So study mat has the year. It's given us. Okay. The year 20XX is immediately preceding year before 2020. That means it's 2019. So you purchased in 2019. Now I'm in the end of 2021. So 2019 is my first year. 2020 is my second year. 2021 is my third year. Totally 3 years. Are you guys following? Clear? How to compute depreciation for 3 years? 40,000 is the asset minus residual value of 1,000 divided by 8 years into 3. How much? 14,000. This I will minus from 40,000. How much you will get? 25,375. So something which is worth 25,375 is today worth only 20,000. So my impairment loss is 5,375. 5,375 is my impairment loss. So what was the value of asset before impairment? 25,375. I'll provide for impairment loss. Of course I will provide for impairment loss. So the revised value is 20,000. This is nothing but recoverable value. When I provide impairment loss, the new carrying value becomes recoverable value. So now carrying value is equal to recoverable value. No need to provide impairment. Are you following, guys? Clear? What about depreciation for next year? 3 years over. 5 more years left. So now my new value is 20,000. How many years left? 5 years. Minus 1,000, which is residual value. So cost minus residual value divided by 5, you get 3,800. Why are we reducing residual value? I told in day 1 class, depreciation is a saving. I don't have to save residual value. Are you following, guys? Understanding? These are 5-mark question. Initially, if he's asking an exam, are you getting it, guys? Okay. Let's look at this question. Anybody has a doubt? Again, illustration 2. X is having a plant. Carrying value is 100 lakhs. Balance useful life is 5 years. Residual value end of 5 years 5 lakhs. Estimated future cash flows is given. Discount rate is given. Also calculate recoverable value if net selling price is. Are they 3 things I have to find? Net selling price is already given at 60 lakhs. How to find value in use? Cash flow into discounting rate. What you should not forget is residual value given here. Where is it, guys? 5 lakhs at the end of 5. So either Tandi you have to add other 5 lakhs into discounting rate of this. How much? 10%. Again be careful. This is year 1, year 2, year 3, year 4, year 5. Residual value will be year 5. Don't do year 6. Are you following, guys? Are you getting it? So same thing if you look at this 1, 2, 3, 4, 5 and then where is residual value? They added it. Yeah, they added here, guys, just to show differentiation, and you get value in use as 121.92. Net selling price is given at 60 lakhs. Whichever is higher, what is it? 121.92. Sir, what about carrying amount? அவன் கேட்கவே இல்லையே. அவன் என்ன கேட்டான்? Calculate recoverable value. Sorry, calculate value in use and recoverable value. He is not asking you to calculate the book value. He is not asking you to calculate impairment. So I am not doing it. But if he is asking, I will calculate carrying amount and I will compare. Are you guys following? Easier. That's it for exam. Standard has lot more. But AS 17 also has a lot of things. But when I keep my exam, 5 tests. So this standard also, since it's the first time for us, if you know these basics, this is enough. But we will cover other key points also. Let's go to next question. Are they same logic, guys? With revaluation, without revaluation, all of that. Okay. We'll go to, only 4 questions and then we have practical questions. Let's take this question, but before that, let me finish some more theory which is there in the book but not tested in exam. So quick key points which I will finish. It's there in the book but not for, some slide exam chances are little low, so I'll quickly do it. How do you find value in use? Cash flow into discounting. Is this pre-tax or post-tax? Cash flow pre-tax or post-tax? Similarly, discount rate. Is it discount rate before tax or after tax? Or after interest or before interest? Are you following? So apply logic over here. Now let's say I have 2 cars, Ola cars, 2 Ola cars. One car is my own car. One is I have taken on a loan. So for this car I have to pay interest. This car I don't have to pay interest. Now will the cash flows earned by this car differ because one car has a loan, one doesn't have a loan? See, let's say there are 2 cars, driver 1, driver 2. Both are working 10 a.m. to 10 p.m. One car is own car, one car is interest. The cash flows I can generate, will it change because one car has a loan? No. Profit will change. Cash flow minus interest, I will find profit. But the income both of them earn, cash flow, the overall cash flow both earn will be the same. So I am trying to compute what cash flow I will earn, not profit. So you don't care about interest, pre-tax, post-tax. I only look at the cash flow which is earned. So look at this. What they are saying, include cash flow from use of assets. Are you following, guys? Here we will only take, look at this, we will only take pre-tax for rate also, but so projections of cash flow is necessarily incurred to generate the cash inflow from continuing use of asset will be included. Are you following, guys? That means everything is before interest, before tax, what I can generate. Are you following? Since this is also pre, both sides should be comparable. It's future cash flow into discount rate. So discount rate also will be pre-tax. Are you following, guys? Then few other key points just for exam purpose. What all is excluded in my cash flow? Okay, it's in theory, so I'm just quickly finishing for MCQ purpose. Future restructuring cost which is not yet committed will not be included. Sir, in future I'm going to do restructuring. Don't reduce in cash flow. It's not spent, don't commit it. Next, any cash flow for enhancing the asset performance, that is capitalized. Meaning, sir, my cash flow is 10k, 10k, 20k, year 1, 2 and 3. Okay. Now year 3, I capitalize, I purchase new asset for another 15,000. Will I reduce from this? No, it's capitalized. Are you following? That's what I'm trying to say. Are you getting it? So anything which is capitalized don't show as reduction from cash flow. Okay. Cash inflow or outflow from financing activities is excluded. Like interest is excluded. Okay. If it comes. Income tax payments for receipts are excluded. Cash flows that relate to obligation, this we will leave it. It's much in detail. For marathon we won't need this, guys. Some they won't test this. This rate also is pre-tax. Generally in question, use whatever rate is given because this rate gives for time value of money and risk for specific asset. In reality, under the asset rate will change. And one more reality point is, how can I use same rate for all years? And all the sums, year 1 to 5, 15%. It doesn't make sense, correct? Each year rate will change. CA final. In days. When rate changes, how to account? That point and all, they are saying you use something called incremental borrowing rate, different rate. No, we are not going there. Okay. Following, guys. Last one, again it's there in standard. If there is foreign cash flows, I will convert to what, guys? Indian currency. That's it. I will convert to Indian currency. That's about it. Are you following, guys? So discount foreign, there are two things, there are two ways I can do it. We don't have a sum. They will not ask, but just in case, since we discussed, two things. There is foreign cash flow. Will I convert to rupee and then discount? Or will I discount and then convert? Are you following, guys? Which one? Discount and then convert. That's it. I will discount and then convert. Logic over here. Foreign cash flows to use that rate of foreign country. Indian rate is for Indian cash flows. So again discount pannittu, then you convert to spot. Are you following, guys? If it comes, this all is there in your study mat. I don't even know if you have seen it. Why I am discussing MCQ. But I feel it's not that relevant till here. Are you understanding till here, guys? Sir, I am purila sir, last 10 minutes. No problem. Some you understood. Where is that? These sums you understood. That's it. I can tell like this only they will ask, guys. Initial 2-3 items. Okay. Now let's proceed to next set of sums. 3. Illustration 3. G Limited acquired a machine on 1st April for 7 crores and had an estimated useful life of 7 years. The machine is depreciated on SLM basis and does not carry any residual value. On 1st April 2014, almost after 1, 2, 3, 4 years of 2021, 21, 22, 22, 23. After 3 years, the carrying value of machine was reassessed at 5.10 crores and the surplus arising out of revaluation credited to revaluation reserve. That means on 1st April 24, my carrying value is 5.10 crores. Okay. For the year ended, correct, 23, 24, 1st April 24, 1st April 20, 2021, 21, 22, 4 years, correct. After 4 years, carrying value is 5.10 crores. Now for the year ended 31st March 2026, again after 2 more years, conditions indicating an impairment on machine existed and the amount recoverable ascertained to be only 79 lakhs. This is on which day? March 2026. That is after you figured out 5.1, another how many years? 2 years. Are you following, guys? 79 lakhs. You are required to calculate loss on impairment and show how this loss is to be treated in the books. Had company followed policy of writing down the revaluation surplus by increased charge of depreciation resulting from revaluation? Beautiful question. How they took it from CA final, they copied. They added here. Okay. For me to explain this sum, these are sums. See, if they want to scare you, 6 marks, 8 marks, this sum they will ask. Now, quickly, asset is worth 100. Depreciation, 10%. What is the depreciation? 10. We have a concept in AS10. When I go there today, I will tell you. In AS10, if asset is revalued to 150, now in my balance sheet, revaluation reserve is how much? 50. Asset is. In my P&L, if depreciation is 10%, what is my depreciation? 15. Correct? Now, because of revaluation, I am increasing my depreciation, which is not fair. Then simply I will revalue, increase depreciation, claim loss. So, what they are saying, AS10 says there is another alternate true and fair way of presentation. This is case 1. Case 2, when you do a revaluation, what I have to do is, additional depreciation is how much? To that extent of 5, from revaluation, you will transfer here 5. So, revaluation will become minus 5, this becomes 45. Here depreciation 15, revaluation credit 5, net is 10. Where is this there? In AS10. So, in the question, this company has done a revaluation and they are following this method of excess depreciation is offset by transferring excess revaluation. Are you following, guys? So, let's put a quick timeline over here. What they are saying, I'll just go with the solution so we can save time. After 4 years, you are right. So, after 4 years, on 31st March, we figured, no, we found the value is 5.1 given in question. But what should be the value? 7 is the value initial, and initial life is 7 years. So, 7 divided by, and residual value is given as, does not carry 0. So, what was the depreciation? 7 minus 0, 1 divided by 7, 1 is a depreciation, 1 crore per annum. How many years over? 4 years. So, how many depreciation? 4. So, 7 minus 4 crores, you get 3 crores is the carrying value. But they told asset value became 5.1. That means my revaluation is 2.1. Are you following, guys? This is of only postmortem of what happened. What is going to happen next? After 2 more years, what is the value of asset? Now asset value is 5.1. After 4 years, how many years are left? 3 more years are left, guys. No, 4, totally 7. 4 over balance is for the year, balance 3. So, balance is 3, but for the year ended 31st March, there is an impairment. Correct? That is after how many years?
2 years.
So, I need to know what is the value of asset after 2 years. That is after 6 years. Correct? How do I find the depreciation? 5.1 divided by 3 into 2. Sir, I am not understanding. 5.1 divided by 3. 3 years depreciation. 5. How much is that? 1 point? I have to provide depreciation for 2 years. So 5.1 minus 1.7 minus 1.7. So your book value will be how much? 1.7. Are you following, guys? I will again repeat this. Look at this. Everybody understood till 5.10? This is in the year 2014. In the year 2016, they have told recoverable value is 79 lakhs. Now I need to find 2000, this is carrying value. I need to find the carrying value in 2016. So I have to provide depreciation for 2 more years. Adana 5.1 divided by 3 into 2 minus 2 years depreciation. I am left with 1.70. So now I am saying today the value is 1.70 crores carrying value. Recoverable amount given in question. So what is the difference? 1.7 minus 79. 91 lakhs will be charged as impairment loss. We have to check that. 91 lakhs is my impairment loss. Are you following, guys? Clear? Sum is not yet over, guys. Okay. This is 91 lakhs is impairment loss. அவன் என்ன கேட்டிருக்கான்? Show the treatment of revaluation also. So now what happens in revaluation? Look at this. This is the asset side. What was the revaluation? 3 became 5.1. So my revaluation reserve had a gain of 2.1, but this would have been transferred back to P&L. How much? I will follow carefully. Follow. All the 7 years, what was the depreciation? 1, 1, 1 until 7, correct? But because of this revaluation, now the depreciation you charged per year is 1.7. Isn't this like my example where depreciation was 10, it became 15. So extra 5 I transferred back up. So here, what was my extra? Where it was 1, it became 1.7. So what's my extra? 0.7 should be transferred from revaluation back to P&L. For how many years? 2 years. So 0.7 and 0.7. Now how much you have left? 0.7. Correct? So out of my revaluation reserve of 2.10 crores, 1.40 crores is transferred back to, how much is left? 0.70 lakhs is left in revaluation. Correct? Now follow very carefully. What was the impairment loss you found out? 91 lakhs. What is the normal entry for impairment? P&L account debit. Straight away P&L debit 91 lakhs to asset how much? But this asset is saying, for instead of debiting P&L loss, idhe asset I already have a revaluation gain of 70. So first set off with revaluation gain. So my entry will be revaluation reserve account debit 70 lakhs. P&L will be 21 lakhs. Are you guys following? That is what they have done here, wherever that is. So P&L debit will be 21 lakhs. 70 will be first debited to impairment. What is the logic? 100 rupees asset went to 150 because of revaluation. Now 150 is coming back to 130. What is my loss? This is impairment loss. This is AS 28. This increases AS 10. Now increase pannumbodhu you took it only to balance sheet. Revaluation reserve 50. Decrease pannumbodhu how much loss? 20. This 20, why should I take to P&L when I already have a revaluation? So epola revaluation balance irko, to the extent of balance available, hit that first. Are you understanding the logic, guys? Because one asset ni balance sheet la revaluation gain kaatringa, other asset you will tell P&L debit impairment loss. Set off both. Are you following, guys? That's what we are doing in this sum. Are you understanding, guys? It's a mix of AS 10 read along with AS 28. Are you following, guys? Nice sum. Still the same sum is there in CA final. Ind AS impairment. Adhe sum is there. Are you following, guys? Clear? Now this sum is there in both inter and final. Following. Don't ask. It's easy, guys. Understanding, but lengthy sum. That's it. Are you following? Okay. So that means, where will I treat my impairment loss? Accounting treatment for impairment loss for exam. Individual asset. First, charge to revaluation surplus if available. Charge to P&L thereafter if no revaluation is available. Are you following? What about reversal? Is it possible for my asset from 100 to go to 150, create revaluation reserve of 50, again 150 drop to 130, 20 loss, possible? Yes, sir. So now what is the net balance in revaluation? 50 minus 20, 30. Again this 30 is increasing, two scenarios, follow carefully. Again this 130 is increasing to 160, increasing to 140. What do I do? I'm looking at the situation. Going up, coming down. Again it's going up. This increases AS 10. This decreases AS 28. Now again it's increasing to 160. What's my gain? How do I account? How do I account? Up to 20 I will take it to revaluation reserve because revaluation has taken a hit. Then this extra 10 where I will take? This basically that also goes to revaluation, but this is AS 10, AS 28. Following guys, understanding clear? This is AS 10, this is AS 28. Are you getting it guys? Now 130 becomes 140. This will go where? Plus 10 is AS 10. Okay, following. Now next, this 100, I'm showing the full scenario possible guys. Now let's say this 100 initially became 80, which is an AS 28 impairment. So I debited to P&L 20. Now this 80 again increasing. 80 is becoming 90, 80 is becoming 120, 80 is becoming 70. Are you following guys? Now follow carefully. First 100 became 80. How much loss? 20. Debit to my P&L. Now 80 again became how much gain? 10. Do what? Credit my P&L. This is AS 20 reversal of impairment. Why I will credit P&L? 20 you already debited off. Now I will credit how much? 10. Now again 80 is becoming 120. How much gain? 40. How I will treat this? Up to 20 is credited to my P&L. In which standard? 28. Because reversal of this 20 is reversal of the original 20 fall. Now again this other 20 revaluation reserve as per AS 10. Are you following? What if 80 becomes 70? Minus 10, debit my P&L AS 28. Are you following guys? Are you understanding? Don't have to mug up. If you get the concept you would have answered. Basically, if you can take to P&L credit only what was taken to P&L debit earlier. Are you getting it guys? This only I have given in simple notes over here. Reversal of impairment loss for individual asset. Initially reversed to revaluation surplus to the extent of revaluation surplus had there been no impairment loss. Thereafter transfer to P&L to the extent of carrying value and the cost for it I will take. Gain more than carrying value treat as revaluation gain. That only we saw in both these examples. Are you following guys? Understanding? They haven't tested this depth. The maximum depth they have gone in sums is illustration 3, which has this accounting for impairment loss. Are you understanding guys? This question is where goes up and again drops. Are you guys genuinely following? Last illustration, let's do and close this. Is this CGU? I don't think so. Okay. X purchased PP 4 years ago for 150 lakhs and depreciates it at 10% per annum. At the end of 4th year, it has revealed that the asset has 75 lakhs and written off the loss of revaluation to the profit and loss account. However, on the date of revaluation, the market price is 67.5 and expected disposal cost are 3 lakhs. What will be treatment of impairment loss on the basis that fair value for revaluation purpose is determined by market value and the value is estimated at 60 lakhs. Same normal, back to our basic sum. What are the values given here? You find the carrying value, you find a recoverable value. Recoverable value is net selling price, which is 67.5 minus 3. How much? 5. Recoverable value is how much? Value in use is 60. Whichever is, I will take 64.5. What is my carrying value? 150 was the cost, but then now revalued asset at 75 and written off the loss on revaluation to P&L account. So my current carrying value is 75 minus 64.5. How much loss? 10.5 will again be debited to P&L. Are you following? Because this is the double loss. First 150 became 75. Again 75 is becoming 64.5. Double loss I will debit fully to P&L. Are you guys following? That's what they did here. This 15 was already debited to. It's like a double decrease, guys. So don't have to worry. Only if one increase, one decrease, you have to start questioning. Are you following, guys? That's it. These are the 4 illustrations. Additional questions, we have CGUs. 1. This is easy, you do it by yourself, guys. They are given straight away values. All values are given. You have to compute. This also is CGU. This is straightforward question, guys. Can you see all the values given? Copy paste. This also is taken from your CA final book, but it's an easy question. It's a dead easy question. Straightforward values you will compute. Now I will go to CGU concept within this standard. Are you all with me, guys? Yes. Okay. We will take for another 10 minutes, 15 minutes and close this standard. Are you following, guys? Yes. Clear? Understanding so far? Yes, okay. What is CGU? Now, in simple terms, let's say this camera in the class is an individual asset for which I will do impairment. Or this desktop is an individual asset I will do impairment. But sometimes I can't find out the value in use for that camera. What is my future cash flow? With that camera alone I will not know. With this writing pad alone I will not know. Or with these lights alone I will not know. For me, the whole classroom setup as such is one asset. Camera taniya no use, but camera along with writing pad, lights, chairs, AC, fan, together only I can generate revenue. Taniya there is no use of the chair. Nobody is paying fees to come and sit on the chair in the class. It's whole thing put together, correct? So sometimes the standard tells some assets you can find out cash flow separately, plant and machinery, manufacture, output. So we have something called CGU which says an asset individually has no value, but together only it can generate cash flow. Then instead of doing impairment for the asset separately, if chair is broken also I won't care. I will do the whole addition together, which is called a cash generating unit, CGU. Are you following, guys? Adhe logic now. For CGU, you have to find carrying value of CGU, compare with recoverable value of CGU. Recoverable value of CGU is net selling price of CGU and value in use of. Sir, tani asset ku pandra badla I am doing total. It's a huge detailed concept. For inter, thankfully we have only limited points here. Carrying value of one asset. This is for multiple assets. Tani compute panunga, guys. Find carrying value for chair, camera, this desktop, light, everything together and you add it. Simple. Net selling price, easier. I will just take for each asset, no. Overall the asset together, if I sell, how much I will get? CGU or value in use, how I will do? Okay, next 5 years we can put 20 batches in this classroom. Each batch we can estimate 100 students into fees per student. Find the present value, find the CGU or the recoverable value, both sides. Are you following, guys? That's it. But the complication is, now let's say classroom. We have 3 classrooms here. For example, ground floor, first floor, third floor. Each classroom is a CGU. Even if first floor is not operating, ground floor class can operate. If ground floor class is not operating, third floor class can operate. Correct? But we have an admin room. We have an admin room. Now admin room goes to which CGU? It's a common corporate asset. The academy will have a goodwill. students are coming to any academy for a goodwill. Now, that goodwill I will put to ground floor CGU or first floor CGU or third floor CGU. Are you following? SS Hyderabadi Biryani, 10 branches. Let's say each branch is a CGU. But you are going to any branch because of the brand of SS Hyderabadi Biryani. Now, that brand goodwill, yenda branch podu? Are you following, guys? Are you getting it? So they are saying your asset, your CGU, easy to value. Ground floor classroom is camera, this desktop, light, chair, plus, so the classroom has 3 floors, ground, first and second, whatever, okay. Inge irukra assets I will update add assets, correct? But what about the admin room? Where I will allocate? They are saying you don't have to worry in inter, just do it in a proportionate, reasonable manner. Same way goodwill, allocate on a proportionate, reasonable manner. Are you following? So now let's say, let's do an impairment test for SS Hyderabadi Biryani, for example. Let's say SS Hyderabadi Biryani is one branch. Okay, one branch order carrying value is 20 lakhs. Recoverable value, today if I sell that branch of SS Hyderabadi Biryani, I am going to get, let's say, 15 lakhs. Okay. Why sir? Value dropped. Lizard fell, so value dropped. Okay. Fine. This is my net selling price. Now, example sonna guys. Okay. Next, this side, value in use, I am estimating future to be 17 lakhs. It will recover somehow. So still I have a loss of how much? 3 lakhs. Now what is the breakup of this 20 lakhs of that branch? Table, chair, then utensils, all of that. In the loss enga adjust pannuva. Individual asset na what you are doing? P&L account debit to whatever asset. Now this loss to which asset I will account? Are you following what I am saying, guys? So they are saying, vanda loss first you adjust to goodwill. Then you adjust to corporate admin assets are called corporate assets. Beyond that loss is there. Then to the remaining assets in the fair value of each asset. Are you following? For this we don't have a sum in book. Sum is not there. But it's a detailed concept. So look at this. Same impairment of CGU is carrying value of CGU minus recoverable value of CGU. CGU includes carrying value of individual assets plus allocable goodwill, allocable corporate assets. Here also same thing, corporate assets and all of that. Accounting for loss, impairment loss. If a loss comes, SS Hyderabadi Biryani, value fell. First goodwill nalna. So you write off with goodwill. Next write off to other allocable assets in the ratio of the carrying value of the other assets and corporate assets. Are you guys following what they are saying here? Let's say table is 20, 30, 10. Losses 3 lakhs. In that goodwill is 1 lakh. So I am still left with this 2 lakhs will be allocated in this ratio, including corporate assets. Are you following, guys? We don't have a sum in book, but just in case if it comes. Are you following? If you reverse, then the reversal should be accounted. We'll come to reversal a little later. For this only, the only theory part I am bothered about for exam is allocation of goodwill or corporate assets. There we have something called bottom-up test and top-down test. This can come in MCQ. We have an example sum in the study mat. I will show it with the example sum. You will get clarity. After that, standard is over. Before that, let me do some 1 or 2 practical questions. Again, I am telling you much detailed standard, guys. I am only focusing exam oriented. Let me take one question for CGU1. Yeah, this one, question 1 in practical. Okay. These kind of questions we can expect. I will finish this, then go to the last example and close this. Okay. A publisher owns 115 magazine titles, of which 70 were purchased and 80 were self-created. Each magazine is a CGU. Okay. Purchase magazine title recognized intangible asset. The cost of creating magazine titles and maintaining the existing titles are recognized as an expense as and when incurred. Cash flows from direct sales and advertising are identifiable for each magazine title. Titles are managed by customer segments. The level of advertising income for each magazine depends on the title. That means each magazine has different customers, each magazine has different income, different expense. Management has a policy to abandon old titles before the end of its economic life and replace them immediately with new title. What is the cash generating unit for individual? They are trying to ask எல்லா 150 magazine ஒரே CGU or each magazine separate. Each magazine is separate because of the definition of CGU. What is the definition of CGU? Smallest identifiable group of asset. Each magazine generates cash flow independently from other group of assets. This classroom can generate cash flow independently of what's happening in other classrooms. This one magazine can generate cash flow independently from what's happening in other magazines. Are you guys following? Clear? Like this you can expect questions in exam. Are you following, guys? Okay. I will just do last two questions and close this. One more CGU question. Okay. See, this top up and bottom down, whatever is there, we only have example. I personally don't think they will ask that in the first time itself. They have other questions to ask, but we will discuss that in the ending. Goodrex and Pharma acquired a sachet filling machine on 1st April for 60 lakhs. Machine was expected to have a productive life of 6 years. At the end of financial year, the carrying amount was 41 lakhs. A short circuit occurred in this financial year, but luckily machine did not get damaged and was still in working condition at the end of the year. So carrying amount is 41 lakhs. Okay, fine. Short circuit. This is an internal indicator. Internally something happened. The machine was expected to fetch 36 lakhs. What is this? Net selling price if sold in the market. Machine itself is not capable of generating. That means this belongs to a CGU. However, the smallest group of asset comprising of this machine is also capable of generating cash flows of 54 crores per annum, and the carrying amount is 3.46 crores. All such machines put together could fetch a sum of 4.4 crores if discuss impairment. Simple. Let me do machines separately first. What is the machines carrying amount now? 41 lakhs. What is the recoverable value of that? 36 lakhs. So on the machine taniya irthingna, carrying value is 41 lakhs, recoverable is 36. So I have a loss of, if it's an individual asset, I will provide loss of 5 lakhs. Correct? This is not an individual asset. Why? It is part of a CGU. The moment it's part of CGU, don't look at individual asset, look at the CGU. What is the CGU's carrying amount? 3.46 crores. What is the, all such machines could, if disposed, net selling price 4. Value in uses 54. Do I have impairment? Let it be anything, guys. Impairment rika? No, because even if it's more than 4.4 or less than 4.4, recoverable value is net selling price or value whichever is, then definitely 4.4 I will take if it's lower. So recoverable value is more. Will I provide impairment? No. Even though individual asset has impairment, I will not provide impairment. It's like in this class, someone sat on the chair, jumped on it, it broke. But this chair, it's part of an CGU. So I will not provide impairment for that one chair. CGU as a unit, I will provide impairment. Classroom as a whole took a hit. Are you following, guys? With this, our core sums are done. In example, we have something called top down and bottom up. Let me explain that. Yeah, okay. They gave an example, guys. I will explain with this example. When they will ask this, we don't know, but it's part of our syllabus. Have you seen this example, guys?
Yes, sir.
Done it? Okay. Follow. Follow, guys. Okay. Now, follow. At the end of 2020, Enterprise M acquired 100% of Z for 3,000 lakhs. Z has 3 CGUs, A, B and C. Each is 1,200 with net fair value of 1,800 and that is the carrying value of fair value. M recognizes goodwill of 600 lakhs, 3,000 less 2,400, that relates to Z. Okay. At the end of 2014, A makes significant losses. Its recoverable amount is estimated to be 1,350. The carrying value is given below. A, B, C's carrying value is 1,200 and 800. Goodwill is 120, 3,420. This is what is given, guys. Nothing to. This is what is given. This fair value is 1,800, 400 is my recoverable value of the asset. Okay. Now, scenario 1. If goodwill can be allocated on a reasonable and consistent basis, what is my goodwill? 120. Allocation of goodwill in some reasonable and consistent basis. How are they allocating? Using this ratio. Fair value, no, using the fair value ratio of 1 to 800. If they can allocate, then the new carrying value becomes, so this is the carrying value, add goodwill allocated, this is the revised carrying value after goodwill. This only I will compare with what? The recoverable value which is given in the question. Where is that? 1,350. At the end of 2014, A makes significant loss. Recoverable value is 1,350. Yeah. So 1,350 is the recoverable value. This 1,350 is for which one? A mattunna. So now, sir, what is my final point? 1,360, how did you get? Existing carrying value of 1,300 plus 60, because I was able to allocate goodwill. 1,360 is the A's value. Recoverable value is 1,350. Goodwill losses, impairment losses 10. This 10 with what I will adjust? Fully allocated with goodwill of which department? A. 60 what I will do it. Are you following? This is what approach? Bottom up approach, where for each CGU you are able to allocate goodwill. So you are coming from the bottom. CGU I am able to allocate goodwill. This is first scenario. Yes. One simple. A oda CGU oda value is 1,360. Adoda recoverable value is 1,350. So last 10. And the last impairment loss account pannuma. What is the entry for accounting? P&L to asset. Which asset to adjust first? Goodwill. So the correct. So this 60 is inclusive of the whole goodwill. The 120 goodwill is split. So now I am saying this 10 rupees loss is directly going for this department. That 60 is becoming 50. Are you following? See, it's much more detailed, guys. This itself is a 2 hours discussion. I am trying to be very fast. 5-10 minutes. Exam cannot. Now it's only exam oriented. If I get into concept, means full day only impairment. That's it. Okay. Now goodwill cannot be allocated. So if goodwill cannot be allocated, go up here. What is the carrying value? 1,300. In the 60 add panna mudiyadhu. I can't add that 60. So 1,300 is my carrying value without allocating goodwill. 1,350 is my recoverable value with goodwill. You look at this. Left hand side is carrying value without goodwill. Right hand side is recoverable value with goodwill and all assets. So losses. Where is the loss? Yeah. So recoverable value is more than carrying value. We don't have any impairment loss because you did not allocate goodwill. Of course you will not get loss because you are not allocated goodwill. That means this approach will not work. Which bottom up. Bottom up you are trying to add goodwill to 1300. You are not able to add it. Correct? So now we come to top down. I am trying to show bottom up is not working if you don't allocate goodwill. So when you are not able to individually allocate, yes, this branch of SS Hyderabad only is able to get me what guys? Goodwill. I will do everything together. All CGUs become one CGU. As a whole entity I will do. So as a whole entity, look at the whole entity's value guys, 3,420. Now tanitanya compare panna entity compare pannuva. So entity's recoverable value is given in the question as 3,400. So my loss is 20. This loss of goodwill will be allocated to that particular, which one? Particular total goodwill of 120. I will reduce how much? 20. Are you following? Simple as now. Very simple. What is bottom up approach? For each CGU, you try to allocate goodwill separately and try to compute loss for each CGU separately. If I can allocate goodwill. If you are not able to allocate goodwill, you do a whole total of the all entities A plus B plus C, it becomes D, and compare as an entity together. Instead of comparing CGU, compare as an entity. Idla or loss varma, and the loss is you take it to that particular CGU. Are you following guys? That's what we have over here also. For exam, what do we remember? Look at this allocation of goodwill or corporate assets. If you are able to allocate on a reasonable and consistent basis, use the bottom up test. Cannot be allocated. First you do bottom up test where we saw goodwill was 0. Then you do top down test. What is bottom up test? Allocate goodwill or corporate asset and compute impairment of for each CGU. What is top down test? Compute impairment for the larger CGU entity as a whole including goodwill and write off the loss to the unallocated goodwill and the 120 will write off. Are you following guys? Are you genuinely understanding? I understood guys. Hello. Are you understanding? Yes, okay.
Sir, the second way we are doing bottom of this, impairment loss should be 0. Only then we have to check for top down test.
Correct.
If there is impairment loss,
So in second, first they are saying do bottom up to see if there is impairment loss. Impairment loss I will account no. Then again I will do top down to see if entity as a whole there is impairment. So basically, if there are 3 branches, 1, 2 and 3, what they are saying is first you try to find individually. If any loss is there, account for it. Even if loss is goodwill is allocated or not. If goodwill is not allocated here, then you do for the whole thing to see what could be the loss. It's to put it in more simple way. SS Hyderabadi Biryani has 10 branches. Suddenly value dipped. People are not going there. Because of which branch? I don't know. So it's all branches put together. Are you following? If you are able to identify, take it to that branch. Are you following? It's a much more deeper concept guys. Exam what to do? If you can allocate goodwill, allocate and compute. Unable to allocate, compute as a whole and take the 2 unallocated goodwill. That's it. Are you following guys? Clear? Then we have this also. What is to do for impairment loss with discontinuing operation? Discontinuing operation is the exam. Now discontinuing operation with impairment loss. Sorry. 24 disclosures. Okay. Board of, we know what is discontinuing operation. For discontinuing operation, how I will do impairment? Just learn the theory. Only theory is there in book 4 MCQ. Binding sale agreement case. Compute recoverable amount for entity as a whole. Piecemeal distribution case. Recoverable amount for each individual asset, termination by abandonment for individual asset. If you remember discontinuing operation, we broke down discontinuing operation into 3 parts. Okay. What they are saying in AS 24, discontinuing operation is of 3 parts. Disposing of substantially in its entirety, disposing of component assets in a piecemeal manner, termination by abandonment. இங்க வேணா சொல்றான் இந்த மாதிரி ஒரு ஆபரேஷனுக்கு how do you compute impairment loss? In case A, do for entity as a whole, because I am selling entity as a whole. In component asset means do it for separate, because you are going to sell it separate. Unless you are going to group the assets, then you do it in a group. Termination by abandonment, again that particular asset, compute impairment separately. Are you following, guys? Very rare for them to test this. It's there in the book, so we covered it. Clear, guys? That's it. With this we are done with AS 28. Perfect. Okay. If you guys want to know when this bottom up top down will come, look at this MCQ and all, you will know. So for both corporate assets and goodwill, you should know which test you should use. Allocate panna mudinja, use only bottom up. Allocate pannalana, use bottom up and top down. Enough for our exam. Okay. Clear, guys? We'll go to next standard. So what we plan for the day? AS 10 and buyback. We'll finish these 2 and see what to do next. Settle down, guys. So we'll be doing it till 8 o'clock. These 2 topics easily I can finish. 20-30 minutes for buyback, 20-30 minutes for AS 10. Okay. Is this speed fine? Should I speed up more? Speed up more. Okay. Little slow. Speed up. Okay. Fine. Democrat, how many of you speed up? How many of you continue in same pace? Fine. But whatever pace I am continuing, today we are going home only after I finish buyback and AS 10. Okay. I think yeah, it should be fine. I think the light power. No worries. நீங்க வந்து பண்ணிட்டீங்களாங்க? Leave it. I think Kirtan will take care. Yeah. They are able to see me, no? Video theriyudla. Paravalla. Then we'll continue. Okay. Fine. Follow. Let's proceed, guys. We'll go to buyback now. Buyback is just section 68 application. Simple. Buyback has 3 rules that you have to remember for exam. Apply those 3 rules. Law parts a theory. I am not discussing law now. We'll do law when we go to law marathon. Now, law marathon, April. That day we will do that. We'll leave that. Now, here we are going to apply this in what to say, sums. Buyback has 3 rules. First, they are saying, what is the difference between buyback and reduction? Understand? If a company has 10 lakh shares of 10 each, let's say, okay, 10 lakh shares of 10 each, this becomes 7 lakh shares of 10 each is 1. Second, it becomes 10 lakh shares of 2 each. Both possible. Which is buyback? 7 lakh shares into 10 is buyback. This is reduction of share capital, section 66, internal reconstruction. This is my buyback. Buyback na price per share will remain the same, only the quantity will fall. Reduction, more face value will fall. I am reducing the liability that I have towards my existing shareholders. Reduction happens when company is generally in loss making. Buyback happens when company is in profit making. Okay. Now, so let's say I have 10 lakh shares of 10 each. Can I do a full buyback? No. I can buy back only. Depends on what. First, in terms of quantity of shares, you can buy back 25% of shares outstanding, number of shares. Here there are 10 lakh shares, so you can buy back up to 2,50,000 shares. This is the quantity on number test. Second, amount, or we call it as resource test. How much money I can use. For this only depends on what resolution you pass. If you pass a board resolution, if you pass a special board resolution pass, you can buy back 10%. SR now 25%. Unanimous resolution means how much? Can I buy back 30? Sorry, special is 25. Special is 25. For unanimous, can I buy back 30%? Nothing. Stops with 25. Okay. Highest is 25. Of what? Paid up share capital plus free reserves. For this section alone, free reserves includes securities premium. Why? We have seen in the class detail. Beautiful logic. Why securities premium? All of that. Okay. Next, we are not getting into the why here, guys. We don't have that much time. Third is debt equity ratio post buyback should not fall below 2:1. Here when I say debt, it's all debt, secured, unsecured, short term, long term, LMA. And equity is my shareholders funds including securities. See, in the section 68 of Companies Act buyback free reserves includes securities premium. Beautiful logic for that. This is the only section. You will see that in law, but law you will already learnt it. Now we don't have to bother about it. And one more point in the full provisions which is relevant for us. Buyback in law has many procedures. Complete buyback within 1 year, no new buyback for next 1 year, destroy share certificate within 7 days. In among those points, what is relevant for me is these three and one more bonus point. Bonus point or not bonus, guys. Bonus point should follow is CRR. How much ever you are doing buyback, the face value of that equivalent face value should be transferred from free reserves to CRR account. This also is another beautifully explained provision. I have done it in regular. We don't have time for that now. Why we transfer? Again, it's a concept. Some of you aware. How many of you not aware? Why we transfer? Good, if you are aware, it's fine. Not aware also, exam they never ask why. Only they ask what you have to do. Okay. So CRR you transfer from free reserves to CRR. Okay. 4 things to remember in buyback sums. Number of shares you can buy back is 25% of number of shares outstanding. In terms of resource, money I can use is 10% or 25% of paid up share capital plus free reserves including SP. Debt equity ratio after buyback should not fall below 2:1. Why they are saying debt by equity? After I do buyback, equity will fall. If denominator falls, ratio will increase. See, if my debt was 1000, equity was 500, debt equity is 2:1. But if equity reduces because of buyback, then ratio will increase. That should not happen. Beyond 2:1, which is my ordinary industry allowed ratio. 100 you can borrow 200 rupees. Okay. And transfer to CRR. With this, we will straight away get into 1-2 sums. Buyback page, yeah, okay. Sir, will they ask provisions of section 68 in accounts? Will they ask, guys? It is there in theory. In study mat, section 68, whatever is there in law book is there here also. So they can ask if they want to. Okay. Follow. Yeah, follow guys. One more provision within buyback chapter, even though they told they removed redemption of preference shares, those questions will come in buyback. When you are doing redemption of preference shares also, two important points that you have to note. When you redeem preference shares also, the face value of preference shares is redeemed should be transferred to 100 rupees preference shares repaid at 125. What is the extra 25? Premium on redemption. This I have to write off. For this you cannot use securities premium. You cannot use securities premium. The equity shares buyback I can use securities premium. Preference shares you can't use securities premium, assuming company is following 133 accounting standards. Logic is very simple. Who gave securities premium? Equity shareholders. So I can use for them. You can't use for preference shareholders. That's the default assumption. Generally preference shares will not give me premium. Let's go to the sums. I'll do one sum which has computation. That's what I'm looking at. Inger computation sum. Illustration 5. Okay. Why for all the questions in buyback chapter they ask non-listed company? For listed company it's not 10-25. SEBI has a different percentage. I am not telling you that percentage. Do we have in syllabus? No. So I don't want to confuse you. So listed company has a different percentage. Okay. Let's take illustration 5 in book. Pratham Limited, a non-listed company, has the following capital structure. Share capital reserves, general reserve, SP is given, P&L, revaluation, loan funds. Okay. You are required to compute by debt equity ratio test the maximum number of shares that the company can buy back if the offer price is 30 per share. They are applying only one test here. This question only one test. Perfect. Let's small change. Let's jump to question 6 where we can do all tests. Okay. Before I do 6, ensure everybody makes a note of illustration 4 alone, which is a very unique illustration. Ideally it's out of syllabus according to me. Investment in own debentures and stock options. Redemption of debentures and stock options is not in our syllabus, but in the buyback chapter one adjustment they included redemption of debentures related investment in own debentures concept and stock option. I will not be taking that now, otherwise I will teach you debentures and stock option now just for one question, but you go through that at your end for that adjustment. I will be focusing core on buyback over here. Take question number 6. So look at this question. They are saying Perot is a non-listed company, has the following capital structure. Equity share capital is given. They have given all the reserves, many. Which one I will consider? I will consider general reserve, securities premium and P&L. Only these 3 I will consider. Then they have given loan funds, whatever. Shareholders on the recommendation of board have proposed to buy back maximum permissible number of equity shares. Market value is 25 and they wanted to offer more than 20% over 25. Which resolution is passed here? Board or special law? The shareholders on recommendation of board have approved. That means special resolution. Are you following, guys? Let's do all the 3 tests for this one sum alone. What are the number of shares here? 330 divided by 10. So first test is the number of shares outstanding. So 330 divided by 10 is how many? 33 crore shares are there. In this you can buy back only 25%. So into 8.25 crore shares you can buy back in terms of number. What is the number of shares available? I mean, what is the price per share of buyback? 25. You are going to buy at a premium of 20%. So plus 20%, how much? I want to buy back at 30. Let me go to test number 2. In test 2, what they are saying, irukra kaasla I can use 25%. What is the money available with me? 330 is my share capital plus 240 plus 90 plus 90. So how much is that? 240 plus 330 plus 90 plus 2 times we add 90. How much? 750 into 25%. How much? 187.5 is the amount I can use. Correct? In this, how much is per share? 30. That means how much you are getting? 6.25 crore shares is what you can buy back. Are you following, guys? These two tests are simple. I will again summarize for you over here. So the first two will not change, guys. Share outstanding in all three cases 8.25 and 6.25. That's what we also got, guys. Clear? Share outstanding na number of shares outstanding into that particular percentage. Resource test na irukra kaasla you can use 25%. That means I can use 187 crores. If each share I buy back for 30, then you can buy back 6.25 crore number of shares. Are you guys following? Now coming to the third scenario where institute uses something called simultaneous equation method. We can do with that or without that also. Okay. Now follow. Here where the loan fund is 1,800 crores. They gave 3 scenarios. We will take the first scenario where loan fund is 1,800 crores. So I will use the book itself to explain. We can save some time. Okay, I will do it with 1,200. That's where we get the answer. Later I will explain why I am doing that. Okay. Now, the loan given in the question is 1,200, which is my debt. So what if my equity I will get 2? Only if this is 600, my ratio will be 2:1. That means at any point of time, my equity should not fall below 600. What is the equity currently available? Total of this? 750. Correct? So my equity from 750 can maximum fall to 600. That means it can fall by 150. Correct? That's what they have done here. It can fall by 150. Okay. It can fall by 150, guys. How much is per share? 30. What is the answer? 3 point. Sorry? Yeah. 5 crore shares is what I can buy back. I will again repeat, guys. Follow. My loan fund is 1,200. Debt equity has to be 2. So equity has to be 600. My current equity is 750. It can come and fall to 600. So my fall in equity can be 150. Per share is 30. So I can buy back 5 crore shares. Can I do it like this? No. What is the problem if I do it like this? If I do 5 crores, let's do. What is 5 crores into 30? My 150 will drop up. So 750 minus, it becomes 600. But after this is also transferred to CRR. How much? 5 crores into 10. face value. This is how much? 50. That means my fall is not 150, fall is 200, it becomes 550. This is not right. Are you following, guys? Now what to do? What should I do, guys? So we get one equation. There is something called simultaneous, but I will give you a shortcut. Divide 150 by 40. How much are you getting? 3.75 crores. Answer is 3.75. Are you getting it, guys? Without equation, you will get it answer. How, sir, are you doing? I will tell the shortcut also. Follow. Whatever you are dividing by 30, add a face value. Just add the face value of 10. You will get 40. Answer is 3.75. Simultaneously, guys, for doing this. Are you understanding? Okay. Now, this is for checking your answer. But ICA uses simultaneous equation, so you have to do it at least for getting marks. Kirtan formula. Which one? 40. Simultaneous equation. Are you following, guys? I will tell the logic of why I am dividing by 40. 150 is what I can use. How I found that 5 crores into 30. But what I should actually want to use is 5 crores into 30 plus 5 crores into 10, which is my face value. So what I need to use is 40. So actual answer is 150 divided by 40, 3.75. If I take some other sum also, previous sum has that. Fifth sum, correct? So in fifth sum, maximum permissible future equity shareholders is 59 lakh 85. Present equity is 72 lakh 80. How much you can reduce? 72 lakh 80 minus 59.85. How much are you getting? How much? 12 lakh 95,000 divided by 30. Sorry, 40. How much are you getting? 32. No, that's not the one we should take. Yeah, sorry, maximum permissible buyback is 35 lakh 38 lakh 85,000. Divide this by 40. Oh, then no, it will come 100%. 1 second. Loan is so much. Leave this table. Loan is so much means by 2. Equity is 21 lakh 80. Present equity is correct. Present equity is how much? 72 lakh. So 72 lakh 80 can become 21. So the fall is 59 lakh 85. So 59 lakh 85,000 divided by 40, you will get how much? 1 lakh. Price is 30 plus 10 face value. How much are you getting? 129,500. Correct. Are you getting it, guys? Varliya. 149 625 is what you are getting. Correct. Okay, 1 second. What is the difference between 72, 80 and 21 lakhs? How much? 51 lakh. That means my equity, like how in the previous case, can fall by 150. Here it can fall by 51 lakh 80,000 divided by 40. You will get 1 lakh 29,500. Are you getting it, guys? Okay. This answer is correct with simultaneous equation. The logic of this is I can use so much if the share price is 30. I need another 10. So I will add 10, 40. Exam time is, sir. 1 minute left. Use this technique, shortcut. Now what is simultaneous equation? Very simple. Let's go back to the previous question for which we did the whole computation. With this, simultaneous equation, look at this. There are two equations that come here. I will not solve for x, but I will just frame the equation. So if you look at this, my present equity is 750. If I just take that here, okay, I'll explain here itself. Equation 1 is present equity is 750. In that, I will transfer something to CRR.
Yes, sir.
After transferring this to CRR, I should have something which is, yeah, I should have 6 minus 600. What is 600? Future equity that I have to maintain. That means from my present equity, if I transfer to CRR, and then what is the minimum equity required, this answer only is Y, which I can use for buyback. Are you following, guys? What I can use for buyback is Y. How Y came? 750 is what I currently have, minus for CRR, minus for what is minimum required, balances Y. This Y only I can divide by 30 into what I can buy back is Y. Y divided by buyback price 30 into 10 is equal to CRR. What is CRR in our equation? X. So now you have this as equation 1, this as equation 2. Solve X for Y, you will get the answer. Whatever is there. Are you following, guys? Shortcut is what? Reduction divided by buyback price plus face value. Are you following, guys? Example, you do this for checking the answer. 100% this will be correct for checking the answer. Are you following, guys? Clear? With this, buyback is done. Are you following, guys? In the same sum, other case buyback will not come, because if loan funds is 1800, equity needed is, but I already have 750, you can't do buyback. Here also, if loan is 150, needed 750, I have 750, you can't do a buyback. Are you following, guys? Remember to note in the same chapter, redemption of preference shares, the premium on redemption, do not write off with securities premium. That is a default assumption we take. Are you following, guys? In the previous session, I was discussing about internal reconstruction, where I told in the balance sheet, if there is any goodwill, patents, intangible assets, you have to write off with capital reduction, even though the question is silent. That is what we have to do. But someone came and showed me, sir, in the mock test paper they did not write off. That is a one-off answer. 100% sure you have to write off. That is how I learned. That is how it's been there. But when you will not write off is, if this patent actually has some value, we will not write off. But how I will know that? Question has to give the information. So in the mock test paper, ICA has taken assumption that patent has some kind of value. Here it's again debatable. You can take both ways. I can show you some sums where they write off, where they don't write off. So if you are writing off, give a note. If you are not writing off, again give a note saying we are not writing off, because question is silent about it. Are you following, guys? Clear? Okay. With this we are done with buyback. Are you all able to understand, guys? Okay. Super. Following. Following, sure. Tomorrow you will come. Shortcut. Shortcut is simple, guys. Maximum amount I have is nothing but present equity minus future equity. That means this is the maximum that can reduce. From this I will divide by buyback price plus face value, because we transfer to CR. Careful, guys. Face value 1 rupee, you will add 1. Are you following, guys? Everybody understanding? That's it. This is buyback chapter. Will this work? 100%. Every sum it will come. Correct. Fine. Can we proceed? Examiner, you do this only for cross-checking or if time is less. What some students will do, they will create the equation. Then they will not solve it. This answer will okay. To save time. People have done that and they have got marks, guys. Are you understanding what I am saying? They will write the two equations. Then they will not solve fully. After solving x and y in solli, they will write answer as this. Okay. He will save the 2 minutes. Last standard for the day. AS. Only that was there in our agenda for today? Fine. End of the class I will give you what are standards for tomorrow. Topics for tomorrow. Fine, good. We were able to finish what we planned today. Unlike yesterday, guys. In email now. You start from guys. Shall we do AS 10 and 24?
Yes, sir. Yes, sir.
Extra pannalam.
Yes, sir.
Ten. Okay. Follow guys. AS 10 is a big standard. We have about 20 questions in study mat. Okay. But most of the questions revolve around one area as to what is the amount you can capitalize. What is the amount you can capitalize? What is included? What is not included? It is pretty simple in terms of logic. Just like how AS2 we had a story. I will just build a small story over here. We will spend 30-40 minutes and close this standard including 2 to 3 sums. Let's say you wanted to buy AC for your house. Summer season is coming. You badly wanted to buy AC. So let's say your house is here. You left and went to Chroma showroom. You left in auto. For auto you paid 200 rupees. Went to Chroma showroom. You spent half an hour, 1 hour and you purchased one AC for your house. You can't carry and come. So they have to deliver it. You came back in cab. It got late. So you wanted to come back in cab. You came back in cab. For cab you have to pay 300 rupees. Then after 1 week, Chroma came to your house for delivering the AC. Delivery charges, he took 500 rupees. He said 1 AC means you have to pay, 2 AC now free. Okay, fine, I will pay 500. He came to your house. He had to install. First he told installation of AC is free. Then after coming home, he gave a bill of 2000. Installation free. Yes sir, wire is not fitting. We have to add these wires. So you have to pay 2000 rupees. No other option. You paid 2000 rupees and they installed the AC and AC started to work. After AC started to work, within 7 days itself, it had some repair. Then repair not because of the AC fault. By mistake you jumped on the AC for something and the AC, some damage happened. So you call that service person. He told, sir, we will do for you at 50% discount. Okay. So you have to change some parts of the AC. He can figure out it's a internal fault or external fault. So he will ask how it came damage over here. So it was 5000 rupees. He gave you 50% off. 2500 rupees you paid for the repair. He told service na free up sir, new AC, I understand. Okay. You paid this. Now in this, and for the AC you have to pay money of 40,000 rupees you purchased the AC. Now what all I will capitalize? Will I capitalize the auto expense of 200 for going to showroom? No. Coming back in cab, will I capitalize 300? No. This 40,000? Yes. AC cost? Are the capitalize? Okay. This 500 delivery? Yes. Installation 2000? Yes. That service 2500 changing spare part. Will I capitalize? Now whatever I have shaded in yellow, everything including the auto cab charges will be capitalized. Every expense necessary to put the asset in use or for ready for use will be capitalized. Just like AS2 my inventory I gave story. Until those potatoes reach the factory gate, until it becomes final chips packet, everything will be capitalized to cost of inventory. AC also, until the asset is ready for use, I will capitalize. Remember in AS16 I told you building, for construction of building, cement, sand, tea expense, electricity expense, water expense I capitalize. Here also I have to capitalize until the asset is ready for use. After the asset is ready for use, this expense, so this is called initial expenditure. Initial expenditure will be capitalized until the asset is ready for subsequent expenditure. It depends. Let's say you bought a car. Someone was playing football. Car glass broke. So you change the car glass. Will you capitalize? You use the car for 1 year. You have to repaint the car. Will you capitalize repainting? In the car, your back is paining when you're driving. So you put a massage chair. Massage thing for a driver's seat alone. Will you capitalize? You added extra engine, made it double horsepower. Will you capitalize? So, subsequent expenditure. We can tell a bigger story, but we don't have the time. Subsequent expenditure. Anything which is going to increase the life of the asset or going to increase the efficiency of the asset, I will capitalize. Replacing this part for 2500. Will I capitalize, guys? No. As AC is still going to work the way it was working. For car, changing the glass, life increase apoda. You can have drive the car without the glass itself. Correct? It's going to be the same, no life. Hello. Correct? No. Next, painting the car. Is it going to increase the life of the car? No. Engine is still going to be the same. Massage chair, back side. No, I am saying, I am claiming because of that massage for my back while I am driving more comfortably, I am driving more safely, more efficiently, properly using the gear, efficient usage of fuel, because I am not putting properly and accelerating, so life is better. Can I claim? No. Yes, I can claim. If I can tell that massage is going to increase the efficiency of me using the asset, I can capitalize it. Are you following, guys? After this, I added one more engine, double horsepower. Will I capitalize? Yes, because the efficiency will increase. It's all about if you can, either the useful life is increasing or efficiency is increasing. Are you following, guys? Follow massage. Okay. Follow. That you can do after class, 8 o'clock. We will finish. Then wherever you go, doesn't matter, guys, for me. Okay. Follow, guys. Hello. Okay. So this standard basically tells you will capitalize initial expenditure, anything which is necessary for the asset to be ready for use. Subsequent, anything can increase the value of my asset or useful life goes up. So definition, this standard, the first page I am going to spend most of the time, then subsequent is not that much. I will quickly get through. Here they are saying what is included, what is excluded. For cost of an item of PP, purchase price, what you paid 40k for that AC. Okay. And it includes any directly attributable cost. Cost necessary to bring the asset to present condition and necessary for it to operate in the way management intended it for it to operate. That cab expense. Following, decommissioning, restoration and similar liabilities. What is this? Let's say, have you ever heard of an oil rig? What's an oil rig? In the ocean, middle of the ocean, you will see some equipment like huge plant and machinery, like one plant where they will send that pipelines down to the seabed and they will extract oil. I can't forever extract oil there. Why? Oil rikadanga. Forever, after few years you have to leave that place and go to some other place. That's what the government tells. Don't fully extract the oil. Let some oil remain so that it will again start getting regenerated, but still they don't allow the full thing. They have some limits because it's a non-renewable resource. Okay. Now when they will give you license for 10 years, so that 10 years you can destroy the ocean and then you can leave. Now during those 10 years after you destroy and when you are leaving, to remove this oil rig, is it going to be cheap or expensive? It's going to be expensive, correct? So to remove this oil rig after 10 years, it will cost me how much? If I have to just show you how an oil rig looks. Where is this here? I'm talking about this one. Yeah, you've seen these structures, guys. Okay, these huge structures. That fine. So to remove this structure, you have to incur some cost after 10 years. Now simple. I know I'm going to incur expense after 10 years. Will I save for it now or take care of it later? Save for it now. That only that future expense I will find the present value now and start creating provision. Provision is a saving. That only estimated cost to dismantle the asset. This also I will include today. Are you following, guys? In my cost of asset. Are you getting it? Then the standard, just for you to understand better, they have told what is included, what is excluded, and similarly they have again specifically told what is excluded. Most of these points are common sense. If we have more time, I can give you bigger stories, but now exam oriented. What is included, what is excluded? Don't mug up the list, just be aware. Employee benefit cost will I include? Yes. Remember, construction of building, employee benefit. Site preparation, another. To get the site ready for construction, will I include it? Yes. Initial delivery and handling cost, installation and assembly, just now we saw, we will include AC. Professional fees, for my house which AC is best, I had doubt. So I called the professional, he took 2000 rupees commission and told, for your house this is the best AC. Professional fees. Are you following, guys? Civil engineer, all of that. Next. I'll come to point, this is 5, we'll come to that in a moment. Excludes. Cost incurred while an item capable of operating in a manner intended by management has yet to be brought into use or is operated less than full capacity. Classic past exam question. Let's say we have an amusement park. Amusement park can operate at 1000 people in a day or 10,000 people in a day. But just now I launched. So I did not want to launch for full 10,000 people. I was scared, what will happen, let me test it. So I started operating only at 3,000 people. So I had some loss. I could have operated at 10,000 people, but I'm operating only at 3,000. So I'll have a loss of, this loss cannot be capitalized. COVID came, theatre was only occupied at 50%. That loss I can't go capitalize. Are you following, guys? So cost incurred while it's capable of operating in a manner but you are not operating, I will not capitalize. Next, initial. Every business initially has loss. You can't go and capitalize this. This anyway we know. Our specific don't capitalize. Clear, guys? Cost of relocating or reorganizing. I'm shifting restaurant from location A to location B. By shifting, maybe your business will increase, but that shifting is not a cost of to be capitalized. The new equipment you buy in the new place, I can capitalize. Shifting and the transport thing, that I will not include. Are you following, guys? Last one, let's say, for example, I am doing a trial run. You manufacture a new juicer, one juice machine you manufactured, where any vegetable, fruit, if you put, you will get the juice. Now, this juicer you wanted to test if it's working. So one day you kept in a mall and gave free juice for everybody. Okay, it worked well for 1 week. Now you wanted to see if people actually buy this. So just to sell that machine, you are selling juice for 5 rupees. So people were buying for 5 rupees. Then they will ask, hey, juice is very good. How did you make machine? Pati, you will talk. So while you sold the juice for 5 rupees, you got some income. That income, can I reduce from my cost of asset? Look at this. Cost of testing whether the asset is functioning properly, juicer, after deducting the net proceeds from sale while bringing the asset to present location, and that means that 5 rupees, the temporary income you earned was income earned when you were testing this machine. So I will set off with my cost. Are you following? Getting the logic? My intention was not to earn 5 rupees, but na testing point of time I earned this. Are you getting it, guys? Okay. Next, exclusion. if you open a new restaurant, you will do this inauguration guys. All that inauguration cost and all, you will not include. Call, ribbon cutting, all of that, we will not include. Then advertisement, promotion expense, I will not include. Cost of conducting business in a new location, including staff training cost for new customer. I am opening a branch in Germany, so I am training my staff to learn German. I will not include it. Okay, last one, admin and other general overhead are excluded. Are you guys following?
Yes, sir.
Now, why we discussed all of this? We can straight away go to sums. Most of the sums come only with this part. Okay, follow guys. Already 7 illustrations we are done with the concepts. Look at this. Question 1. We are renovating one of the store and that renovation is going to increase 15% of my sales. Will I capitalize? Yes. Because I am going to get future economic benefits. Next. Where it went? Second, I am just doing randomly 4, 5 or 6, 7 whatever guys. Entity has a freehold property which it wants to knock down and redevelop. For that, because of this redevelopment, shifting of production facilities, setup cost in new location, rent in the new location, removal of this from this place to the new place, I incurred all this cost. Will I capitalize? No. Shifting and relocating, none of this I will capitalize. Are you following guys? Okay, next. Very good, nice question. Omega Limited contacted with a supplier to purchase machinery which is to be installed in one of its departments in 3 months time. Special foundations are required which are to be prepared within this time, okay, for which site preparation is 1,40,000. Will I include? Yes. These activities are supervised by a technician during the entire period who is employed at 45,000 per month. Will I include? Yes. But for how many months, sir? 3 months. Common mistake, we take 45,000. You should do 45,000 into 3 months. Machine was purchased at 1 crore 58 lakhs and 50,000 is transportation charges. Will I include both? Yes. Architect is 30,000. Will I include guys? Yes. Everything I will include. Only thing what you will miss is that 45,000 into 3. Are you guys following up? In the include section, in the part you will get most of the questions in AS10. Next. I'll go to some other question. Amusement park we finished up. They are giving a discount in the startup period. Can I capitalize this loss or expense? No. What I just discussed. Exchange will come to that. Which question we can do next? Practical questions are again new questions added guys. Okay. Fine. Quickly, question number 2. Try and see what all you will include in this, what all you will exclude from whatever I have taught so far. Follow guys. First I'll include yes. Initial delivery, yes. Site preparation, yes. Consultant advice, yes. Interest paid, I am yet to teach you. Dismantling cost will after 7 years, yes. Present value. Operating loss before commercial production, no. Now interest charges paid to supplier of plant for deferred credit. Sir, I purchased the plant on a credit basis because I extended the payment. I should have paid within 3 months, I paid after 6 months. So because of delay I paid interest. Will I include the delay in interest? No. But however, you should write answer. Interest vanda AS10 says, go and ask AS16. AS16 did we learn anything like delay in payment will I capitalize? No. Only qualifying asset I will capitalize. This is my fault, delay in payment, so I will not capitalize. Following guys. That is the answer. Okay. This question is a very good question, a new question guys. Practical question number 4. I will not be able to do it now. We should do the whole standard. It's a very good question. Revaluation, depreciation, disposal loss. Again taken from CA final book. AS10 new question. Practical question 4. Okay. This one also. 5 also is a CA final question, but very similar to what we just now saw. Cost I will include, initial delivery, all of that. Initial loss I will not include. Dismantling I will include only the present value of 30. Consultant's fee I will include. Site preparation I will include. Interest charge I will not include. Then additional points. The company identified motors installed in plant as a separate component. This is the next new concept which is very, very important, which I will explain now. Okay, these two questions mark both as important. Coming to the same standard, I am going to the depreciation part of this standard. Now depreciation, there are 3 ways to charge depreciation, which is straight line method or units of production method. Let's take a scenario where questions have come like this. Let's say I have case output in case 1, output in case 2, output in case 3. In this, my output is year 1, year 2, year 3, year 4, year 5. First year output is 5,000, 5,000, 4,900, 5,100. Here let me put 5,200, 4,800 in case 1. Second case, the output is 5,000, 4,900, 4,600, 3,500, 2,200. Last case the output is 5,000, 7,000, 4,600, 9,200, 4,100, or let's say 3,100. In which case I will use which method of depreciation? In case 1 what I will use? Okay. In case 2 WDV method, because they say for depreciation use the method which reflects the pattern of benefits. Here the pattern of benefits in case 2 is a diminishing pattern, so I will use WDV method. Case 3, it is going up, coming down, going up, coming down. What to do? Units of based on that. What about case 1? It is going up and coming down, but almost like a straight line, so I will use straight line method. Straight line method, no, don't think it should always be 5,000 every year. All years. Straight line method means when it's consistent every year. Now my question is, let's say I have plant and machinery, land and building, let's say furniture and fittings, vehicles. Can I use different method for each of this? Can I use different method for each of this? Yes. In this we have 2 ways to value inventory, so value asset. So can I use different method for each class of asset? Yes. In this accounting policy you have something called revaluation model and cost model. I am discussing everything related guys. So valuing each of this can be revaluation or cost model. What is cost model? The asset will remain at cost price. Revaluation model, I will frequently do the revaluation. The accounting policy in AS10 is to pick cost or revaluation model. The depreciation method of SLM, WDV and units of production method is not an accounting policy, it's an accounting estimate. Changing from SLM to WDV is a change in accounting estimate and not a change in accounting policy. Are you guys following? Now my question is, estimate nala you are okay to use multiple estimates. Plant and machinery SLM, land and building WDV. This I can change. Now my question is, for each class can I use one cost model, one revaluation model? No. Yes, I can use it. I can use for plant and machinery revaluation, land and building cost model. Are you following? Now are you getting it, guys? Now let's take a question over here. Question number illustration 15, guys. Okay, important question. Before 15, let me do, just for your satisfaction, okay, let's do question number 15 first. 15. Entity B manufactures industrial chemicals and uses blending machines in the production process. The output of these blending machines is consistent from year to year and they can be used for different products. However, maintenance cost is going to increase from year to year, and new generation of machine with significant improvements over the existing will come available every 5 years. Suggest the method of depreciation. SLM or WDV are units of production. SLM. Why SLM? Consistent from year to year, and every 5 years I have to get new machine. That means within 5 years I have to save, I have to replace. So 5 years the asset should become 0. SLM. Are you following, guys? This one question. Next. Go to illustration number 10. Illustration 10. Entity A is a large manufacturing group. It owns a number of industrial buildings such as factories, warehouse and office buildings in several capital cities. The industrial buildings are located in industrial zones, whereas the office buildings are in central business districts. So building A is classifying industrial and office building. Entity A's management wants to apply revaluation model to the subsequent measurement of office building, but cost model to industrial building. அவன் என்ன சொல்றான், buildingலயே is classifying into industrial building and office building. For industrial building he want to use revaluation model. For office building he wants to use cost model. That means, going back to this discussion, within a building category he wants to choose differently. Can I do that? Can I do that, guys? Answer is yes, we can do that. For all of this only we have a concept, guys. Follow. Everything is yes. Within different assets I can use different methods. Within the same land and building I can use different method. How, sir? Who classified as land and building is separate? See what they are saying, recognition, I'll come to that. Initial recognition and subsequent. First or asset vaangumbodhu you have to recognize only at cost. That is cost model. But after asset is purchased, you can use cost or revaluation model. Are you following, guys? Now ana solran, which I should use revaluation model? He is very specifically told that a class of PPE is grouping of similar nature, similar assets and similar use assets together. Like that only we classified plant and machinery, land, furniture fitting, office equipment. Here my classification of similar asset and similar use is office building is one category, industrial building is one category. Nobody is stopping me from doing that. Land and building or category or no. Within land and building I have two categories. So it is okay. What is it? They are saying the office building can be clearly distinguished from industrial building in terms of their function. Therefore permits assets to be revalued or valued on a class by class basis. According to you, class is land and building. No, that is because we use that. Within land and building different subclass. So it is allowed, I can use for office building revaluation and where is it? Different measurement, yeah, therefore apply those class of subsequent measurement. It is allowed, guys. Permits asset to be class by class. Therefore, we can go as per this. Industrial building, revaluation. Office building, cost. That's what is given.
Sir, office building evaluation.
Oh, we wrote it wrong here. Okay. So, here they are saying they want to apply office building, they want to apply what, guys? Revaluation. Industrial, they want to apply cost. This I wrote reverse, that's my bad. But yes, the core is, yes, we can split separately and do if they have a different class. Are you following, guys? So what we finish now here is basically I told you different types of depreciation method, SLM, WDV and units of production, which will be used based on the nature of asset and usage. Second, each asset account, this is depreciation is accounting estimate, but asset valuation is cost or revaluation. Cost is for initial recognition, subsequent we will use only revaluation model. Within the each asset, based on the class, I can use cost or revaluation. Again, for each asset for class, I can use different method of depreciation. Are you following? But within the same class, you can't change. Sir, in the office building, revaluation. On the office building, cost. No. In the office building, WDV. On the office building, SLM. No. Are you following, guys? Now I am bringing another concept which says, in a car, let's say car is worth 5 lakhs and life is 10 years. For the time being, assume scrap is 0. So I will depreciate 5 lakhs by 10 is how much, guys? 50k per year. But நான் என்ன சொல்றேன், இந்த 5 lakhs I am breaking. I am saying, in this car of 5 lakhs, 3 lakhs is engine, which has a life of 10 years. The other tires of the car and outer exterior part of the car, let's say is worth 1 lakh, where I am saying life is only 3. Internal spare parts here and there, other spares etc. This gearbox or whatever other spare parts is another 1 lakh. I am saying life is. So I am saying, what is the point of depreciation I told you earlier? Depreciation means for replacing asset. If you save like 5 lakhs by 10, you will save only 50k each year. But this way I am saying, I will depreciate 3 lakh by 10 years. How much? 30,000. 1 lakh by 3 years. 33,000 approximately. 1 lakh by 5. 20,000. So my total depreciation is how much? 80? So I am making an argument with you saying, no, depreciation is not 50. If I depreciate 50, it's for 10 years. I am saying each part of the asset, need asset edukku full up pandra. It's not 10 years for the whole asset. Each part of the asset has a different useful life. I will break it into different parts and each part will be depreciated for its own useful life. Can I do it like this?
Yes.
This is called component method of depreciation. So I can do it in a component method of depreciation. This is a new concept. In that only we have this question from, because we saw that question only, we shifted and went illustration number, practical question number. I told you practical question 4 is important. Practical question 5 deals about a separate component method of depreciation. Another very, very important new question added. Practical question 4 and 5 are new questions added from CA final book. Are you following, guys? Clear? This is that sum where you have to do the whole sum. It's again another beautiful sum, guys. Again detailed sum. In the sum podradhukku I will need 20 minutes. It will take 20 minutes for the whole sum. But I am just giving you a gist. Both this question, practical question 4 and practical question 5, you have to try it. Your end, mandatory for exam if they want to test. Sir, will all these difficult questions come in exam? Every standard is impairment, I was able to do one sum. These are the new questions. This will be spread out over the next 4 or 5 attempts. But which attempt which comes we don't know. Are you following? That's why I'm saying study mat mattum parcha podum guys for advanced accounts. So here the brief of this is component. Sum is actually easy. They will just capitalize everything and then they will take it forward. But what they will do is this asset is broken down into two components. One component with 10 years useful life, one component with 6 years. Tanitanya depreciate panni, you take it as two assets within the same asset and you do the sum. Are you following guys? Are you understanding? See, we may not have the time to do all the sums, but at least I am marking these sums. Is that fine?
Yes,
Or I can do it if we go till 8:30. Your choice. You will be able to do it guys. Okay. Fine. Or you try today. If you are not able to do it, tomorrow you let me know. At least before we finish marathon, I will do it. Yes. Within component, you cannot change method. It's the same asset. But within component, the useful life will change. Are you guys following? Very, very important sum. This came from our CA final. Copy okay. So now, let me just run through the notes and clear other points once quickly guys in super marathon speed. Definition of an asset. PPE is an asset which is used in production of goods, supply of goods or services. Asset used for production of goods is what? Plant and machinery. Supply of goods, lorries. Services, camera used in service. Projector, TV used in rendering of service. Rental to others, I bought a house, gave it for rent. Admin purpose, admin room assets, AC in admin room. Okay. Expected to be used for more than one period. This chair in this class is an PPE. Somebody saying, sir, I sat here for 1 week. Can I buy this chair? No. No intention to sell. If you want to buy a chair is Nilkamal, you go and buy it there. Not held for sale in ordinary course of it. That means there is no intention to sell it. Are you following guys? Clear? This asset does not include two things. Wasteful asset like iron ore. Why we don't include? Because their value keeps dropping the more you extract. So we have a separate standard for natural assets for that, and biological assets is not included. What is biological asset? Sir, take a cow. Cow is an asset for Avena, which generates milk. So can I put cow in my balance sheet and depreciate? So it's not covered in AS 10, but for that, biological assets has an exclusion. Bearer plants. Mark it as important. What are bearer plants? Very simplest example. I don't want to go detail. Mango trees, coconut trees. All these are bearer plants. What is it? Used in production or supply of agriculture produce. Coconuts are agriculture produce. Let's say mangoes are agriculture produce, but the tree is used in this produce. Expected to bear produce for more than. The coconut tree will have a life more than 12 months and has a remote likelihood of being sold for agricultural produce except as incidental scrap sale. Coconuts will be sold, but the tree after life is over, only scrap sale. Are you following guys? Mostly all the fruits and vegetables trees which have more than 1 year life is called bearer. See, coconut and mangoes is inventory. What about the tree which is an asset for me? Are you following guys? Okay. So this is bearer plants. First page of our notes we are done. Second page, if you see, I am done with recognition of an item, cost and revaluation. Quickly I will just give you answer for each of these points. This we saw. If there is payment deferred beyond normal credit period, excess interest will be considered? No, subject to AS 16. Then PP purchase for a consolidated price or composite consideration. Income tax less slum sale rika. If you buy asset on slum, income tax talks about taxation. I bought assets on slum sale. How do I recognize in my books? Amalgamation. You account using fair value. So they are saying the consideration should be allocated among the individual assets in the ratio of fair value. These sums we are anyway doing in AS 14. Okay. Next, for government grant and lease we have the standards. Leave this. It's AS, not Ind AS. And then lastly, cost of self-constructed assets. Tata is constructing a new factory. For them, steel, cement is used internally. Avangale katranga. So, what is the price I will capitalize? Let's say Tata is buying from Tata Steel. Tata Motors is buying from Tata Steel and constructing, self-constructed. Will I take market price or cost? You should take cost. Because if you take market price, you are capitalizing profit, which was never your cost. You can do for AS17 segment transfer நீ profit போட்டுக்கலாம். But later you do stock reserve to eliminate guys. Consolidation will eliminate that profit. So I will capitalize only at cost. Are you following guys? Clear? Exchange is fairly simple. Fair value of incoming and outgoing asset. That is pretty simple. I am not getting over that. I am going to the next area. Revaluation, important. Now if you choose revaluation model, how frequently should I revalue for the purpose of MCQ? If it's an asset where the value is very volatile, I will revalue every year. Not volatile sir, once in 3 to 5 years. Following accounting treatment for revaluation, we saw in impairment. Upward revaluation it goes to, I'll give a simple example. If you're able to answer, it's correct. 100 became 150. 50 goes to P&L balance sheet. Balance sheet revaluation reserve. 50 again becomes 130. Revaluation reduced by 20. 130 becomes 90. Up to 30 loss. Debit revaluation 10 loss. P&L. But this example is without depreciation, assuming everything is same year. Depreciation vanda correspondingly that reserve will be transferred to P&L. We saw that sum in impairment. That sum covered for that. Are you following guys? That only I gave it as notes over here. Then this part we finished. When can revaluation reserve be transferred to revenue reserve? When the asset is sold or incremental depreciation. That case depreciation 10 if depreciation is 15 plus 5. Are you following? So during the life fund when incremental depreciation ratio, otherwise an asset is sold. Are you following guys? Clear? Retirement of an asset. We have an old cycle in the house. I am not using it, but it's retired. Retired from active use. How will I still provide depreciation? Asset use பண்ணல. பழைய phone வீட்ல இருக்கு sir. நான் யூஸே பண்ணல. Will I provide depreciation? No. Now I will carry that at carrying amount or NRV, whichever is lower. I will stop providing depreciation. Are you following guys? This is called retirement of an asset. Derecognition when the asset is sold, whatever profit loss comes, you will account in P&L or revaluation reserve. Are you following guys? This we finished component method, new addition in AS10. I explained that. Methods of depreciation, SLM, diminishing balance, units of production. This is change in, if you change it, it's called change in accounting policy and it has to be applied consistently. Are you guys following? Okay, these are the sums we did in AS10. The two sums which I want you guys, I have finished all the core concepts guys. See, we are doing a 40-minute revision for AS10 core concepts. The two sums which I want you guys to try for sure is question number 5 and 4 in practical questions, which is important. Are you guys following? Yes, understanding? Got a good bird's eye view of AS10 guys? Yes, clear? The study mat question number 2, if you are confident, it is enough. That's it. Thank you guys. Yeah, see you in the next session.